Hello.
Hello. How we doing, guys?
What's happening?
Here we are.
The ABL team are actually taking over the fivers now, right? Yep. We've decided enough's enough. Enough of all these other guys. ABL, we're going to take control of this thing, and we're going to bring you guys the best of the best. So those of you who are with us on the ABL just half an hour ago, welcome back to episode 2 of Thursday's ABL marathon. How is everybody doing? We got Anita, Matthew, Kelly, Alu, Forex, Osgur, Shamshar, Nora, Ahmed, and John, and I can't see who else. Loads of others in with us already. Great to see all of you guys on what is probably going to be the busiest of the news days this week. I think it's fair to say. LJ, there we go. Let's get some disco going. Hang on, should I do my can I do that?
We need to pump up the jam. Do we still have that track in here? I don't know if we do.
No.
Video. We don't, do we? Damn.
No.
Pump up the jam.
How's that? There we go. I can't really see mine.
I see in the corner. Solid. There we go.
Literally just. Hang on.
It's been hidden by the fan. There you go.
Yeah. I'm gonna get hit by a lamp now. With my microphone arm getting in the way. Hang on a second. I'll do that.
We're just joining Nora in Ibiza. You know.
Yeah, exactly. We're taking inspiration from Nora.
Yeah, there you go.
So we're just waiting for Nora's Spotify to use that as a soundtrack for the YouTube, and then we're good. Then we're golden. Right,
I'll start to get some of mine up and about as well. See what we have.
Let's see. So yeah, how's everybody doing? How's everybody well? Everybody already in something? Who's been catching some trades? LG and I have been already in the market today. I was in gold sell. Closed it far too early, but I only needed $25 and I took 50. So I'm kind of like, I'm torn as to whether I did the right thing or not. I mean, I'm well past the profit target, and I was thinking to myself, if I let it run, I've just given myself an even bigger buffer. But after today, I just need one profitable day. So I'm kind of like,
that's fair. That's fair. Yeah.
Just leave it. So what do I do? Do I just sit on my hands and not trade and leave MT5 closed?
You can paper trade some stuff on a.
Yeah, I know. It's just, there's not the same, is it? Right. It's just not the same. So
it's not the same, is it?
It's not the same. It's not the same. But hey ho. So yeah. But let's go have a look at what's happening in the charts. This gold.
We have had some moves past 20 minutes or so.
This half an hour. Yeah. This past half an hour has just been. Look at that half-hour candle on gold. That was quite something, wasn't it? And look at the 4-hour now on gold. That 4-hour is tapped into this. Can you see that there? It's just tapped into that wick there on the 4-hour. And what it's leaving behind is, it's not on the daily, is it? What was it on? It was on one of these random time frames. Was it the 10-hour maybe? No. 14-hour, 12, 18. 18, there it is. Wickless candle on the 18 hour.
Nice.
Look how close it came to it. It came that close to it and then decided, no, we're going to leave that behind, because it did have a bunch of other stuff to take in the meantime. So it's looks like it may have done the big old move that it wanted to do today. It's still in this big structure here that we've got. This one here, right? And this one, until now, hasn't really been respected. It's been pushed off multiple times. So this could well be the sell opportunity that we're looking for. The daily yesterday left an inside bar as well. You can see there the daily was also a nice engulfing candle. So we've come up to a relatively decent place in terms of those fib levels that we were talking about yesterday as well on gold. So part of me does feel as though, if we look at that weekly wick, where have we come to? Well, now we've tapped into that 50, right? And so that wick from last week, we've now tapped into it. So it feels as though we might be at a nice point where we're looking for sells on gold. Potentially, yeah. The one thing I don't like is how we just sold off without even batting an eyelid. That half an hour candle does not look particularly wonderful. So we've still got another half.
I would say we do come back up a bit more after with that kind of level of aggression.
Yeah.
So what was that? Basically, $23 an ounce, right? Which roughly translates to, if my math is correct, I don't know, we're up almost 1% at the set. So fair with that drive. We come off. I think we simultaneously hit the same points on the euro dollar, the pound dollar, the Aussie dollar, yen hit support, and we just seem to see a reversal all at once for the dollar component.
Exactly.
And with everything going on at once, everything further accelerated and it all built on each other. But yeah, I would definitely, I wouldn't continue shorting from here. I'd probably see a bit of a pullback up, say 33.90 at least, before considering anything. That's when I'm looking at, say, the 1 minute, 5 minute kind of time frame right now. I think if you get somewhere around there, on the larger time frames, form a bit of a wick and then possibly see further drawdown at that point.
Yeah. I've just marked out a fib on that 45-minute candle because that's now closed, and I do like this little pocket here in and around kind of 385, 383, somewhere around there as a potential area for maybe catching in a sell again. If we see here, it is actually an inside bar on the 5-minute, so it wouldn't be entirely surprising to see price come up to this level, leave it, and then sell off further. Otherwise, the higher it goes, the less strength we have in that move. And also over the next 20 minutes, if it's gonna pump hard in the next 20 minutes, that 1 hour candle all of a sudden becomes very, very bullish. So yeah. Jay is saying you're staying away or trading sterling today. GU feel like we may get a sell. The fact for sterling after 5 days of buys. Feel like we may get a sell. Yeah. Okay, Jay, just tell us once. We don't need twice. What do you reckon, LJ?
Definitely will have opportunities on the pound. Obviously, the Bank of England announcement coming out today as well. So if we go out to slightly higher time frame, this is the 15-minute. We go out to the 1 hour. We have come up to this these heads up here after the big drop there. We slap this bad boy up here. We've come right into basically the bodies of that full collapse, right? So this is definitely the interim pause point. As you can see, we hit that on the pound. We hit a simultaneous level on the euro just by that 117. You've got these areas just below here, right? You can see the top of that wick and the recent wick just now. So obviously with today, as far as the pound, we do have the Bank of England announcement as well. So that will be the piece to watch. Obviously, we have had a massive run up after the revisions on the payroll back down here on last Friday. So, we've moved a fair distance since. It could be a bit of a, buy the rumor, sell the fact type situation. So we get a further pump through, depending what way they lean as far as the tariff situation, because that would be the main thing that we're looking for. That's been somewhat resolved since the prior meeting. Obviously, we've got now more direction on that. So they'll be able to give a bit more their update on where they're now seeing firmer ground. The trouble with the Bank of England, a little bit different to other central banks. They often tend to be a bit all over the place. They don't often have a consistent narrative. They flip-flop all the time. A bunch of the members over here, someone else is over here, and it's a very mixed bag. So it's definitely one of the central bank announcements that you sort of have to more watch in real time, because often as well the prior expectations will just change once you actually come to the meeting. But yeah, given where we are, we've got some clear points to lean on, obviously, and then we could either see a sell and a bit of a retracement, or a further pop through this top side here, and you've got a clear run. Next point of call would be that 134.40 area up here. So
yep.
Pound's definitely a good one to look for. Probably just wait for the price action to confirm the trade rather than trying to front run it and then lean into that price action afterward.
Yeah. But just the other thing to add to that is you'll have the news for the pound. I think it's at 12 o'clock UK time, if I'm not mistaken, and then 1:30 UK time. You've then got the US jobless claims. So you haven't got a big window there. So what you might want to do is you might want to actually wait for both of them to come out and then trade the reaction to both, especially if you're going to be trading pound dollar, right? So you don't get caught offside.
We'll definitely get like a double bubble effect. Either that could compound on each other and further emphasize the original move, or it might negate the original move and we reverse, because these week-on-week unemployment claims are now going to be watched more and more heavily, seeing as we had the massive revisions last week with the non-farm payroll, and every subsequent non-farm payroll from now as well is very much going to be put into question. Everyone has known there is a bit of distortion in how they're calculating things for some time. At the end of last year, so beginning of this year in January, you always get the revisions of the prior year, and we found that they were reduced by 850k odd, which roughly translate to 70, 80k a month less in payroll numbers through the entire year of 2024. So obviously, if we were seeing those numbers firmly come in reality through that full year, we would have a very different picture. We're still seeing those distortions playing through the numbers. So for now, some of that more high velocity data, like the week-on-week unemployment claims, will be watched more heavily. They're a bit more accurate, and that will very much become a larger weighting in the overall employment picture that we're seeing.
Yeah, exactly. I'm just having a look to see on gold, because I see that Ahmed's asking what my level was for gold sells. So just give me a second, Ahmed, because I'm just having a look to see what we've got happening at the bottom of the move. And actually, there isn't actually much to look for in terms of liquidity levels really down at the bottom of the start of the move from 372. It started off pretty cleanly and didn't leave much of a kind of anything really to be targeting. It's only when you get
further your chart.
There we go. So we're over here at the moment. We haven't really got anything in this pocket here. This is what we bounced off earlier. The only levels we've got are further down here. Now, as I say, the key thing is going to be, how does this current 1 hour close? Because this is a nice little pocket here. You can see how it's reacted. We haven't come as far as that. We've taken a low here and we've bounced. This is that 5-minute inside bar wick, which itself is major liquidity at the top, but where it's sitting in that area looks quite nice for potentially selling, because if you can see here, it's got this little kick up before it's sold off. So it doesn't look bad for sells, but it really depends how it's going to get there. If it's going to get there slowly over the course of the next 10 minutes, then I'd be more comfortable going for it. If it smashes into it right now, it's a little too soon for me. I'd actually rather see a bit of a pullback now and then let it see then a pull up into the next 1 hour candle. Because otherwise, the reason I'm saying that is if just get rid of all of that. If you imagine this 1 hour candle reacting off this wick rejection here, the higher it goes up in the next 8 minutes, the bigger that is of a rejection of price down at this level on the 1 hour time frame. So I actually want the 1 hour to close further down in this area to suggest a stronger bearish close, and therefore a more likely scenario of sell opportunity. If we look on the 3 hour, for example, it's a similar sort of thing, although we've still got over an hour left on that one. The same on the 4 hour. Again, you want to see more of this being rejected than it being pushed up. Otherwise, you're not getting the the kind of structure that you'd want to see. But looking at these, the moment, there's not a huge amount of liquidity down here. It has taken a fair amount, and we do have that, what was it, the 18-hour inside wickless candle here. Everything else, it's bounced off these little pockets, and look, we've got 1, 2 levels here, which are major liquidity. So this one here as well is hidden in there. That's another higher time frame 14-hour inside bar. So plenty on the downside to come and try and take. So that's what I'm seeing at the moment. And I think we've even got something here as well. We've got a couple more here. Yeah, that one there is also a 12-hour. So plenty of liquidity on this downside. And let's not forget that NFP jump that we had. So I think there's still a correction due from that. Jay says, I wanted to put in a sell stop, but with 2 data points, pound and dollar, I might just play safe and wait for the aftermath. That would be the wiser choice. That would be the much wiser choice. So yeah. Stephen, good morning to you, sir. Hope you are well. Stephen's turned into quite the regular viewer. It's always good to see you, mate. Hope you are good. And Ahmed, you are most welcome. Remember, this is not financial advice. You should be making your own trade decisions and your own trade choices. But right now, gold is, with 5 minutes left to go, is doing as I would want it to have done, which is leaving some liquidity down here for us to come and take. In fact, no equal highs. Pushing down. I'd like to see it come down just a bit further, and then that one's there, nice as well area. It might be a nice area to sit, buy up from here, and then as I say, maybe sell from this area, leaving that 5 minute inside bar for later on. Ahmed, you are indeed a regular viewer. My apologies. Didn't mean to suggest that you weren't. Dinesh, good to see you, my friend. Hope you are well. Nev says gold has taken names today. Yeah, well, some of us have taken some. Some of us have taken some gold wins. So yeah,
scalps for sure.
Exactly. But yeah, actually, right. It sounds counterintuitive, right? But I actually want it to sell right now, so that I can catch a sell here. Do you know what I mean? It sounds counterintuitive to say
come up and then come up.
Exactly.
And then you catch it, and then yeah.
Exactly. Yeah. You know, and that's sometimes the harder part of the psychology, is to think, oh my God, FOMO. But when you start to really understand and backtest and really get your head around the price action, it's a lot easier to not predict, but anticipate what price may do depending on those different time frames. You know,
yeah, I've got 86.1 and basically right on 88 as the sort of window. So it's exactly the same as where you're looking at.
Yeah. So we'll see. You know, if you look at where it is, it was previously just above this turning point here. You know, you've also got this point here as well. So it has been an area of interest for price previously, right? If we go back, you can see it there again as well. So it is an area of interest that you would anticipate that price might want to come and you know, have a look at. A lot of people would look at this 15-minute candle right now and think, well, hang on a second, it's going without us. Not necessarily. Look at the 11-minute. The 11-minute doesn't necessarily suggest that. Neither does the 10-minute. So that's why I know everyone thinks I'm mad with these time frames, but you know, they show you things that you don't see on the other time frames. So all good, Ahmed. All good. No worries at all, my friend. No worries at all. And I'm glad you think so, Ahmed. I'm glad you think so. Daniel, good to see you, Daniel. Hope you're well, mate. Good morning to you, sir. How are things with you? Hope you're well. In the 5 minutes, rejecting from could be a retracement. Yeah, I mean, if you look at the 5 minute, it's created an inside bar there as well, right? It's not really left anything down here for it to come and take, but it's got 1, 2, a few in this area. The 11-minute is still sitting there. It's still got a couple of minutes left. At the moment, the 11-minute is leaving levels either side of it, up here as well. So that one might not hold. It might move down further, but it's still an inside bar. So again, it's still creating imbalance, right? So we'll just bring that one down and we'll see how it wants to play out. But yeah, that's how I'm viewing things at the moment, is that we're closer and closer to the close of that 1 hour candle. Think about it this way. when you see the price just fall straight through and there's no pullback, what does almost everyone expect to happen? Expect it to be a pullback. So if you see that happen on any time frame, drill down into the lower time frames and look for those pullback setups. Because on a 1 hour, oh my god, it just fell like a stone. But then you drill down into the 5 minute, the 1 minute, the 2 minute, all those, and then all of a sudden you see the patterns, you see the levels, you see the structure, and it's easier to catch. Osgore, first time for everything, mate. First time for everything, you know. So yeah. Nice buy on gold this morning. So done chilling with you guys. Nicely done. Nicely done. And Smart Planet Tech says there is a huge wick rejection on the 4 hour. That there is. However,
for now, yeah.
For now, right? It's a rejection there right now. But just as we close that 1 hour candle, that gives me confidence that it will sustain. But again, we now want to see it pull back up again and then sell off. All right, that's what we want to kind of get a look for, right? So 15-minute rejected quite nicely. Still got sellers trying to get in, but we ideally want to see it come that little bit higher, just a bit more. You can see there on the 50-minute, we've currently created an inside bar. The 90-minute looks nice and strong for sells. That 1 hour closed not as low as I probably would have liked it to have done, but low enough to give some confidence. This next 1 hour now is going to be really interesting to see how it plays out. You've got the 3 hour pushing down, so that 3 hour, it can close in any which form. That's why this window between 11 and 12 is always a really good indicator as to what is going to happen for New York. This little kind of 1 hour window, because the 4 hour closes, the 3 hour closes, the 2 hour closes, the 1 hour closes. So yeah. Moto NR has just passed phase 1 of Hive Stakes 5K. Excellent news, Moto. Nicely done. Hang on a second. Let's see if we can.
Congrats, mate. Congrats. We need the stroke.
There we go. Hang on. Let's see what we can get.
Well done, Chief. Well done.
We can. There we go. Nicely done. There you go. Congratulations, Moto. We're going all out with the graphics today. We're going to have some fireworks to celebrate for you as well, my friend. Very nicely done. Very nicely done. Glad to hear it. Take some time. Make sure you don't blow phase 2, which is what I have done many a time. Ahmed says, I've got a question. I mean, if our level of selling is on top, example 84, why we are not buying till that level? Trying to understand. Yeah, that's a
definitely can. You definitely can.
Question. It's a fair question. The thing is, though, is that right now I'm not really seeing a structure where I would buy from. I mean, let me undo all of this. So there's a level here. So you could argue that we've got a level down here, but the problem is that this is a perfect equal low. So yes, you might look for a buy. It's a bit risky, but you might look for a buy coming down to retest this wick, and then you're assuming that it's going to leave this perfect equal low for later, and then you're buying up to that area. It's a possibility, but it's high risk. It's really high risk. Look what it's doing. It's creating inside bars. If I move all of this, hide that and hide that. Look how it's doing it. It's creating inside bars on either side. So it's creating liquidity to be taken on either side of it. All right. So it's too risky, right? Because at the moment, I don't see where that buy would come in, right? Especially for my kind of trades. So
yeah. Generally, what you get when you have that big pullback, right? You can see that there's a certain point that you should. So you have the retracement, there's a certain point you should arguably pull back to, right? And then that's our ideal selling area. The trouble, you can then play the interim, so play the back and forth, the shorts and sells at the same time, running back up to that point. The trouble is getting back up to that point, it's always a lot more choppy. So there's a bunch of wash all in between. So the thing with that is always that you've got the higher risk of getting stopped out just per that chop, that back and forth, the kind of mess where everyone's trying to figure out. Because a lot of people now go, okay, we've seen that massive drop, I want to keep selling. Other people are like, you know, that's pushed a bit too far, I'm going to go long. And you get this, you know, back and forth, tug of war, chop through there, and then eventually eke up to there, and then the larger players all come in. So you can definitely still do that. You just got to position and like size it correctly, have wide enough stops, and just take that as like a small nip out of the market, more like, you know, a scalp, just taking a little bit of, you know, little bites, little chunks, and then take the heavier position at the firm level that you've now identified to sell from, etc. So you can definitely go back and forth, but just when you're doing the back and forth portion, just realize that there's massively higher risk of getting wicked out. You look as though you're almost going to continue the run right up to there, fakes out, pulls right back. You get a new slightly lower low, all for it just to turn around and then go up to that top stand point.
See now, look at that position now. See now, if you'd put 0.1% risk on that, it actually looks semi-decent now for buys, right, to take us up there. It's rejected from that perfect equal low. It's rejected from this inside bar, and theoretically, you may now have a buy opportunity. But look how it got tapped in, right? Now the problem is with that is that I found out to my detriment yesterday, you need seriously ridiculously tight spreads to be able to get caught on these, right? It's just the way it goes, you know. And
the trouble is, you'll see that across there's always a trade to be had in every single market at every minute, every 15, 30, 1 hour interval. There's always something to be had. Question is, you know, you're not going to, just even you doing your regular trading, it's not going to have 100% strike rate, right? Just because you can see the trade, it won't always play through. So the question is always, do you just take the top tier? And if you just do that, take the, you know, at least B plus, A minus, A plus trades, you'll have a much better time, way less stressful. You're just getting the wins. Let it compound rather than taking a portion of them and then taking some of the lesser trades, which the lesser trades more often than not, that's why they're a lower grade. You're going to get stopped out. Ultimately, all that does is, you know, take portion of the high level trades, your total profit out of that. So you just it's kind of self-defeating. You're taking lesser stuff out of your top tier trades, and then you end up slightly less where you could have just left the poorer, a bit more questionable trades out and just take the top tier and you'd be doing better, you know. So that's why, because you can look at markets and there's always something to be done, right? You can get to like ADD into it. Wow, something's going on all the time. If you tear that top tier band, you'll have a better time emotionally, be better for your P&L. You won't be trying to chase the loss that you just took on the lesser quality trade, which makes you prone to more, you know, mistakes or over leveraging or over positioning something. It's that kind of thing, right?
I do just want to say though, just look at this gold trade.
Yes, that has gone very nicely. Very nicely.
Just look at that. Just, there's something about this music, I'm telling you. This is the tune I had playing yesterday. There is something about it. I've got the market rhythm when I'm listening to this tune.
In the zone. In the zone, brother.
Exactly. A Theo live stream says previous day New York AM session and today's session creates relatively equal lows, and I think the price will target them 33.65 is the key to be taken out, and we'll have one more bullish up to 34.12. Quite possibly. we've been saying all week, in fact, that it feels as though that gold was possibly entering a bit of a period of range because the fundamentals aren't really clear as to what it wants to do. Obviously, there is the potential deadline tomorrow for a ceasefire between Russia and Ukraine. Otherwise, you've got secondary tariffs coming in. He's already announced secondary tariffs on India, taking them up to 50% already now. So they're not due to take effect for another 28 days. So we'll see. But there's certainly some stuff that can obviously come in and be announced, and we know that he can wake up and decide that he's going to cause havoc to the market. So
it's that in the rates picture as well, right? Which we touched on ABL. Obviously, gold being a zero yielding asset, rates do also very much affect that, because if the trajectory for rates coming down sooner rather than later increases, then therefore gold should theoretically be worth more, because you're having to, rates will come down, so relative return for, say, your standard 10-year and your base rate of return for any asset comes lower, means that gold should be then worth more. Rather than if it was later, you'd be holding it for longer, which means you're losing a bit more, and that percentage differential basically therefore gets added to gold. So we've seen the probability of a rate cut basically go back and forth since Monday, and now we're back up again. Hence, we're seeing the weakness in the dollar right now. If you look at the 25 delta risk reversals as far as options for the euro, going 6 months to a year out, basically this is just people pricing in adverse risks to the upside or downside. Right now is very much pricing to the upside. On Friday, it was 0.45. By Wednesday, yesterday, it's moved to 0.85. Right, so it's basically doubled. So basically, people are pricing for much higher euro 6 months to a year from now than they were on Friday prior to the payroll. So we've seen that across the board. That's also meant that the euro dollar's moved up, the pound dollar's moved up, Aussie dollar's moved up, dollar yen has come down. And then you get that flow-on effect to gold as well. We've had less of the interplay of the actual US dollar component, but that is somewhat coming back, and the rates point now, seeing as a lot of the raw chaos and the cataclysm as far as tariffs going ballistic and the geopolitics have somewhat settled. So now we're just trying to find the new natural kind of area for gold, and we've been in this bit of a channel. We came right to the top of the channel. We've pulled back off, we've come back into the middle point, and just like you were saying, I can see us though reloading from here. We probably maybe another bounce, another dip, and then run for 3,400 and a break of 3,400 and come into a new stage up there.
Yeah, I mean the key area for me is, if we look at the higher time frame, right, and we can see that we've had multiple rejections up in this area here, up in the kind of the 343 area, something like that. And it's wicked off here. So as long as we don't break this wick, for me, we're still in sells. If we manage to break this wick and then subsequently this one, then all-time highs are very much on their way, and they'll probably happen pretty quickly. So yeah. Replay, apologies. We can bring something a little bit more lo-fi. There we go. Is that a bit better? This might ruin my flow with good trade ideas, but if this helps, then there you go. Yeah, that gold trade looks like it was potentially a good one. Hope nobody took it, because this isn't financial advice, and this isn't a signal service. But yeah, we haven't looked at EUR/USD yet because we're all degenerates and we're all looking at gold right now, Fabian. But we can certainly have a look at EUR/USD for sure, mate. I can't say it looks particularly nice. that doesn't look particularly nice at all, if I'm honest.
Yeah, on the 1 minute though.
Yeah, I know. But that's where I live. That's where I live.
The 60-second chart.
That's where I glean the markets. I mean, if you look at it, it's slowly kind of ebbing upwards. But it keeps hitting these pockets of resistance, and it's basically reached this point here. If you see here, we
highlighted that 117 round number, right? Just at the end of ABL, I was saying that'll be the point to watch, and we potentially get a touch of that and then pull back off, and we did. And that was what happened simultaneously across the pound, dollar, yen, everything. For now, it's very much the pound influence that is going to come through later on with the announcement. That's going to be the ultimate director right now. So we've had the momentum push higher, now pulled back relatively heavily, 20 odd pips. So I would say we'll probably bang around in here now until that pound risk is off the board, because whatever happens with the BOE announcement will still correlate over and affect euro dollar and the greater dollar complex. So yeah, that's what we're waiting for. We've definitely got the points to lean on at that 117 still, as far as like shorts. From there we might get a bit of a deeper retracement back into the 116s, possibly towards Asia low, which is at 116.50. Like I was saying, everyone's after last week flipping back to shorts and going long the dollar, everyone's now flipped the script again, and we've gone back to shorting the dollar and seeing rate cuts coming in sooner rather than later. So at the moment, any dips that are to be had are probably going to be bought into somewhat, and we'll see us naturally come back to that 117 area and continue playing in this higher range for the euro. I think a week and a half back, I was highlighting the very common 350 point ranges on euro dollar, where we have that 110.50 to 114, 114 to 117.50, and you see right at last week on just prior to the payroll, we hit 113.96, just tipped through that 114, and then we've ran right on. So that's kind of how you want to look at the euro dollar. What 350 point range are we in? So we held that 114 zone, and now we're pushing back up into the middle of the range. We've had a very consistent run up to 117, take a touch off, and then eventually ultimately up to that 117.50 area once again.
A few of you asking for gold. Gold at the moment is still creating liquidity on the higher side as well as on the lower side. It's come down, taken that inside bar on the 2 minute. 3 minute is pulling down. So I hope anyone that did get in on this trade is already at break even. But not entirely convinced that the move is finished. We've still got enough time on these candles to see us head on higher again. Certainly seems like a reasonable expectation. You can see here on the 15 minute that wick didn't hold. We're now retesting that previous 15 minute, so I think it's reasonable for us to still have a bit of a push higher. I think it's still a reasonable one, but yeah, I would probably be putting that trade at break even if I was in it. Obviously I didn't take it because I've done my trades for the day. But yeah, let's see. It's ideally you want to see a reaction. I mean, it could be a nice opportunity for a re-entry actually, getting in that little pocket there. That could be a nice little re-entry point if it taps in there and wicks away. That might be a nice one. Forgive me a second. I'm going to switch to your screen because I desperately need to blow my nose.
That's right. I was just going to give you guys a little preview of the BOE meeting. So this is from Reuters for an example. So kind of like what I was talking about before. So we've already got 93%, if you guys can see here, priced in for the the outcome of the meeting for the rate cut. If you guys read through here, take a minute. Some of you will read faster or not, or I can read it out. Basically, the summary of it is, though, that we've got 93% for a rate cut, but it'll be the tangentials that you got to watch. So the other comments from the BOE members around what's going on, the rate cut is basically effectively priced in, right? So the market reaction, though, you would say that would be pound negative, but it'll be the tangential comments around that where we could actually see a pump up higher first and then come down. Part of that comes in with the inflation rate being at 3.6%, which is still overshooting their preferred inflation targets. Despite that, they've had problems with growth, which is why they're going to cut rates. So it'll be those tangential comments around there and stuff around highlighting the stagflation risks that the UK faces currently. So that's sort of what we're looking at. So I would expect a bit of chop back and forth with the pound after the announcement, and then correspondingly you get the euro doing the same. Then say 15 minutes to half an hour after that, it'll sort of level out. We'll then roll into the week-on-week unemployment claims for the US, and then that'll be the final driver for where we go for today. So that's kind of what we're looking at just now. I would also say, if you were looking to take something prior, if you want to be very bold, I guess. Obviously we do have the top that we just made before, 133.80. If we get another, leg towards there again, you might consider shorts there with a tight stop. Therefore, even if you get blown out with slippage, you shouldn't lose too much, as long as you don't position, with massive leverage or something. But in the event that we do just straight it down with negative comments on the trajectory for inflation, growth, employment, that kind of stuff, we might be able to clean up. So that's sort of the general look there.
Yep.
I think Chris, whoops.
So I was just going to say.
Yeah, no, it's all right.
Nice little bounce. Saint Doobie saying, I need my music back. You're not wrong, Saint Doobie. I do probably need my music back.
I think we need the music.
So yeah, Digital Factory is quite right. Don't forget to like the stream, guys. Like, subscribe, do all those lovely, wonderful things. If you want to see more of all of us on Fridays and longer streams, all that stuff, you got to show the guys upstairs that you want it. And
indeed, punch that like, guys. Punch that like.
When they see
and then we get closer to more giveaways and stuff as well. So it's all the benefit for you guys.
Yeah. Exactly. All right, there we go. We've got the music back. What I'll do is I'll turn it down a little bit. Okay, let's make it. There we go. So it's not too loud. So hopefully it's a little bit better for whoever it was that was saying they didn't like the music. But yeah. Chris is saying, what are your thoughts on the projected 122 on euro? I'm guessing that's what you're about to pull up.
Yeah, that's what I was going to talk about. So we've basically flip-flopped back and forth with that kind of idea. And obviously we had, so from last week, that idea was completely, I would clean up this chart at some point. This is the daily on the euro. But we can see what we need at the minute. So obviously last week we had that massive downdraft. We had the same deal on the pound. I think from the tops on the pound, we were down like 650 pips total. So that's where it's basically going to be a question of how soon or how late the Fed does actually get into the next portion of the rate reduction cycle. And then obviously leading that into when Jerome Powell finishes his tenure and whoever Trump appoints following that. So basically last week we were seeing that would be later right, per the Fed comments after the Fed meeting, and where Jerome Powell was highlighting everything, saying like they still don't have quite enough data. We're getting back and forth where employment was sort of coming off, but then we saw continuing unemployment claims, come back in level, and we've got a very bit of a mixed picture. We haven't fully seen the tariffs flow through into the actual inflation effect or prices paid. We did, however, have the ISM this week, which did show a continuing increase in prices paid. The unemployment index portion of that also came lower, so we're further in contraction. And then, of course, on Friday, we had the payroll number with the past 2 months heavily revised, totaling about 250K between the prior 2 months. So that's fully flipped everything back to potentially going to the 120s. Because with that, we're now looking to crack that 114 odd area and go back to the 111, 110.50 to 114 kind of zone and bang around in there. Since we've flipped around, the next point of call is going to be these high 118s to run through, and then we'll run towards 120. I would not say 122. I think that's a slight overshoot. Historically, we've had about 120.50 and an extension of about 121 that we sort of seem to cap out at. But we are still roughly in that trajectory now, given this week's new direction for the Fed, employment, and the inflation stuff coming through. So the preferred measure right now to express a short dollar position is still the euro. There's obviously dollar yen, which naturally should be a decent idea. However, the trouble is the mix up with the carry trade in there, which is distorting that flow. Outside of that, you have the dollar franc. The franc is already appreciated massively over the past couple of years and has continued to. So the only clean piece in the basket as far as expressing a proper dollar short is the euro dollar. So very much, yes, we could see 120 coming into next year. Even probably by March or somewhere around there. I wouldn't be surprised at all. So
there you go. Surav, I'm originally from the UK, and LJ is from down under.
Down under, mate.
Where they
How
put
you doing?
shrimp,
G'day.
where they
G'day,
put
mate.
shrimps on the barbie.
Shrimp on the barbie. How the bloody hell are you?
Is that actually a thing? Do you guys actually do that? Or is that just some random stereotype?
Shrimp on the barbie thing or what?
Yeah.
Where that comes from, it's from an old ad from, I forget his name, because they've just done a new Australia ad with Bob Irwin.
Oh,
right?
Steve
Irwin's
Irwin's
son.
Yeah.
He's cool. I like him. Robert Irwin.
Yeah.
But the original Shrimp on the Barbie thing comes from one that they did years ago with Paul Hogan, and they said shrimp on the Barbie because they were trying to do it internationally, which obviously, like Americans and stuff, we call them prawns here, not shrimp, right? So they use shrimp on the Barbie in the ad because if you said prawns on the Barbie, everyone would be like,
well, it would make sense. It would make sense in the UK. It's just the Americans wouldn't get it.
Yeah. And so that's sort of where they were trying to appeal to, and then that's where the thing came from. That's where it started. And then later on, we had the thing with Lara Bingle with the "Where the bloody hell are you?" ad, and then they got banned everywhere. They got banned first in the UK from you guys because you guys were offended, apparently, right? And then they got banned globally. Where the bloody hell are you? Because it had bloody hell in it. That was the Apparently, you guys are a bit soft, So.
Oh dear. What can I say? Lee Uru, you got to hit the like button, you got to hit the subscribe button, and you got to get us more and more viewers, and then there will be more giveaways. That's how it works. So yeah, but come looking for the giveaway, but then stick around for the analysis. Stick around for the good vibes and the fun times. It's worth it. It's worth it. The more likes and everything that you guys punch will hit
every other milestone, and then each milestone there's a giveaway. So that's basically likes, subs, all that kind of stuff.
Exactly.
Punch that and you'll get more of it.
Exactly. That gold trade is still hanging on by the skin of its teeth. I mean, if you'd taken it up to there, right, it was still already what, an 8R trade. So in fairness, you know, asking it to go to almost 15R is probably a little bit greedy. But yeah, if you'd gone to break even, I would hope that the spreads haven't taken you out. So yeah. Ahmed's asking, are we only streaming on this channel or do we have our own channel? Ahmed, we do have our own channel, but we're going to be putting a pause on it for a while at the end of this month. It's the AlphaBeta Lab. So if you want to check it out, just Google you can go to the link on your screen, or you can just go to YouTube and search for the AlphaBeta Lab, and you'll find us. We do stream every day, just briefly for an hour each morning, and then at 8 a.m. UK time, and then 11 a.m. UK time on Fridays. So you can catch us there, but only till the end of this month, because then we're going to be taking a bit of a hiatus to go and cook. But you'll be able to find LJ on the Fivers live stream. No worries about that at all.
Time to cook.
Exactly.
Watch Breaking Bad, right? Surely. Good.
Gold, I think the sellers are in control, says Digital Factory. Don't be so sure.
Yeah, not just yet. Yeah.
You never know. I mean, we're being drawn down. I mean, if you went to break even, obviously you're out on that trade right now. But price is being drawn to these two levels here. So the next natural reaction point, if we do take these two, is actually to react from here. So just in there. So look for us to take 1, 2 those liquidity levels and then shoot off. But it's still rejecting and saying, do you know what, we're going to come for that later. So and that's why it was a high risk trade to go up. But I mean, you know, you would have caught what, 50 pips, something like that. It was about a 50 pip move.
Yeah. What do you call stuff on gold?
It's pips.
I mean, everyone calls it different with pips or with, you know, I always just frame it in dollars, because otherwise the pips are technically like, you know.
Well, for me, a pip is 10 pips is $1, I think, on gold, isn't it? That's my understanding of it.
It ends up being like 100. That's what I was saying. Like
100 is $10.
Yeah. Oh, yeah. But still, it's that's why. As far as the percentage difference, right? You say like 10 pips on euro dollar.
Yeah.
You know, it's 10x whatever it is on gold, right?
Yeah. I want to.
So I see it like, you know, someone's like, oh, I made, you know, 1,000 pips on something. It's like,
yeah.
On what? And they're like, oh, gold. I was like, oh, okay, well it's a bit different.
It's not really 1,000 pips, is it? Yeah.
Yeah, not quite the same.
Yeah, exactly. St. Doobie's just confirmed it. So
exactly. There's hence the difference between say like currency like euro dollar versus gold, because then the dollar differential is going to be very different. Talk about pips.
Fabian wants to know which city you're in, LJ, and which is the best city for a trader in Australia.
Well, for a trader, definitely not where I am. Definitely don't come to Brisbane. Brisbane's great. Brisbane's a beautiful city. Basically, we're pretty much taking all the best of Sydney, Melbourne, Adelaide, Perth, all that kind of stuff, and consolidating it now into Bris, right? So Brisbane's really great if you like a bit more warmer weather. You're only an hour away from all the beaches. You know, Gold Coast, I'm sure a lot of people know internationally. Arguably, Noosa is actually better. So Brisbane's here. Gold Coast is 1 hour south drive. And then Noosa is about an hour and a half north at the Sunshine Coast. right? So you got all the beaches, all the lovely stuff around you. As far as, you know, finance, trading, that kind of stuff, it's all in the major cities. So Sydney and Melbourne. You know, if you want to get a job with any of the major banks or trading firms or anything like that, that's where you need to go. It's very, very rare you get stuff popping up here. You know, and so when everyone hounds on it, right? But yeah, I would still definitely recommend Brisbane. Beautiful place, lovely, clean, nice people. Everyone's very chill, much more chill than Sydney and Melbourne. And so that I would still, if I had to pick somewhere, I would live in Brizzy, to be honest. Maybe Melbourne only because I do kind of have a slight preference for a little bit colder weather, personally. But yeah.
Good stuff. Guys, you've got the person that you've all been waiting for, waiting in the wings. She's going to be with us in a second. I'm going to be dipping off because I've got some meetings and stuff to attend to, but I'll be back in about an hour for the weekly ABL podcast segment. So I'll be back in a short while. But should we bring her to the stage? I don't know. I'm not sure if she kind of looks ready. She's muted though, so I don't know if we're going to hear her. She's gonna have to unmute herself, but there she is. Hang on, let's put her at the top of the tree where she belongs. There we go. There we go. Anastasiia, good morning to you. How are you?
How are we doing?
Good. Thanks, Mike, for being here today. How are you guys doing?
Yeah, we're good.
Going strong. Yeah.
I've been scalping some gold. So yeah, I'll leave it in your capable hands, and I'll catch you guys in a little while.
See you soon.
No worries. Thanks, Mike. Catch you later. How are we doing? Going well? Anastasiia, yeah?
Yeah, I'm okay. How are you?
I'm doing very well, thank you. We've had a bit of...
Scalping gold for a buy or for a sell?
That was Mike mainly on running gold. I think he's been a bit back and forth between buys and sells. Right now he's looking for a buy after this dip through here. So for a bit of a pullback up to, I think, 85 to 87 odd, I think he's looking at, just up here. So I think he was looking at something like this that he's in. He got in over here somewhere, I believe it was. Pretty tight stop, as we know Mike loves, and he's kind of looking for that. So I'm sure you've missed everything going on in the markets this past little drop and everything. We've seen some moves,
but I wouldn't take it anyway, so it's not.
Fair enough.
Anyway, so didn't really miss much. Although I actually did miss my short from that high on the 5-minute time frame. So I could take the short technically, and but I didn't.
On gold or on
gold? On gold.
On gold.
Mm-hmm.
Yeah.
It's
like up here.
High. Yeah, right here.
Midpoint through
here.
Yeah,
right here.
Yeah, fair. Yeah, we've got this kind of like channel that's formed, right? So we came roughly to the top and then just collapsed. We had euro dollar, pound dollar, dollar yen, Aussie dollar all come off at the same time. So a full rotational shift across the board with that one there. So, but yeah, how have you been? How are we going?
Yeah, I'm okay. Just
getting the training in for the marathon and everything. You ready? Actually, for it?
Not completely. I'll change of plans. So, but that's a different story.
No? Oh, damn.
Yeah. How are you?
Good. Going well. Been sorting out a bunch of stuff here. Going strong now. Got all set out. So it's good.
Nice.
Been a good week. Yeah.
Actually, I haven't personally traded this week much. Almost nothing.
Oh, really?
After the last week's NFP, not at all. Last week NFP was actually quite good. I only traded like 3 days a week last week, and this week I almost didn't trade anything. I took one trade so far.
Fair play. Out of it then. You're out of sync with everything. Have you had a chance at all today to look at stuff or no? Or you're gonna do the recap now? You're gonna get?
No, I did have a look at some things for sure. So I'm gonna open my other chart. 1 second.
Because a couple of the others in chat were talking about euro dollar, pound dollar, that kind of stuff as well, because we've come up to some interesting points now after that big spike on the payroll data, right, with the revisions. Came into Monday, consolidated that sort of price spike, and then we ran up Tuesday, Wednesday, and now we're coming up to that 117 round number and pulled back. So I'd be curious if you've got anything going on as far as your side of things as well.
Yeah, I'm gonna pull up my screen as well for sure. Why are we without music?
What's that?
Why are we without music?
Are we? Hang on.
Yep. Should we put
Let
some
me remove
stuff?
Mike from the screen there. Do we not have music? I thought we did. I thought Mike put on music before.
I just did.
Mine's always so quiet, so I can't hear it, right?
No, I just
Everyone,
did.
everyone else says like super loud, but mine seems to be quieter for whatever reason.
Okay, so actually I was looking for some buys on eurusd today. So what I'm looking at is that for me personally, if you look at the high time frame, but let me basically switch to the 6E futures, sort of the euro futures. So what we have here is that for me personally, the price did come to 17,335, which is the weekly point, developing point of control. And as we can see here, the price haven't really tested it yet. So we barely missed it, and we missed one of the biggest high volume nodes also for months of July. So if I'm gonna put on PVP, which is now, I usually turn it off to make sure that it's not overwhelming on my chart. But if I put on the volume profile over the period of the months, this is gonna be the biggest volume profile, the biggest high volume node everywhere, essentially, for the whole month, and the point of control as well. However, we did miss it. Usually the price comes and tests this kind of levels. I'm still expecting the price to go higher. So although it might look like on the 4-hour time frame, normally the price is creating this long week to the upside, I'm still waiting for the price to come back there again and test the same level. On my other futures platform that I usually trade on is, I can see that right here we had the very high volume node, a high volume cluster. So we had a high volume cluster here, which is at the level 16,935. So I'm expecting the price to test this level still and then continue higher. So I'm waiting for approximately 70 to 80 ticks move from 16,935 to 17,340 on euro. And the alternative for those who trade future forex, whenever I trade also on a Fiverr's account, is eurusd basically. So I'm expecting the same move. The other reason I'm still looking for buy is if you go to their pound at the same time. One moment, it's loading. If you go to pound, I'm also gonna open futures first and then forex. On the 30-minute time frame, we can see also that the price did break this high volume node right here. So placing the volume over this, that is wrong setting. That is so wrong right there. That's just much better. So we broke the high volume node and also the point of control on 33.59. We also had the high volume spike on 33.68. So the price technically did break it. I would look for buys, but I'm not really convinced. I don't like how pound looks. I think it can dip again and then go higher. Whereas for euro, I have a little bit more clarity, I would say. So for pound, I would be also looking for buys like this. And now I prefer euro still. However, if I'm going to be completely wrong and the price breaks the low and holds below 33.50, I'm going to look for sells. So I have the two scenarios for today where if I'm going to be completely wrong, I'm going to just take a short afterwards.
Yeah.
So my right now preference is euro for buys when we pull back, and for pound, essentially also buys, but little worse entry point. So I'm gonna be mostly sticking with euro for today. For now, at least.
No,
Let's
it's
see.
fair,
Maybe it's gonna change.
Yeah, I think I was seeing a similar deal as well. I think we got Mickey in the background, wanting to pop on possibly. I don't know if you can, if you're ready, if you can add yourself, or if you want us to do it. I think Jonatan might be figuring that out still. But we'll get Mickey in for a second. Trade the pool. All right. We got Jonatan. I don't know. I assume you can hear at all. No? Have you added the screen? You might still be doing it. All right, we'll get it set up in a second. All right, but yeah, no, definitely. So if I jump back over to mine over here, there we go. Yeah, so similar deal like what you were saying, Anastasiia. So as far as the Dixie, I can definitely see us running back down another 40, 50 points, which would come in line with the same thing you were saying with the euro, that higher level before shorting, right? And then you do also have those high levels on the pound as well. We're coming up to that resistance level, that high volume area. Obviously, we've got the Bank of England announcement coming out today as well. So we'll see how that turns out and exactly what way we get pulled. But aside from that, let me just... how we doing?
Here's the boss.
Hey, what's up?
How are you going,
everybody?
How are you going, Vicky? Doing well?
I'm all right. What's going on?
Good to hear.
Yeah.
We're just scoping over things, going through the morning. So, how you been?
I'm good. I'm looking at the NASDAQ like always, NASDAQ and S&P.
Yep.
And we also have some exciting news coming for Trade a Pool, because on day 18, we will launch a full stream, like 4 or 5 hours of streaming, talking about automation. And we're actually going to build in real time an algo, like a bot, fully automated, together. No code needed, so that's gonna be an exciting event, definitely.
Oh yeah, okay.
This sounds exciting.
Yeah, and this is the first time we actually on Trade a Pool gonna allow algo trading. So I know obviously in forex is super common with the EAs, so that will be the first time we open to everyone and really allowed to trade algo on Trade a Pool. This is actually the first time that I'm stating it. So, yeah.
Wow.
Let's see if I can flip this over. No, that's not working.
Do I need to share my screen again or something?
No. I'm just trying to swap them over.
I do.
So we can do that. I think Jonatan was setting one up in the background, but I can't seem to see it on here. So.
He's saying just ask them to change the scene.
I'm so bad in this technical thing.
It's a new platform.
Yeah, I think I'd have to.
You're still learning it.
Yeah, Jonatan. If you've got it there, can you swap over? Because it's not showing the current scenes for mine at all, for Mickey. So I'd probably have to refresh the page altogether. So you might have to do it.
Okay, nice.
There you go. There we go.
Alrighty, let's talk a little bit about trading, and then I'll share more information about the event. So what I'm doing is looking at the NASDAQ in most cases on an hourly or 4-hour chart. It took me by surprise, to be honest, because when it dropped here, I actually thought and bounced back. I actually thought that it's going to drop again and continue lower to those levels, and actually look to buy it at around this area. But it continued to pop, broke through this nice trend line, just a classic one, reached a few times, bounced from it, and then broke it, retested, bounced again, and held it for the last time. So we get in, as I can see it, we're getting closer to the resistance area of this week, right here. Super high volume came on, that was 29th of July. So we're getting closer to those areas. And we also have a tiny gap that, although it got closed, but a lot of the times you will see it reacts as well. So this area of the 23,600, 700 could be also a potential, at least intraday move. And I always take into consideration the VIX as well, so volatility index. And basically, for those of you not familiar, the easiest way to understand it is just there is a negative correlation between the VIX and the S&P or the NASDAQ. The S&P basically, but obviously it affects the NASDAQ as well. So whenever the VIX is dropping, you will see the S&P and the NASDAQ react to the opposite side. And what I'm looking for in the VIX is the same concept of supply and demand areas. Currently, as you can see, I'm on a 4-hour chart, and it's kind of sideways, a strong move, but it's actually sideways, not really trending in some degree. So I'm looking to see it drop. If it will do that, that will be amazing, to drop to the 15.5 points of the VIX, meaning the price declining, the price of the indices going up. And once the VIX will reach that, and that could be, it could take a while. It could be in one day, but it could also take a while. If the VIX will reach the area of the 15.5, meaning the price will bounce back, and the NASDAQ and the S&P will do the opposite, so they will drop. So this is the first thing I'm looking for. These are, when I'm looking at the 4-hour chart, I'm looking for major, obviously, movements, right? So it's not just an intraday push, but actually a strong move for a few days. So one thing to look at, the 15.5. Are you guys using the VIX when you're trading?
VIX occasionally. I often run when I run my NASDAQ trades. I often go off the 0 DT options and the general options profile for the NAS for that day, and then often play that into the New York Open myself. The VIX occasionally, but often we languish and end up kind of a bit dead all the time. So as far as intraday trading, very active. I normally mainly layer off the options myself, but I don't know about you, Anastasiia. Do you ever trade the NAS or anything really?
I started before that. There was a time when for the year and a half I was trading only S&P, and NAS was like 1 out of 10 trades and nothing else, just S&P and NASDAQ. But it was in the first term of presidency of Trump, before COVID. It was perfect. It was so easy to make money on that. You really didn't need to know much. It was just pulling back to the 56.8 of the Fibonacci and going both ways. So it was perfect. But I do trade it. I trade it rarely. Something preferably S&P, less NASDAQ, but I don't use wicks. I don't use wicks for my trades. But also I trade intraday. I use the same exact trading system with volumes and the CVD deltas, this balance between the deltas and the actual price action and so on. So.
Nice.
Yeah.
One thing interesting on the S&P, two things. One is that level of around 16,400 area that I marked here. This should be we should see a reaction once we will bounce to it or reach it. So we're getting kind of closer to it. I'm guessing we might have a short opportunity intraday once we will play around this area. And another thing that I'm watching, a lot of the times I have the 200 EMA and the 420 EMA. And what I'm looking for is, like always, when we're looking at the chart, we're looking for repetitive patterns, right? So for example, if you go back in time, I'm on an hourly chart. Whenever the price went above the averages, then you can start seeing the blue line is the 420 EMA. So we had nice support from here, and then a few more times when it held support pretty perfectly during a long period of time. And then when we reached it again, almost bounced from it, very close, reached it here, bounced a little bit, broke it, and played around it, support and resistance. So a lot of the times when I'm looking to work with some averages, like EMAs, I'm looking for that pattern to see what happened before. And obviously, if it happens before, in most cases, we will have at least one more reaction, especially when it comes to, we didn't touch it a long time until this moment. When we did get a very small reaction, right? It's an hourly chart, so there was a bounce. Intraday, that could be an easy trade to take. Eventually drop below.
And collapse through, yeah. No, I love to see it though. I use SMAs and EMAs all the time, so I love to see it as well. That's good because get grilled over here where everyone's like, nah, useless. I'm like, mate, come on, they're beautiful. They're beautiful. You're just tracking price momentum and everything, right? So yeah, it's good.
Exactly.
But yeah, that level you got marked out. Sorry, go on.
It's just a matter of how you use it. There is tons of ways to analyze the market, or generally to get your opinion about whatever asset it is. It could be EMAs, could be the MACD, could be market profile, could be just a clean chart. You just need to realize what you're doing with that indicator or asset, and then you track it over time. You see that it works, and then you implement it in your trading.
Yeah, it's how you deploy any of these tools, right? How you package that together, get the data, get the reasoning, the logic behind it, and then execute on that as well. I'm definitely looking at that same area you have lined out on the S&P right now as well, as a point of call to consider something from there.
Yeah.
So that's good to see as well. So I've definitely got my eye up there.
Amazing.
For short already for S&P at the current levels. Wait,
Yeah.
S&P or NASDAQ? One moment. One of those two I was looking in the morning. For S&P, but the fact that NASDAQ already broke my zone, I don't like it, and that's why I'm skipping S&P as well. So I like to trade them when they are both at the same position, either for shorts or either for longs.
Yeah.
If one of them for me is more long bias and another one is more short bias, I'm most likely gonna skip both of them.
Yeah,
So
it makes sense.
That's basically how I approach it, because I based on volumes, I know one of them is, I have 50-50 chances essentially where it's going to go, because they're going to go one direction together.
Yeah.
So I had a short from 64.10, 64.04, 06 for S&P on the futures on CME, but I skipped it, and right now I see that it was the right decision. It wouldn't end up well otherwise.
Yeah.
That's crazy how the market is so strong. I mean, so many opportunities in the last few days or weeks to collect, drop, and it's actually bouncing up every single time. It's insane.
Yeah.
Really.
It is. It's crazy. It's crazy. The willingness to buy back in. Did you want to tell us more about the algorithmic stuff?
Yeah, for sure. Yeah. So I'm gonna share. The landing page basically, and where do I put the link? Let's see. Do you have a place to put the link in the comment?
I think you would have to go to the. You should be able on this side banner. Should be able to post that, I believe.
Hold on.
Assuming Jonatan set you up with the correct.
Yeah, I'm not sure about that.
Yeah.
Okay. We will figure it out. I sent it to Jonatan.
Yeah, send it to Jonatan. He can post it there.
So guys, come join us on the 18th. We're at 11 Eastern time. It's going to be a live event on our YouTube channel on Trader Pools, and like I said, we are basically going to learn, teach you, and then also execute in real time bot and algorithm that we will build together in real time. So you're going to see the trades actually getting into the system, and we'll see how much money we can make out of that algo. So we got guys, our partners, good partners from Signal Stack and TrendSpider together with us, and of course Michael Noss, our chief analyst for algo trading. He will be covering that as well. And like always, we have a good giveaway too of evaluation account. So all you got to do is just register in the link that will be available soon. And come join us. It's going to be a wild webinar, first of a kind, definitely, that we did on Trading Pool. Like I said, we're actually allowing from that moment to the 18th, we're actually going to allow trading with algos on Trading Pool accounts. So it's going to be a very unique proposition.
Brilliant, yeah.
I'm gonna definitely be there because this is a completely new world for me. I don't understand any from the algorithmic trading. It's so far, like I understand the principle, but it's so far from me that I'm gonna attend. I'm super interested. I think this is absolutely incredible, valuable knowledge that we can get there as well.
Yeah, it's the future. That's where we're headed, right? You know, that it's full steam ahead on the algorithmic train. So, you know.
And the beautiful thing about it is just that you don't need code. You know, I was always preventing myself from going into that direction because I don't know how to program. But now that you don't really need a code, it's super simple.
This is for people like me who are absolutely zero in technical stuff.
Exactly.
Perfect.
Yeah.
Alrighty, guys. So thanks so much for hosting me, and we'll see you on the live event on the 18th.
Thank you for sharing your view on the market, Mickey.
Thanks.
Thank you so much.
Thank you.
Catch you next time, Mickey. Ciao. There we go. We'll slap back to your channel, Anastasiia. Just give me 1 sec and I will return. I just got someone at the door, so give me half.
Can we do no? What's up with the camera? Anyway, you guys will be seeing me like this because, like I said a second ago, I'm absolutely zero in technical stuff, so I do not know how to make my camera bigger. Nonetheless, our EUR future is coming closer to the level that I'm going to be looking for the buy from. So I'm looking for something like this to happen, which is approximately 80 ticks target that I'm going to be aiming for, with approximately 30 ticks stop loss, which is a little bit less, right? Which is 2.5 risk to reward for this one. So I'm waiting for this. I would love to see the reaction first before taking the straight, most likely. So that is something that I'm gonna be taking probably, because pound at the same time isn't really moving. I would be concerned if at the same time pound would be getting closer to renew this lows, but pound is just stuck there. So this, which is a good sign for me for my longs on euro as well. So okay, let me have a look at gold for my second. Yep, there we go. Could have taken the sell again. Could have taken the sell, but don't like how we consolidate here, so I didn't. I just keep it. Wanted to be safe. Yeah, my preference for today and most likely is EUR so far. It doesn't look too bad. How are you guys doing? Let us know in the chat. What are you trading today? Is there anything particular that you guys are looking for? The link to the event on the 18th is in the comments. The link is in the comments. So this is the link that you can click. You can attend the event on the 18th about the algorithmic trading in the stock market, not only in forex market, not only in futures market, but in the stock market. It's the first time it's going to be allowed. For me, it's super interesting. I cannot code at all. I cannot code even with AI. So I'm hoping to learn something because I tried and it didn't work. That's why I'm still sitting here waiting for my manual euro. When people are like, I don't know how to code, so I'm just using AI and it does everything for me. And I'm like, how exactly are you doing this? Because for me, even AI doesn't work. I'm so bad in that I don't even know how to code with ChatGPT or anything else.
You got to speak to the AI much more kindly, Anastasiia. All right, you can't abuse the AI just because it's not getting it right. All right, you gotta be a bit more gentle. Be a bit more kind.
With my AI. I'm kind with my AI.
No, apparently, actually, though, if you're more aggressive, like it actually works better. So it's either or. Maybe you gotta step on the throttle, be more aggressive with it, and you get there. But hey, but yeah, definitely go check that out, guys. Trade the pool. Check out the event. Good time.
Are you looking for EUR? What do you think
I'm
about
gonna have
EUR
to.
right now?
I might actually have to refresh my stream because it's completely bugging out. So give me a second, and I will duck back in. Yeah, everything's completely lagged out. I don't know if you can still hear me or not, but
yeah, we can still hear you. But we're gonna be waiting. But yeah.
Yep.
Yes, Jonatan has so many AIs running, and it's amazing. Like, I'm so amazed. Like, for me, the person who doesn't know anything about it, it's like, wow, it's a different world completely. My EU shorts running a nice profit so far, amazing. Yeah, so let's see if your EU shorts are gonna continue or is it gonna start reversing. But I'm gonna look for their confirmation first, because I'm not really feeling like entering the straight without the confirmation of the bounce first, because it does not look fully strong for my buys yet. It's not my perfect setup. I would like to see more confirmations for longs before I enter the trade. The sound is not working. The sound is working. Can you guys hear me? Can you please put a plus in the chat if you can hear me? Because I can see someone is saying that you can't, but you should be able to do that. Can you please put a plus in the chat if you can hear me? Because someone is saying that they can't. Sound is fine. Fantastic. Love it. Do you think manual trading will get outdated? I personally do not know how to answer this question. There is a chance that it will be. For the current moment, I do think that manual trading has more advantage in some ways, because in the end of the day, also one of the reasons is because we have the critical thinking, and we can have we can actually think and filter out the bad trades. I've never seen the algorithm running successfully without being adjusted for longer than 6 months. I've seen algorithms that run for 3 to 6 months flawlessly. They run profitable, and then they blow the whole account because some parameters and some variables change, like volatility, liquidity, the geopolitical situation, the news, something out of the ordinary, and it completely blows the account. Which doesn't mean it doesn't have a place to be. It has. And I've seen people who successfully adjust and twist and trick sometimes their algorithm that keeps running for years. But fully automated system, I've never seen run more than for 6 months straight. So I personally am still a fan of manual trading. I do not know how to answer this question about the future. Maybe it's gonna be outdated, but I wouldn't think that it's gonna happen in the next couple of years. Yet.
Yeah, it's funny. We had like a 45-minute conversation about this today in the ABL stream.
Yeah.
Enough. Yeah. So, it's a hard one because the elements of trading, there's still such a human element, and as well as the decision makers that affect the markets are humans. Yeah. And so the AI algorithms, all that kind of stuff, have to understand human, decisions, which is obviously distorted. There's irrationality in there, over exuberance, there's personal interest, there's despair, fear, greed, that whole complex right there. So I would say we've got another couple of years at least before something like that gets fully figured out. But you can bet that people right now are trying to work in the background to fully flesh that out, right? So, I think though, once we get to that point, right, a lot of the AI stuff that we have now was originally built on the foundation where it originated was from finance, right? Yeah. So you can also somewhat bet that the first portions of AI completely taking over everything will somewhat come into the finance game first. Obvious reasons, that's where the money is, you follow the smoke, that kind of stuff.
Yeah.
But once we really get to that point, it will have bled over into every single other industry as well. That I think all of society will change, all of jobs. It's that whole thing where you got a universal basic income, something like that. Lawyers are gone, engineers are gone, even doctors are gone, everything. So I wouldn't worry about it too much, but if you are concerned to some degree, definitely take the next, say, 3 to 5 years, take it seriously, put in the work, put in the effort with your trading, take advantage of the prop firm space that you have right now, stack up some cash in the background, invest that in long-term funds, say in the stock market, something like that. And that's probably your best bet. Because ultimately, if this stuff does come through, a lot of these jobs get cut and it all goes to robots. All these firms will start printing cash, and you can invest in the stocks, right? There'll be mass unemployment with certain things, but at a certain point, that means they're cash flowing massively. So all these companies will print dividends, and that's something where you can go to the stock market, get that on the back end as like a safety thing, and then keep trading day to day with your regular stuff until the music stops, right? Who knows what's going on with all of that? Very hard to say. Even the people at the top tier with OpenAI, Grok, this, that, pick your top AI firm, they don't fully know the timeline or where it's going. There's a huge degree of speculation. So for now, just keep ticking on. That'll happen when it happens, and you'll see it. I wouldn't. There's not much you can do, right? I don't know if you agree with that, Anastasiia. Like, what are you going to do about it? You got to just kind of keep going.
100%. Besides this, manual trading, in the matter of fact, black and white, the manual trading works. You can be profitable, you can make money, you can make enough money for living, you can make enough money to invest and build your life from the ground in the next few years. I think this is what is the most important, right? Right now it works, right now it functions, and algorithmic trading didn't replace the manual trading so far yet. When it happens, we will have to adjust. And if you get enough knowledge right now, you will at least know where to start from. Whereas if you don't, then obviously you're going to be starting from the blind. So I'd say focus on your skill, focus on, like you said, LJ, taking the advantage of the prop firm space. Like years ago, it wasn't possible. You had to grow your own capital. You had to go into the fund, which was far more difficult than right now, passing the evaluation and getting funded and eventually getting your money for deposit from the prop firm, right? And then growing your account. It's right there. You can just reach out and grab it if you put enough work into your skill sets, enough patience, discipline, all those good things that we talk about. But yeah, we don't know, right, about the timeline for AI. So
exactly. And on the way, like, it's one of those things, like, try, if you, any of you guys using that stuff now, you're early movers, right? So use that to your advantage. Just like Trade the Pool, we had Mickey come on just before. Jump into that, join the event, see what value you get from it, and see how you can apply that to what you're doing right now. Take advantage of that. If you're an early mover, you're going to understand it better. When everything does come in, you're going to see opportunities where you can actually leverage that and use it to your advantage rather than getting, slapped around the corner of the head or something, whilst everyone else runs off away from you. So that would be the main point. Definitely try to learn about these things, re-educate yourself, keep up with the current times. And beyond that, if you're already doing that, just keep doing the day-to-day stuff, trading manually, all of that. And you'll see once that switch comes, it will be very obvious. And so hence, that's all you can do is prepare yourself. And hopefully when it does come, you can lean into it rather than get washed up by the wave. So you want to ride the wave rather than crashing out and getting dumped, right? If we use like a surfing analogy or something. So I think that's kind of the way to look at these things.
Yeah, for example, I'm going to definitely attend the event because I'm super interested in it. I want to know about this, at least a little bit, understand how is it possible to, most likely it's not my thing yet. If at some point I'm not going to have a choice, obviously I'm going to need to go that direction. But right now,
you're full technical. You got to get into it.
I'm so bad in technical things. When my internet doesn't work, and like one of the worst things that completely freaks me out is, for example, bad internet connection or like bad mobile connection, something like this.
Look, that was me last week. I had no internet last week at all. I was completely dead, and I did say that. no internet in 2025 in this year is terrible. It's surprising how much it disrupts your life, even with general day-to-day stuff.
Yeah,
you can't, it's terrible. It is
completely. Yeah, it's like, why? How is it even possible in 2025?
Yeah.
But I am so bad at technical things. I swear, even if I'm gonna start coding, I'm so quickly to be like, what am I even doing? Why am I doing this? and that is including that I've started 1 year of programming in the university, the first year.
Yeah. But you don't need it now. Now you can just talk to the AI. You can just speak freely and tell
I know,
it.
but it feels like my AI is as stupid as me if it comes to
That's right. We'll get there. Eventually, it'll be taken over by robots, but we're not just there yet. So for now, definitely, keep the ball rolling, and we'll see where we get to.
Yeah.
And yeah, like Fabian was saying, look, you can buy something like BTC. That's your protector. Put a portion away there. Put some into the stock market. Have some long-term stuff. I mean, there's things like housing, real estate. I'm not crash on the whole housing, real estate thing, as far as that's run on and on and on and on for a long time now. But there is an argument to be had that physical land, at the end of the day, no AI, robots, or anything can sort of touch that.
Yeah,
you might have access from your country, but it's a sort of safe bet.
So, eventually, we will have to live somewhere. People will have to live anywhere. It's not somewhere anyway, so they will have to buy land. So I think that real estate is still a very good investment. Of course, it depends where. Like, for example, some years ago, I was thinking about investing in property in Dubai. Whether it's now, for example, it's, in my personal opinion, doesn't make any sense. Because, in fact, they keep building out of the desert, so they can keep expanding it. If you think about the basic supply and demand, there can be lots of supply and demand is limited, right? Like, there is a high demand right now, but if you have an unlimited supply, it's eventually gonna shift. So right now they're building the second airport, for example, and around this airport they're gonna just build another city. So in fact, it's like what's the principle of the price being growing? But of course you need to search for the place. But in the core, I agree with you that real estate is still something that is good to consider, at least for saving your capital.
Yeah, I think it'll be protected. I don't think it'll have the same growth that we've seen, this crazy growth over the past, 2 decades or whatever. But just like you're using with the sort of Dubai, UAE, Greater Emirates, Qatar, that kind of area. Same with the very favorable tax element, like zero taxes. Eventually, they will have to start taxing, right? So I would say, look for these places where you've still got that leverage, where you can take advantage of that whilst it still exists. And ultimately, they will have to have tax on general income and that kind of thing. So right now, wherever you see that, take advantage of it. Plan for the long term within the context of whatever disruption there might be. And yeah, that's all you can do. No one honestly knows where AI is going to end up. It's the most disruptive thing we've ever seen. So all you can do is live your life day by day.
Andre, I have another question for you out of the completely air.
Yeah.
Timothy is saying that don't call AI stupid, they're listening. I have a question. What do you think about the fact that AI is in general learning from people, right? So it learns from society. It takes the information from us and it converts it and analyzes it and so on. Do you think that because people are in general not so smart, most of us, the AI is getting more stupid with some time passing or not? What's your opinion on that?
I think right now that is actually the thing holding back AI, because obviously it's trained on models from the internet by and large, right? And there's a lot of, let's just say, garbage on the internet, whether you Google searches, Reddit, all this kind of stuff. There's a lot of nonsense, right? So it is definitely trained on that stuff. As it learns further, if we're talking about once it becomes, semi-conscious, in a larger scale more than it is now, you being nice or negative towards it, I think also though it will realize that humans are a bit silly, let's just say, a bit stupid. They do these stupid things. So I don't know how much weight it will actually have on a human being rude or aggressive towards it, because they'll be like, that's kind of what humans do. That said, it might preference humans that were kinder or more reasonable. I mean, that said, I don't know if this stuff is getting semi into science fiction of it, because it depends how stuff is routed and that kind of thing. But same argument, they run off logic, and that is logical that you would, the humans that are nicer, kinder, more reasonable, easy to work with, it would want to work with them versus others. So, but yeah, it's all a bit of a funny space right now. We're getting very, I don't know, Star Trek, I guess, but coming into reality. You know what I mean?
Yeah.
Yeah, it's a wild time.
Fair enough. I have the same opinion as you.
Are you looking at any trades though, Anastasiia? Since you haven't been trading much last week and you've been a bit out this week as well, right?
Yeah, but I'm out this week not because I'm out. I'm out because I don't like the market.
Yeah.
I don't like how it recovers after the NFP last week.
Mm-hmm.
Last week I didn't trade much because it was non-farm and it was an interest rate decision. So I didn't trade on those 2 days. I traded essentially Monday, Tuesday, and Thursday. This week, I don't like how it recovers. I saw that euro and pound can grow, but I didn't see the entry point because we were basically, what happened, we were consolidating. And then it started going up. So, well, somewhere here maybe, but also not, some entry points that I usually would take. So, and this week I'm out because I still don't like the structure. Usually, I've learned a hard way that if I feel like this and I try to find something that isn't there, I'm gonna pay for it eventually with a lot of money. So for me, it's easier and cheaper to sit on my hands while I'm not feeling 100% like it's a good idea, the best possible idea. And I'm like, okay, you know what? This has to go there. I'm like, right now with euro, I'm like, it can go there. I see how it can go there. But if I look at it like this, for example,
yeah,
I'm like, you know what? I'm probably going to skip this buy.
So you're going purely off technical basis, basically?
No, because I do analyze fundamentals ahead of news, for example, but the intraday, before, like between news events, I trade purely technical because I trade the intraday movement. And the intraday movement doesn't necessarily have to be connected to the overall bias. So what I do over the weekend, I analyze the bias fundamentally and analyze the bias on the higher time frames. I'll build the scenario of the direction, and then during the week, I trade within the direction that I analyzed during the weekend. Make sense? So, but this week, I was expecting there, some kind of recovery, which happened in a range, and I was like, you know what, I'm gonna skip this stuff until it a little bit figures out what's gonna happen next. Personally, right now, if you look at the DXY, I don't think that DXY is gonna continue to keep dropping right now. I think it's gonna still bounce back and have the correction before the interest rate is gonna be still cut. Because what's happening now is we are dropping on the expectation of the rate cuts, on the extremely low labor market data last week, recalculation of the data, and the whole, collapse and fights in the Federal Reserve over the data and the interest rate decision. However, I don't think we're gonna keep dropping because it didn't yet happen. We had the reaction on the expectation. Then people are most likely going to calm and still wait because we still don't have 100% probability that it's going to be cut. I think we're going to have the correction, and I think then it's going to continue and start the long-term downtrend closer to the rate cut when we're going to know for sure 90% probability that the rate is going to be changed, and then continuation of the rate cut season. So I'm expecting actually DXY to kind of go backwards to the upside. maybe not yet immediately, but from here somewhere, from the mid of this range. If I also place my volume profile over this whole movement, this is essentially the high volume node that I'd probably like to see the price reaching, this one here.
Yeah.
And this would be perfectly aligned and until this levels, which is the previous highs here that the price has been holding, right? So all of this. So this is my opinion personally on currently on the DXY, and this would totally be aligned with, for example, 6B. So if DXY continues to go down, 6B can go here and then start dropping from here when DXY is here. So this is a kind of expectation I have. And then, okay, I see that DXY I'm expecting to drop, 6B I expecting to go up, and then I trade within this direction, within this range.
Yeah.
If I have a good entry point and confirmation, which for now is, for me, is not perfect. So I prefer to just sit it out, to be honest.
Yeah. No, I completely agree with that outlook completely. So, yeah, exactly like you were saying. So from the Friday, obviously we had the the revisions of the prior to payrolls from the past 2 months. Obviously that set the market completely flipping in the other direction. We had the big kick up from the payroll. Coming into Monday, we did have the probability of a September rate cut come to 97% on Monday, right? We then dipped down to 94 through Monday. Then we sort of went 95, 94, 93 through Tuesday. We then dropped down to 87 and 85 on Wednesday. Today, now we've picked back up to 93% probability. So that's why we've seen that kind of, there's a bit of indecision, that bit of churn around the dollar movement right now. And then since that coming back up, that's why we've seen the increase in the euro dollar, the pound, Aussie dollar, all the majors. And then we've seen dollar yen come back down a touch as well. So I would definitely agree with that outlook. I can see the same thing on the Dixie, where we come back down, sort of complete that kind of move. Everyone sort of starts now rethink again. We've got a bit of time between now and the next Fed meeting, between that September date. We get a bit of a pullback, and then that might be the point to actually press on from there. So we see that run higher, the eventual break, just like what you're looking for. Obviously, that's going to depend on very heavily tonight. We got the Bank of England and then the week-on-week unemployment claims, which are now going to be important since that revision on the non-farm payrolls. But yeah, if we see, I'm very much in the same camp right now. I'm sort of sitting on my hands a little bit. I had a few little scalps earlier in the day, but now I either want to see a break of those highs and then confirm that we're actually running on and then jump into that. Sorry?
On the DXY or on the pound? On the pound.
Yeah, so cross combination of the pound, the euro, all the majors, and see that all together they're all moving in the same direction. So thus, as far as the Dixie, that would mean it comes back down to that lower leg and into that support. That would mean pound going up to roughly where you have lined out as the topside target, and then same with that euro trade as well, coming to the upside. And then if we get a break of like today's highs, I would lean into that, see that higher upside. Once we get those higher resistance levels, look to short and reverse the trade, come down, get the reversal on the Dixie, another reassessment, get a bit more confirmation as some of the Fed speakers come out over the next month for the September meeting, and then possibly again after that reversal in the Dixie, come back down and continue that. So I'm pretty very, very similar to you as far as the trades right now, to be honest. So we are.
Someone is asking in the chat, who's asking this? Nisa was asking, did I get the euro entry? No, I didn't end up taking euro because I didn't get the reaction. So I like to see the reaction. The 5-minute time frame, we didn't get any reaction. It keeps tanking. So there is not even one bullish candle or any sign of strength here. So I'm skipping this one.
Yeah, I think, Euro's not looking too bad today as far as where we are now for like a intraday entry, I would say. Sort of near term. We peaked at 117. We've dropped back down to almost 116.60 So as far as the, like ATR type moves, we might actually have a bit of a bounce from here. You can see we've had sustained drop as well. So it's not a bad idea as far as picking up something from here.
You mean
I would say
buy from here?
Yeah, for a buy from here. As leading up to, we got the Bank of England announcement coming out shortly, right? So as far as the drop that we've had for today, if you're looking for scalps intraday, seeing as we don't have much going on, I don't think that's a bad shout overall.
Yeah, but I personally don't yet see the strengths here from the buyer, so I'm skipping this one.
Yeah, just for scalps, not for a larger trade or something. But as far as anyone out there in chat looking for stuff to pick up, seeing as we're kind of in, like you were saying, we're in this kind of somewhat indecision zone. The market's still churning. What's going on with the Fed? The recent data has been a very back and forth. We've had both sides playing on. We've got a bit of a resolution to the tariff stuff, or at least, if not resolution, forward direction, a bit more confidence in that. So right now it's a bit of a digestion period looking through that. So intraday, it is going to be a bit of chop. That's kind of what we had most of London session yesterday and early New York before running on finally with the euro. We actually got a bit of a pump up. But even within that drive higher for the euro yesterday, there was a lot of chop back and forth before it gradually staggered higher. It wasn't like a clean run the whole way. So I would say that's definitely the narrative right now.
Yeah, that's also the reason I was skipping that. Lexi is asking to look at the GJ ahead of news. Interesting. What's your fundamental take on that, LJ?
GJ, so as far as the today's news, basically the rate cut is pretty much priced in. I think it's like 94%, right? So the actual cut itself is not going to be the thing to look at. It's going to be the tangential comments from the Bank of England. The inflation rate is still much above their preferred targets, about 3.6%. And then you've got growth definitely slowing in the UK. So they're going to be talking about comments around stagflation, that sort of thing. What we've had change since the last Bank of England decision is obviously we've got more throughput on clarity on the trade front and the tariff front from Trump now, right? So you might get, it's going to be where that they see that forward projection, given the slightly higher confidence in the trade tariffs. There's still a number of tariffs to be worked out as far as trading partners for the UK, but it will give them a slightly better confidence level in that forward input for inflation and any of those kind of input prices. So that'll be the portion to look for. I would say, given that, we probably get a bit of whipsaw, because we'll get the headline number, the initial statement, that kind of stuff, and then people read deeper into it. So obviously we've got a pretty defined level where we peaked at today now, yesterday even. So that's the crux point to look for as far as the currency itself. Obviously you pop that, then you run right high. You can see right here on the volume profiles on the pound yen, for instance, right? That's the clear point if we break the highs that we're running right for there.
Yeah, for sure. Right. I agree with that. I'd also expect the reversal from here somewhere, from the zone afterwards. I'd say this, like here, we can clean it. So from here, it's fairly simple. Now, regarding the entry point for a buy, I personally don't see it unless we maybe break the high somehow and then a retest, because this has nothing to hold on to from the technical perspective. So only this level that I can see. If we break it, then maybe the retest and then pick it up from there. I think this one was a very good entry point for me personally, from my perspective, testing this high volume node as well, the point of control of the week too. But that's already missed. So right now, I wouldn't see the entry even for the continuation.
Mm-hmm. Yeah, so I'd say it's similar to yesterday. Like, we had a lot of more technical sort of flow-driven day. We had the ranges sort of marked out pretty clearly. When you get a break of the range either side, just run with that. Just like we had yesterday on the euro, we eventually got that break around the 116 level, and we've run way on from that as well. So similar today, you've got some pretty defined ranges, right? So you can lean on that top level if you're interested in shorts. If you've got a slight bias as far as the macro picture with the data coming through, you could go long or short either way, but you've got those defined points to lean on right now. So it's whether you wait for the announcements after and then follow the move, or if you want to try pre-position, which might be a bit risky because I think there will be a lot of chop. So you could end up in the exact direction that you positioned, but get stopped out prior. So I would just sort of wait for that because we got the Bank of England announcement, and then shortly after we have the week-on-week unemployment claims for the US, which are going to be watched very heavily now after the troubles with the NFP revisions. So don't discount that. A lot of times people, and so week-on-week number, it's very frequent, tends to be pretty consistent. So people sort of put it to the side, but now it will be very much more heavily looked at, seeing as the NFP portion is somewhat questionable. So it's hard to get raw data at the minute.
I agree with you. Do we already need to...
Yeah, I think we got Mike and Rich in the background here. So are you hanging around, Anastasiia, or are you going?
No, I can't today, unfortunately.
Okay.
Yeah, so I'm going to leave you guys.
All right, well, let us know what trades you come up with into the end of the week. And thank you very much for coming. We'll see you next week, Anastasiia. And
thank you so much. I'll see you next week.
Yeah, no worries. We'll be back in just a second, guys. Cheers.
Hello. How are we all doing?
How we going?
How is everybody?
How you been?
Welcome.
I'm back again. We're all here.
Back again. Richie,
how you doing, Rich?
Back
Good
again.
to see you, mate.
Oh, you're muted, mate.
Muted, son.
He was away for 1 week and he's forgotten how to unmute himself.
There we go. Well, I unmuted the microphone. I thought that was good enough, but I see we've got some extra tech. There's like belts and braces, and then there's extra security in place. So I'm good. How are you guys? How's your week been so far? I believe we haven't caught up too much throughout this week.
Doing good. Day 2 of phase 1 on a high stakes. Profit made. 1 more day of profit, and that's P1 done. So it's been a good couple of days. I've found my edge. I've discovered what my edge is. Now, we won't use it for the podcast segment because it's probably not suitable for the podcast segment, but this is my edge, basically. Just this tune. With this tune playing, I've been scalping and catching trades like I don't know what. And this has been my magic sauce for the last 2 days. So yeah, I don't know what's in it. I don't know what subliminal messaging is happening right now. But something is cooking.
I've tried everything with them binary beats and them certain hertz and frequencies as well. Like I spent ages learning about this stuff because there's apparently certain hertz that install things at a deeper level and help us like learn things. And I'll give you a little inside information here. I actually have a very special frequency that I use when I'm when I'm doing some pretty deep inner work. And I don't know if it complements it or if it's just a bunch of old wives' tales.
What's the frequency? What's the frequency? Come on.
I'm not sure I should say. Well, okay. So
why is it embarrassing or something?
No, because apparently there's like
20.
3 different frequencies for different things. But it's also because I've actually can't remember. I've got it written down and a link set for when I step through this thing. I think it's like 1. I wouldn't even want to guess because I'm going to give some bad information about it. But let's just say it could be a fluke, but it's a game changer for what it is I'm doing.
If it works, man. You know, there's on Spotify. There's so many different what's it called? So many different playlists and soundtracks and everything else that you can play that can genuinely give you, an added edge, right? And an added kind of little bit of leverage to just get that extra 1%, and all those tiny little tweaks. They all add up to that. We talked about it in the past, isn't it? That 1%, incremental gains, one by one, they all add up to something bigger, right? So you're using different frequencies to catch different things.
Yeah, it all depends what I'm trying to achieve. Mike, it's interesting you said 1% because we could be 1% away from having that massive breakthrough. We could be one behavior pattern away from having that funded account. Now, I'm curious what's happened with you because from what I understand, this is an account that has gone from 0 to hero pretty much in a heartbeat. Talk us through it for those of us that aren't up to speed with this account. So fresh account
yesterday. Yeah. And honestly, I don't know what it was. Those of you who were here yesterday would have seen it. I was calling gold trades, little scalpy gold trades, and they were just hitting targets, The only thing that I can genuinely say I was doing differently was the soundtrack. That I know for sure that's what I was doing differently. I'm trying to think of what I was doing differently or anything else. I can't think of anything differently. There was just something about that soundtrack that was just something clicked. Now it could also have been the markets were moving. We'd hit a nice level. We were in. We'd basically come to. Where were we? I think I've deleted it actually. We'd come to a level yesterday, and I was just catching the scalps basically. Where was it? Wednesday. Was it maybe here or over here? I think it was. I can't remember, or maybe it was here. But yeah, just catching a bunch of nice trades really. LG, was I doing anything differently yesterday? Rich is asking, what was it that it can't just be the tunes that have just flicked a switch with my trading the last couple of days.
I do have a mathematical reason, etc., as to why. But if
here we go.
Everyone will get bored and everyone will tune out, close the screen, and disappear. All right. So
come on, please
send you to that in the DMs.
Bring out the whiteboard with your formula on it, please.
All right, guys, hang on. Here we go. So
he actually has a whiteboard with a formula on it. I think it's brilliant.
We got the calculation with all the stuff right here. It's all going on, and this is what we're looking at.
That is the market maker formula, right? That is the enigma code for the markets right there on LJ's whiteboard.
No, but if I give a brief breakdown, there's a certain pocket window for that type of strategy that is optimal, which has a slightly lower volatility, but you've got good momentum, which is what we had yesterday. It was a bit of a quiet day, but we did have a general confident directional momentum, right? And then so we kept layering into that without the whipping, right? So that lends itself very, very heavily to that kind of trading style, which is also, that was the thing I mentioned to you in the past. I was going to mock that up and show you how that works. And we got a perfect example of that yesterday. So I won't go into that deeper because everyone will fall asleep and we'll have a math lecture over here, but yeah, no, perfect.
No, it was just a great day yesterday. It was a really, really, there was just something, when something just clicks, right? And then it's just a question of, right, okay, let's not mess this up now. because basically yesterday, out of I deliberately closed my MT5 so I wouldn't be tempted to hit any trades. I'll open it up just to give you an idea of what yesterday looked like. So yesterday, let me just change the history. So yesterday there was a couple of 0.25 losses. Otherwise, it was 1, 2, 3, 4, 5, 6, 7, 8, 9, 10 wins. 10 wins, 2 losses. The biggest of which was $150, $75, $115, all just incremental. So I'm now currently sitting at $583 on that P1, and 520 odd was done yesterday.
There we go. We got the score back. Yes, come on, son, come on. That's what we love. Love to hear it.
So I can't tell you what it was. I mean, it was two assets. It was GU and gold, and they were just at a point. And as LJ says, just caught it, But it was funny because it was on. It was in the morning as well. I had it open on my computer, and my eye just caught it, and I got a little bit distracted. And so I was trading gold in the morning, and then coming into the live stream on the Fivers live stream, got into GU as well, and just when it clicks, it clicks.
I think personally that's one of those things to understand the strategy, because it's completely valid, but there's going to be different environments where it excels versus it gets kind of knocked back, right?
Yeah.
And so I think that's the importance of having, 1 or 2 or even 3 sort of split strategies within your tool belt.
Yeah.
Right? Sometimes you need the hammer, sometimes you need the wrench, sometimes you need the crowbar, right? It's that kind of thing, right? And you don't want to be using a hammer when you need another tool, right? It's that analogy. So I think that's just where it hit its perfect pocket. So if you complement that with, when you're seeing that kind of environment, you press that strat, and when you're seeing the other environment, you press the other one. And that's kind of what I do. That's why, when a bunch of you guys in chat as well have asked about my approach or strategy, it's like I've got 5 or 6. It depends on what's happening, that day, that week, what's going on, how much news there is, all that kind of stuff. And I'll sort of shift around to each point of whatever complements the current environment the best, rather than trying to brute force something just because I like it or I want it to work. And so you gotta, it's that Bruce Lee, like, be like water, like, merge and mold to the environment what you're seeing, I guess. If that's helpful.
Yeah, exactly. Akram, he must be bored. That's the only reason why he can be here. He's obviously he's waiting for us to give him some signals, So we've told you before, mate. Alex, you're not getting any signals from us. No, not going to happen.
I will just bring up this. Bogdan was asking before. I will post something probably in ABL at some point over the next month. So if you guys check in there at all, if you're not signed up to ABL, jump in there. We got another month. There's a bunch of courses. You can go through that. We're going into phase 2 soon, so we'll be shutting down. But if you're looking for that kind of stuff, then jump in there and I'll put some stuff together, and you guys will be able to follow me there. So there you go.
Yeah. So we're gonna press the pause on ABL for a while, just while we build up the really true platform that we're building as part of that project. So exciting times coming. So yeah, saying Doobie wants the music back. I don't know. The music doesn't really lend itself to the kind of the podcasty vibe. I mean, we can play it, but it just feels a little bit. I don't know. What do we think?
I think you can never go. I will say my opinion. You can never go wrong with music. Music is beautiful.
I don't think you can.
All times of the day. You wake up in the morning, music. Afternoon, music. Evening, music.
I agree.
I'm
Rich
24/7.
Rich, we want to know. What is what are the frequencies? I need you to figure it out. I need you to share that secret sauce. I know the trading strategy is this little enigma that you don't want to give all the secrets away, but if you're able to focus on that trading, there's those binaural beats. And the thing is, what's interesting though is, I say this, it doesn't work for everyone, right? Rich quite rightly pointed out that he's been trying all the different frequencies and everything else, and you've actually got to find the right one that works for you. Like there's some, I have terrible tinnitus since health problems I had when I was 17. And so when I go to sleep, I've got to have some background music, just really kind of chilled, something. And when I met my other half, she always slept in silence. So she took her a long time to get used to having to kind of put up with that. And I wanted to change it to something else. And when I tried to change it, she was like, "No, you can't. No, that's horrible. No." And I would play the different things to just try, and she was like, "No." And then I just happened to find something else, and she was like, "Oh my God, this is amazing. My brain feels so calm." And I was listening to it, and I'd be like, "Really? Not working for me. Not doing it for me whatsoever." I still play it for her because I know she's exhausted and I want her to get some sleep, so I leave that running and eventually I get to sleep. But it's amazing how the brain for each of us responds in different ways to all these different frequencies. So it might not be the secret sauce that Rich has necessarily given away. It'll be Rich's secret sauce that works for Rich and his brain, but it might work for some others as well.
Do you want?
I used to listen to music when I was younger as well. When I was a child, like the radio or something like that to go to sleep as well. And now same deal, but obviously with partner or something, I just put headphones in, but like wired headphones, rain music or something else or whatever. So but same deal. So go on, Rich.
Okay, so this is my secret sauce. It won't be anyone else's. And I had about 5 different frequencies that I stepped through, and then I went on YouTube and just sat there and I was like, just this sucks. Like this doesn't resonate with me. And then there was another one I put on, and I was trying to focus on what I was doing at the time, and I was just totally distracted. So for me, it is 432 or 528 HZ. Those are the two.
432 or 528? What?
432.
You sure it's not 437? It's just specifically 432?
It's 432. So what I've got is I've actually got a playlist.
That's crazy.
Based on these two, and that
you've built up.
Sorry?
So you've made your own playlist?
Yeah, pretty much. Yeah, pretty much just got exactly those. But that was what works for me. So it's got to be different for for different people. But effectively it was it's a game changer. Like for me, because I've been trying to fill that void for quite a while, and now I found something that fits so wonderfully. And it's surprising how well it aligns to just trading in general. Like there is no one size fits all. We say, LJ, what's your strategy? And LJ was saying, like, be like water. I've got 5, 6 strategies. We've also got to master one strategy before we kind of then build out a second and a third and a fourth. And the idea with this that I like to reference is the first strategy we want to master is ourselves. We want to master our own consistency to be able to spot and identify a simple entry and exit criteria and have that as our foundation. And if we just stare at that and do that for long enough, eventually we will become so fluid at that, it'll be like breathing. We won't even think about it. That will be our muscle memory. Then we say, hey, do you know what? I've noticed this other thing. Lo and behold, we now find our second behavior, our second market theme, our second set of entries or exit conditions for maybe a slightly different move. But what we're doing is we're stacking these frameworks on top of the ability to control our emotions, be disciplined, have structure, have a routine, and all that kind of stuff. And I think I just see it's such a wasted energy. So many traders just go into what is your entry and exit rules, but they haven't mastered the ability to hold on to the levers for dear life when the market tries to shake them out. If we can't master ourselves, we won't be able to effectively trade any system. This is why we hear great traders so many times say, know yourself. And Mike, you touched on something earlier I don't know where Mark come from. Mike, you touched on something earlier. You said the market was moving. We were talking about that account moving. You said, the market was just moving. And we get so many times traders will say, Rich, how much do you make a month? I make whatever the market is willing to give. I just have to align myself in the strongest possible way. And for me, that's having a proven framework that has an edge. And so I did that yesterday, but the only real benefit Mike can take from that was he was organized, he was prepared, he had the discipline, the psychology, he was able to execute when he saw his pattern or his entry, and the market delivered the rest. And I think if we have this idea that I'm going to earn 10% every month, this is where I used to spend a lot of my headspace in the first couple of years as a trader. Compound calculators, 10% a month. Next month, you know what I'm talking about. You get that whiteboard out, you start putting in these.
Yeah.
But what was happening was
$1 billion in 3 years.
Exactly that. But then it's like $1 quadrillion after like 4 years.
Yeah.
It just scales exponentially.
First trillionaire. Yeah.
Literally. And what it does, it's cheap dopamine. It is literally just I can't say what I want to say, but it is just stimulation for the brain that has no real substance to it. And it's a real pivotal moment when we recognize, well, what is the skills I need to develop that will make those things happen as a byproduct? I think it was Atomic Habits that said, if you didn't focus on your goals, so effectively having millions and millions of dollars of funding would be a goal. If we didn't focus on the goal and we only focused on our process, which is developing the skills of executing when we should and finding our pattern, would the goals take care of themselves? And I remember when I read that, I just sat there and I was like, it's not the thinking about the goal that makes the goal happen. It's having the actionable plan and the steps each day to align ourselves with high priority, high quality work. If you listen to many like high level coaches, they're often going to come back to this same core, that the goals will take care of themselves. You need to make sure that you're executing on a high priority task. And this just literally every day you wake up and say, what is the high priority task I need to do today? Not open the chart and start sending accounts left, right, and center. Sadly, many trading accounts are probably lost by never, ever even trading. They're just gambling. They're just chasing a feeling or trading emotions. So I started to get in this habit after 2 to 3 years of trading of what is the highest priority today that's going to help me be a better me. And then I wrote down all the ways that I wanted to get better. Okay, how do I be a better family member? How do I be a better friend? How do I be better with my finances? How do I manage my stress better? What can I do to improve my physical health? What can I do to improve my mental health? What can I do to elevate my trading? Now, these are all the things that typically we don't think about whilst we have trades open and running, because we're so reactive to that fight or flight mechanism that just, $100 going up, $1,000 going down, whatever the case might be. How many times, and come on, let's be honest, guys, how many times have we opened a trade and then probably spent the majority of the day staring at the screen and not really doing much outside of that?
Oh, the number of times I've opened a trade and I've gone, this was a bad idea.
Yeah.
And then you just spent the next 2 hours just managing the life out of it, trying to, let me get out of the best possible price I can because this was a bad idea.
Yeah.
Loads of times.
What we think about is we wake up with like 10 tokens of energy every day and we're just donating 5 of them to a rubbish cause, to something that's not even really helping us. And so what I love to do, and we see that thing, I think it was a professor on YouTube had this big jar and he said, is this jar full? You know the one.
Yeah.
So every day,
do you know the one, LJ?
Sorry?
I'm just not. So basically, there's this professor on YouTube, and he's doing a lecture, and he basically has a jar, and he fills it with golf balls, and he says, "Is the jar full?" And everyone's like, "Yes." And then he goes and fills it with like some pebbles, and he's like, "Now is it full?" And they're like, "Yes." And so then he goes and fills it with sand, and he goes, "Now is it full?" "Yes." And then he goes and fills it with water, and then he goes, "Right, is it now full?" And they're like, "Yes, now it's definitely full." Right?
I feel like this is a terrible question for me because I'd just be going full technical brain, the space in between. So no, it's not technically full. Yeah, fill it with water and then there we go.
But the idea is that
good.
the big stuff takes the space, and then it's all the other stuff that goes around it that really fills it and fills it and fills it and fills it. But that you have those core golf balls, right? That's the tell me if I'm explaining it wrong, Rich, but
no, that's completely it. And I recognised I was filling up my day with those 10 golf balls. Those they were my energy tokens. I was putting 5 of them in on lukewarm trades on a bunch of rubbish that just shouldn't have been involved in my day. And so what happened was I was spending half my energy wasting my time, wasting my emotions. And I will say it's better for the trader to not trade for a month but go and work on their trading than to just watch random positions move around in the market for a month and not get anywhere.
Exactly.
Yeah, that was what I recognised as a behaviour pattern I was doing in the first couple of years. So even now, I wake up. What needs to go in that jar first and foremost today?
Yeah. Guys, we are in the 4-minute window for anyone in a high stakes account. We're in the 4-minute window for news to come out on pound. So I did have the pound market, the pound dollar up. News is coming out in less than a minute. So please don't, if you're on a high stakes account, don't open any trades until 2 minutes after the hour, so you don't miss out on any profits that you might make from it. If you're in any other account, even if you're in another broker or anywhere else, please just secure your trades, because the markets will no doubt move in a second, and we don't want you guys to blow any accounts to get hit by slippage or wider spreads and all that sort of stuff. So take care on it. I've got to say, it's looking like we might be going long at the moment. If it really depends if the news knocks us out on this 1 hour. I mean, it's sitting pretty strong, suggesting that it might break to the higher side. Gold's already making a move on the 1 minute, and the pound news. Let's see, what is it? We'll wait for that to come out. Let's see.
It was forecast to drop, wasn't it?
It's forecast to drop, but it's going to be the tangential comments. It's like a 94% for it to be.
And they are dropping it. They are dropping it 25 basis points down to 4%. And we are off at the races. Pound dollar is off and running. And gold is making a move back up again as well. So gold might finally be making that move that we were talking about earlier, LJ, because it never quite got that high. So we'll see how that one plays out. Pound has reached that 61.80 level. There's potentially going to be a reaction from that point. But for me, it feels like we're in a little bit of no man's land. There's this whole cluster of stuff happening in here. I would suspect we're probably going to go a little bit higher on GU at least. Let's have a look at EU very quickly. And EU, less of a reaction at the moment. Let's see. Didn't really spike anything on EU apart from this 1 minute candle, which just came up to this. Actually, might start to see a bit of a sell on EU at the moment.
Yeah, I think, like we were saying before, it's a bit of a buy the rumor, sell the fact. So I think once the pound sort of tops out, I think we will start to get some sells coming in. Obviously, we've got the the US data coming out later on as well with the week-on-week unemployment claims. So that'll be the next piece to watch. But yeah, particularly given the reaction from the euro dollar, it really didn't kick at all. You would have thought potentially we'd actually get a run closer to the highs from earlier today. Not even close. So that very much tells you that it seems we're a bit exhausted as far as the upside on the euro dollar.
We did get a sell-off on euro pound, as you would have expected. So that has trickled off quite nicely. Now, obviously, this is now just the very beginning of this 1 hour candle. So again, it's just going to be a question of now, right? What's the trigger going to be? Because that was quite a move, actually, wasn't it? It was what was it? It was a good 0.3%, almost 0.4%. So a good 32 pips there. So not a small amount. Bouncing off the this structure here, and we'll just see how how it wants to settle. Does it want to just sit there, or does it want to bounce back up? What's interesting is it is an engulfing candle on the 5 minute. So if it closes down here, does suggest that you'll probably see a bit of a pull back up. So you might see something like this coming up like that, and then further sells maybe to suggest some more strength into the pound, and thus weakening the dollar. Weakening the euro. And so then we might also see those sells in euro USD as well. The question will then be whether pound versus the dollar maybe just cancel each other out to a certain extent. That might be one just to keep an eye on. But there we go. The 2 minutes are indeed over. Bupekunda. They are over, so you can trade again. Please bear in mind though that in 26 minutes you have got the governor of the Bank of England, Bailey, is speaking. So that will also be high impact news. So again, 2 minutes before, 2 minutes after that, make sure you're not opening any trades on a high stakes account so you don't get caught out. Obviously, normally we're into this podcast kind of element of this time of our segments. But we are getting some questions, LJ, with regards to your thoughts on why the pound rallied and whether the lowering the interest rate was already priced in. Do you want to give us your thoughts on that? We're obviously getting the red folder news on the screen as well.
Yeah, so basically the thing with the pound was that we had basically a fully priced in pretty much that we would have a rate reduction, which we did get. The point to look for was the tangential comments around inflation, employment, general growth in the economy. So, they see the higher outlook, particularly the portion is the inflation component. We're still running at 3.6%, which is well above their sort of neutral rate that they want to see. They've dropped rates as far as the growth portion and employment portion. So they need that to stimulate the economy. The other part is that inflation part. We now do have a bit of a better forward outlook as far as the tariffs regarding Trump and what he wants to do. There is still a bit of question around the tangential tariffs per the UK's trading partners, but that is still getting worked out right now. So basically, they've highlighted that the inflation portion is still the main component. That at the end of the day for central banks is the primary to look at. Some central banks have just the inflation mandate. Others have the employment and inflation mandate. So the UK tends to lean more on the inflation portion rather than employment and growth of the economy. So hence the inflation portion still being higher, they need to lean into that. So this will probably be the final rate cut. Part of it is also matching the fact that the euro has dropped rates basically to their central rate. And obviously the UK and the euro, even after Brexit, they've broken up, but they're still big trading partners. So they somewhat have to match each other's movements just to keep competitive as well. So that we're basically seeing that we've had this rate cut, but from here it will basically be kind of a foothold for now for the UK, and hence we've seen the strength in the pound, basically seeing this as the end of cuts for the time being. So that's why we've seen that strength. So you always have the basis on the relative move, the expectation of the market, not the actual move. So just like we were talking prior to the segment when Anastasiia was on, I was saying it's a buy the rumor, sell the fact type situation, being that you get the rate cut, but the actual move is to move higher. So you get pound strength rather than weakness.
What's also interesting is we're just seeing here coming up on the screen, if you look on the screen on your left-hand side, guys, you'll see that there was a second Bank of England vote, a choice between 25 basis points or no change. And it was the Bank of England rate setters voted twice for the first time ever. So that is also, a suggestion of maybe some unease, some uncertainty with regards to it. So the decision itself, as LJ always says, very often, I know you always say these things, LJ, it is not necessarily the headline figure that is going to move the market. It is going to be the stuff that sits underneath it that's really going to move things. The market expects this, the market got what it expected. Why are we moving? There's commentary, there's lots of other bits and pieces that gets us to those decisions, and that's what moves the market, right?
The surrounding context, you've got the release, that means it's priced in. The surrounding context gives you the forward projection, and then so the market starts pricing for the forward projection, not necessarily the current print that we've just got. And that's how it goes.
Yeah, there we go. Heading back to our esteemed colleague here, Richie Rich. Rich, we were talking about how we can kind of, fine tune our abilities to catch these moves and catch these positive green days. What are your thoughts around trading the news and all those sorts of things? Do you think is that kind of linking into that monkey mind of adrenaline and dopamine and all that lovely stuff? Is that kind of almost a little bit too much of a slippery slope to avoid?
When you were saying, just a heads up, guys, we got the news event coming out in 2 minutes. I see one of the comments in chat said, "Where's the fun in that?" And I think that kind of sets the tone for us as traders. As we get a kick out of watching charts move, even if we're not trading them. Sometimes just watching these aggressive moves come out into the market. But you were saying like these subtle tweaks. Choosing to trade news and not trade news is not a subtle tweak. It's like an absolute fundamental skill in our trading. So we need volatility in the markets to make money. We need the markets to move. So this is why I don't trade the Asian session. I'll typically just watch price action go sideways. I trade GU and EU, so I don't get that much movement in that time. So it's perfect time for me to sleep and watch the markets during London Open or New York Open or during news events. Interestingly enough, when we get these news events, it will often drive price to very key levels. And I've seen price go to areas that, we think, hey, we could get a rejection here. Price will just absolutely barrel through it. Other times it will hold and stall, maybe create a slow reversal. So it's definitely worth watching the market in these kind of, at these times. But it's like recognizing most traders need to ride bikes with stabilizers on. Sorry if it triggers you. I'm saying most traders need to ride a bike and have rules in place and a little bit of a guideline.
You need guardrails, right? You need
guardrails when you're bowling,
you need guardrails. We were talking about it this morning with LJ about the AI thing, right? The AI needs guardrails, right? For anyone, we need checks and balances, right?
Yeah, and if we're trading news and we don't have these kind of basic things in place, and I'm talking about a framework for entering, risk management, a set of guidelines, maybe a trading plan that actually helps keep us focused. Like without having these three basic things in place, trading news, that's hardcore mode. That is. I mean, there's LJ's going to know some pretty good metaphors that go along with this. And I saw you make I think it was a Rust reference the other day, and I picked
1v1 on Rust.
That's it. Yeah.
On Warfare 2.
Yeah. This is like going into a
Call of Duty days. Man. That's where things get settled. 1v1 on Rust. Intervention, no scopes only. That's it. Some will know. Some will know.
Yeah, I knew. That's why I put the emoji next to it. Do you know? A friend of mine the other day, he said he said something that was a little bit hard hitting for me. He said, think about where you put your energy on a daily basis. There's things that you can apply yourself to, and it cares about you. The market doesn't care about you. And it was a pretty kind of just a good reminder that, you know what, I turn up to the market to do a job, and I turn up to the market to get paid. And the best chance I have of that is applying a framework, not emotions, not fight or flight mode, but just applying a framework that has edge to it. And that was kind of a nice reminder that, you know what, the market doesn't even know I exist. So when we're sitting there looking at these news events thinking, here it is, time to get paid, time to get funded, time to get social acceptance, time to get this massive payout or this phase one challenge account out, a drawdown, whatever it is that we're doing, when that doesn't quite go our way, we lose every single thing that we attach to it. All these things that we go, wow, they're going to get a knock at the door and it's going to be payday today. We don't just lose 1R. $300, whatever it might be. We lose all of the emotional effort that we put into it. And it was a reminder when a friend said the market doesn't know you exist, the market doesn't care about you. It was like, well, why do I care so much about something that doesn't give a care for me? So I was like, how can I do my job in terms of being a trader and give it the least amount of emotional effort possible? I want to do my job at a 10 out of 10, but I want to give it 1 token a day. And what I see in a lot of traders is they're giving it 7, 8, 9 tokens a day of their energy. They're giving it a lot of effort. And what they're getting back isn't a reward relative to their effort. And that's where it's just a really good opportunity to say, am I managing my risk around news? I trade news. I don't mind saying it. I trade news. I just drop my size massively because I can't guarantee what my slippage will be like. But typically I'm waiting for the aftermath of news to come out and then I trade what I see thereafter. So it's being more intentional with our actions. And I know it's super boring, but would you rather be bored and get paid or excited and being treated like a casino where you'll come out typically with the odds against you? There are little things we can do to stack the odds in our favor when it comes to trading. And they're normally dulling down the excitement and doing less.
What do you think then of this whole, like, you know, what we're talking about, the music, like this music that's playing right now? This is the tune that's had me going. This is the tune it's kind of high energy. It's got some, it's got some movement. It's got some kind of buzz to it. What do you think people need to be careful of when they're kind of trying to fine tune and find these things that work for them? Because look, a day and a half of me trading with this music playing in the background, okay, great, wonderful. I might blow it all tomorrow because I suddenly get so high on the dopamine that, I get too overly confident. What do you think people need to be careful of when they're thinking about these things and kind of trying to find those little 1% gains, right? Because the 1% gains for you are going to be different than the ones for me and the ones for LJ and for each person out there, right?
I'm going to need your help with this. What is it? What's the name of that thing where it's like somebody will score a goal in football and they'll go, these are my lucky socks. I've never taken these socks off. Superstitions. Okay. So I think like we need to be a little bit.
I'm 100% superstitious.
Stevie Wonder.
I'm totally superstitious.
Well, I noticed because you've got the same music on. You're like, hey, you know what?
Absolutely.
Like,
it worked. Don't break it. If it ain't broke, don't fix it.
Hang on. 100%. You're like, look, I played this music yesterday. I got this result. I will play this music today. I'm expecting, and that's what I want to be a little bit careful of, right? Because we can do, this is like, trading is crazy. We can do the same thing every day and we can get such a radical different result. So, I mean, Mike, if you find the secret sauce through music, please, don't just cut me in on it before you
screw AI. It's all in the tunes. It's all in the tunes. That's what it is.
Yeah. Just take
What's
account.
That psychologist that first did the bird feeding thing?
What was that?
And made them come. Yeah, that's what it reminds me of. And they do a little dance to make the food come out like every time. That's what it reminds me of. I don't know if you guys know that experiment, but there's been many of them.
No, I haven't heard of that one before. Wait, what is this dancing birds? How does this help us with our? I'm going to.
It's just that same thing where you correlate something happening versus if you do it again, it will happen again, right? And build that bias, like you were just saying. Yeah.
You just get used to something happening, in certain conditions and everything else, and you just keep repeating the same actions.
Yeah, so like attaching to music equals this then happened after the music, therefore I listen to music, the same action will repeat again, right? Yeah. So you used to have the birds doing like, they get fed at a certain time, they do a little dance, and then the ones that would do the dance and then they got fed, each time they'd start doing the little dance again, almost like doing a rain dance, and then it rains, right? That type of thing. So, which it's completely dictated by the humans feeding them. It has nothing to do with the dance, but they would do that to try and bring it on, right?
That correlates. So
I see what you're sort of highlighting. That's what I was,
in trading that comes hand in hand, doesn't it? Like we do all these things. We go, well, I followed my plan and I've adjusted my risk and I've done this and I've done that, and then the market just goes, right, time for a big slap for you today, and you're like, well, I don't get it. Where else would this be true in the world? Where like you work an office job, and imagine you sit down, you do the same job every day, and at the end of the day, your boss comes in, puts an envelope on your desk. You open it up, says, congratulations, you got $100 today. You say, no problem, that's good. I'll come back, I'll do it tomorrow. Next day, you sit down, he puts an envelope on your desk, $300 is in this envelope. Third day you come in and there's just minus $400, and it's like, what? And then can you imagine that, like, on day 4 you've got to turn up knowing that you were not only not paid, but you lost money on day 3. Day 4 you've got to turn up and you've got to apply yourself. And this is what we have to navigate as traders. And I think if ever I was to try and explain it to someone in the real world who works a real job, typically we provide services and we provide labor, and we get a very similar result, especially in employment. Now, when you start going self-employment, you start noticing a little bit of variance, that maybe you can get a bit better, you get paid a bit more, you might be knocked on a job, you not get paid for it, something goes wrong, it comes out of your pocket. But then we go into trading, and then it is like, I'm going to choose, and this keyword, choose, I'm going to choose to accept and surrender any security of income, knowing that I will do my absolute best, and it's a probabilities game of getting paid. So the way I help frame that in my mind is, I write checks every day. Every day I trade, I write checks to the market, and I save them all up, and I keep sending them off, and I keep writing these invoices, and one day it's just going to cash, and it could be at the end of the week, could be at the end of the month, could be at the end of the quarter, but the market fortunately pays me a little bit more than it takes from me. My job is just to keep writing the invoices by placing good quality, valid trades.
I was just about to say to you, you're writing checks. I actually thought you were actually writing actual checks. I was like, dude, you know it's 2025. Who the hell is using checks anymore?
Sign them off, yeah.
There's youngsters out there that won't even know what we're talking about writing a check. They've never even seen one. I remember I used to work in WH Smith's when people would come in and they want to pay by check. You'd have to take their card and you'd have to take the check and you'd have to
go to the bank and
no. You had to use like these kind of things where I don't know what you did, like a stamp on the check with the card to say that you had seen the card and everything else to validate it.
Right.
It was proper old school. Anyway, Maya is in with us in the last 10 minutes. As we go into the last 10 minutes of this segment, Maya is asking us to revisit an area that I think is going to trigger probably a lot of people. So Maya was the one who got us into the AI conversation this morning, Rich, on the ADL stream. And Maya's now come in and would like to know, is trading gambling really? Now, unfortunately, Maya, I wish you'd asked this question at the beginning of the hour, because somehow I feel as though this topic could go on and on and on and on. Good, but it is one that we have discussed many, many times in the past, and it always triggers the chat. It always gets people in kind of triggered to say, oh, I'm not gambling and trading, I know what I'm doing, or this, that, and the other, right? LJ's face is telling me I think I know what his answer is going to be. So LJ, very, very, very quickly, so we can get the juice out of Rich. You think that trading is gambling, yes?
Not quite. I think trading is not gambling. I think gambling is gambling. You know what I mean? So it's always the approach, how you're approaching it. So the same thing if you went to actually a traditional gambling outlet, say you're counting cards or playing poker or something, you can definitely just slap money down, take a chance on something, not really, just have like a vibe or a feel or something. That's gambling. You don't have real like data core elements, something where you're deriving some kind of like input from, like a firm, data point, right? If you're going and counting cards with blackjack, doing 21, you understand the probabilities, you understand that you need, most people think a hand of 18 is pretty good out of 21. You need about 18.8 to beat the dealer. So if you got 18, sorry, you're out of luck. You're going to lose money. Terrible day for you. So it's that kind of stuff where people have no idea, and then they'll put down the thing. The other thing is where they come in with a certain betting size. They're not betting appropriately. So the same thing we talk about in trading, where we're talking about 0.25 to 0.5 or 1% risk. People go to the casino, for instance, with $500, and they slap down $100. That's 25% of your thing gone right there. So even people that do card count and do that professionally, they'll have a massive bankroll of like 100, 200 grand at least, and be betting like 1% each time. So that's a lot where that derivative comes from. So the same thing with markets. If you're trying to take massive swings and just go hit it out the park, you're not trading. You're just trying to take, bats at the plate and see it fly, and that's it. And you're going to end up in a bad position. If you take something very calculated, you've done the prior research, whether you do back testing, forward testing, whatever it is, you gain the data, assimilate your approach to the market, your understanding, what assets you're trading, where the risks are, where the upside is, and you've calculated everything. Now you've got an actual approach. You've got a strategy. You've got an idea where you are. You're not just slapping something down on the table and seeing what happens. And that's what I would say. So either your trading can be trading or it can be gambling. It's all about that approach, that prior preparation, whether you've done it or not. If you haven't done it, gambling. If you put in that work and you've done the work firmly and truly, not lying to yourself, now you're trading. And that would be my summary.
Rich.
I cannot top that because I take such a very similar stance on it. So I've had this conversation, I don't know how many times. I stopped counting. I remember one time I was like, I got my trading plan, my risk management down, I got a proven profitable edge, I'm executing on it, I'm funded, I'm getting payouts. And a family member said to me, oh, so you just gamble then, do you? And I remember there was been times where people go, how much you earned this weekend? I was like, well, I'll tell you what. I'll tell you how much I've earned this week if you tell me how much you've earned. And they go, I'm not doing that because I work a proper job. I said, oh, okay. I said, I don't. They said, well, no, you just gamble. And I said, okay, well, what's the definition of gamble? Let's look at this. And they were like, well, I said, okay, let's paint a picture. If I went into a casino, would I be gambling? And very quickly, this person was like, yes, you would be gambling. I said, okay, hang on. So you were quick to say I'd be gambling, but why? And they were like, because the odds are not in your favor. I was like, right. If I owned the casino, would I be gambling? And they had this pause and they said, well, no. I said, well, why not? And they said, because you're not gambling because the odds are in your favor. I said, right. I said, now, obviously you don't understand too much about what it is that I do, but there are little things, as LJ suggested, there are little things that we can do that put the odds slightly in our favour. And so I relate it to work. If you have a job, you have a track record of being paid. You turn up next day, next week, next month on the basis of, hey, my track record supports I've been paid. If you cross a road and it's safe because the orange light is on, the traffic lights, you have a track record of you've been successful at it. And everything we do is based on evidence. And so we build these ideas that actually trading is gambling. And I believe for a lot of people, trading is and will remain gambling because they haven't built an evidence-based system that proves that they have managed to move the odds into their favor, not on a trade-by-trade basis, but on a probability over a bigger sample size. And I believe that once traders are able to do that, that's when I personally transition from being a gambler to being somebody that can successfully be paid and trade, because the odds are ever so slightly in my favor based on what I've been able to prove over hundreds and hundreds, if not thousands, of individual events. These events are called trades. So lo and behold, also in the UK, obviously we don't go into tax advice, but we get taxed. Okay. So I'm not even going to go down that rabbit hole, but I guess define what gambling actually is. And if you can move the odds into your favor, then I would argue either you're gambling with the odds in your favor or you are now creating a successful venture. Business. Anyone who goes into business for the first time, starts up a brand new company, are they gambling? They got no track record.
Yeah, I was going to say, business is a good example as well. And I think it also extends to other things. Like if you go to the gym, a lot of people just turn up to the gym and they get no results for a year, 2 years. I'm sure if you guys go to a gym, there'll be a very small few who are actually properly fit, built. And then everyone else seems like, have they just been here a week or something? Because you might as well say they're gambling as well, right? Because they haven't put the work in to get the proper information, nutrition, training, all of that kind of stuff, and then they would see the results. It's not like this is you're blocked from it. It's just a lack of information. And I think people do the same thing in everything in life, whether it's business, gym, like I just said, also relationships. People don't put in the effort to see a relationship come out. most fail, right? If you don't do that, then yes, no surprise it fails. So the same thing if you come to something like trading and you're just trying to slap something on the board and see what happens, then you're not going to get results, right?
So going back to AI, I've asked ChatGPT to define gambling, right? Gambling is defined as the act of risking money or something of value on an event with an uncertain outcome, primarily driven by chance, with the intent to win additional money or material goods, right? I've then asked, and it goes into a whole thing of poker and lottery tickets and sports betting and online slot machines, everything else. Is trading gambling? Great question, and one that stirs a lot of debate. You don't say. The short answer is trading can be gambling, but it doesn't have to be. The difference lies in intent, strategy, risk management, and knowledge. Essentially what you two have both alluded to. When it's not gambling, when you use a tested strategy with an edge, apply risk management, decisions based on analysis, focused on probabilities, not certainties, you're consistent, disciplined, and track performance over time. This is how professional traders operate, like businesses managing risk, not like gamblers chasing wins. Exactly. When is trading gambling? Trading becomes gambling when you're trading based on emotion, gut feeling, or FOMO. There's no plan or system, just hoping to win. You're risking more than you can afford to lose. You chase losses or try to get even. You treat it like a quick money game, not a long-term skill. In other words, the overlap. Both involve risk, and that's the thing. Both gambling and trading involve risk and uncertainty. They can both offer rewards or losses. Both rely on decision-making under pressure, but only one has the potential to be approached with a measurable edge and long-term positive expectancy, and that's trading. There you go.
So a lot of people
AI has decided.
So a lot of people don't make it into trading. Is that what AI is telling us?
Yes.
But it's a behavior pattern, right?
Mm-hmm. Absolutely.
Okay. So then I guess
it's the same thing with everything else in life as well, right?
Behavioral choices.
Yeah, how close you are to information on whatever you're doing. Otherwise, it is a gamble because you don't know something. Then it's completely unknown, and therefore, by definition, full risk. The closer you get to information and an informed, knowledgeable position, you're moving away from a gamble because now you've actually got something to stand on, a foundation that you can work off. And whether it's trading, actual, poker, blackjack, whatever, or other aspects of life, the way you get better or exceed or excel in that is by getting more informed. Same thing with studying or university or whatever. If you're more informed, you turn up to the exam and you do really well. If you're less informed, then it's a gamble whether you get the questions right and you crash out.
Yeah. I've said it many, many times before, and this is the last I'm going to say on it. This time it's semantics, right? It's the fact that the word gambling, the notion of gambling, it has a societal stigma, and that is why it evokes such emotions with people when people suggest that you are gambling when you're trading, right? You almost become defensive because there is this negative societal taboo about, you're gambling, you're taking too much risk, right? And that's why it then becomes this huge hot topical debate topic. That's for another day, I think. Guys, thank you ever so much as always. Those of you watching, stick around because we've got Pedro up next for the next segment of the live trading room. Rich, LJ, always a delight and a pleasure to spend a little bit of time with you on a Thursday afternoon. So thank you ever so much, gentlemen, for sharing your thoughts and insights. Keep an eye on that gold sell potentially, guys. We'll see if it plays out or not. You can see it on the screen right now. In the meantime, you can catch LJ and I tomorrow morning, 11 a.m. UK time, over on the ABL channel. Otherwise, we will see you guys next time. Cheers, gents.
Ciao for now. See you guys.
Okay. Okay. Can I just increase slightly my image? What's up, everyone? Good morning or good afternoon. How is everyone doing? Glad to be back. Let's take a look at the market. Let me know what are you guys looking at. Yeah, that's not the option. Did I do something? Not sure. Okay. Okay, perfect. I was just seeing something else. Gold. What's up, David? All right. I'm good. I am good, to be honest. I haven't really had much time to trade today, and I just noticed that the euro pound is gone. So that was a nice setup. Euro dollar wong. Okay, let's take a look at that one in a bit. So keep sharing what pairs are you looking at, what assets you are looking at. What's up, Luis? What's up, Steven? Dollar yen. Okay, you can take a look at that one as well. So just if you can do something similar to what James did, which is basically mention the levels that you are looking at, and if you are looking for longs or shorts, maybe you can take a look at it together. So let's start with James in here. So James mentioned that he's looking for longs at 116. Okay, do you want to explain your thought process, James? Are you looking just for the retest of this previous level of support resistance and looking for a trade after that, or are you looking for something else? And how are you going to look for those longs? Are you going to just place a buy limit, or are you going to look for any kind of confirmation? What's up, Shaka? Sky Aiden, are you asking me if I'm live? Are you asking if I'm live every day? You mean in the live stream? Evis, good short, because euro is actually going down. What is your target, Evis? What target are you looking at on the euro dollar? Because the euro did that move since NFP. So we did have that impulsive move to the upside, and now we got really close to this level. So if there was a zone to potentially look for shorts on the euro dollar, I think this would start to be one of them. And the reaction actually is quite good so far, and you may actually have a continuation to the downside. Maybe there's still the risk that price can still go a little bit deeper into these levels if price wants to, but from here I think it was a little bit of natural level that we should be expecting some selling pressure, and what a move. Okay, maybe for some of you this may look like a fair value gap in between these two zones, I presume, something like that. Maybe you would look at this and think that's a fair value gap that maybe price end up reacting from. For me, I would also still see kind of a supply level in alignment to this the previous low, but in reality, it was a good reaction on the euro this morning. So yeah, Evis is on the short. Gold tech tide. We are going to look at gold in a second. Okay, I'm going to save your comments so we can look at gold in a second. We are now on euro dollar, so let's get any analysis or bias on euro dollar. What you guys are looking at. Let me know. Let me know in the comments what you guys are looking at on the euro dollar. Maya Trader, I'm going to save your comment as well. What's up, Andreas? What's up, Pedro? Looking at house in New Zealand, long in 4 hour and below. Any thoughts? Okay, we're going to look at that one as well. So we're looking at the 4 hour and longs. Okay, you guys look those exotics. Giveaways, I'm not in control of that. I'm not sure if you're doing any giveaway today, but you can press the like button, and the more you subscribe, the more we grow. For sure, we are going to keep giving you more giveaways for everyone, because you are a big part of our community and the reason why we are doing what we are doing. So you definitely will continue to be compensated with those giveaways and all the content that we provide in here. Okay, let's just look at James, because James was the one that actually mentioned the potential long at 116. Just a retest for a continuation of trend. If we see dollar weakness, but only after a confirmation. That's my question. What is the confirmation, James? What are you looking at? If the XY if DXY continue uptrend, I'll change instance for sales. All right. What confirmation are you looking, James? That's what I'm looking. Are you looking for a break? Like you mentioned that price continues to go here, and now you have a break of structure or change of character or whatever, and then you try. Is that a moving average that you're looking at? Is that a trend line? Is that what confirmation are you looking at? Ev is mentioning target. Target 16334, 16334. Yes, almost at target 10. 334. We're really close. We're really close. We're going to be here to celebrate your target. I believe you can get there. 16334. Yeah, I think Evis, I think we are really close. Yeah, favorable gap, POA, within discount for me. Yeah, that was the reason, right, for your entry. Yeah. Yeah, I presume many people will be looking at this level. I like the fact that we actually got close to this structure. Even when looking at the Euro index, it's exactly basically same thing. So when looking at the Euro index, we got into this level in here as well. This was actually kind of one of the last demand zones that price just smashed through and should have respected, but it didn't. And there you go. Now, yes, there's still maybe the option that price can still go a little bit deeper into here. Totally fine. But for now, I think this is a good reaction. And actually, I would like to see that. I would actually like to see eventually price coming up in here, faking out a little bit of this top and maybe having a bigger reaction. But for now, good reaction. I think maybe at normal target, maybe here on the Euro index could be also close to this level, which takes us into $0. Also close to this 116, exactly as James mentioned. Actually, I have a rectangle as well in here because that's a level that I think yesterday maybe price left behind, and we are looking closer to this, 116, 11 or something like that. No, I'm not interested in looking for any longs. I could have been looking for a shorts like Evis did, but now longs is not exactly for me. I think longs, the opportunities to look for longs was more in the first days of the week to look for this movement. That was the bias that we had, and that happened already. Okay, so if you did manage to catch that long on Monday or Tuesday or Wednesday, perfect. Now I'll be a little bit more. I'll maybe need some confirmation, like just James said. I would look to target. Okay, that's curious as well. I would look to target zone 118. 118. Oh, we are looking all the way up. Okay, interesting. So you are looking for something like this eventually on price, even higher. You are looking at 118. It's even higher than this top. Okay, interesting. Yeah, we'll see. We'll see if that plays out. Upgrade trader mentioned it'll give me the best trade of the week today. So you shorted as well? Uptrade, did you short as well? I closed 1%. Adrian, buy from yesterday. Yeah, goodbye, Adrian. Where did you get long, Adrian? Yeah, Euro is just crashing. Where did you get long? Shorts Euro. Okay, Tim's a key. L signed as well. Short on Euro dollar, looking for take profit as well. Oh, your take profit is even below that. So you are looking for a TP at around, let me just break it in here, 1583, 1583. Okay, yeah, it's close. I can see more or less the level, right? So we are looking more or less around this level, or if you consider something like this. So yeah, I could see maybe that happening, but of course, be careful with this one around 116. Like you mentioned, 44 pips of Euro selling from yesterday's high. Yesterday? Where was yesterday high? This top in here. So you went a little bit into drawdown. Was that what happened, upgrade trader? If you had this drawdown and now price is moving in your favor? As if you sold it. Unless you sold it in here now. Or do you wait for this fake out and you sold it in here? Because that's yesterday high in here. Yeah, that's yesterday high. Break of structure. Okay, so we're going to be looking for a structure, break of structure. And you have M as well. M on the 5 minutes. M crossover on 5 minutes time frame. Okay. No problem. James, that must have been some hanger trading in there, right? Some revenge trading, like kicking keyboard. Like I think everyone has done that. I even have a kind of a something to put my wrist on top, and sometimes this is the one that I want to, when things don't go my way. Well, that was in the past. Okay, I'm not hanger anymore. I'm more a relaxed person. I take like deep breaths in and out, so I'm more relaxed. Okay, but yes. So I don't destroy my keyboard. If by any chance I wanted to kick something, it will be It will be this. All right. Adrian, you mentioned 116. Adrian, I don't remember what was your comment. You closed yesterday. Buy from, okay, where you will get wrong. 116.052. 116.052. Okay, yeah, it was on the breakout. I got a similar long on the pound dollar yesterday. It was actually quite a lucky buy, to be honest. I had target 117.639, 117. So what happened? Because price never got your target. Are you still long or did you close it? Not today. Charge Gil is forming. Not today, Charles. Gil is following Gil. Yeah, we just had interest rate, right? What was the situation on interest rate? Yeah, there was the cut. Oh, but it was more. It was closer the votes than expected. Okay. So it was literally just by one voter, one member that that made the difference. Okay, that's more of a little bit of a decision there. What's up, Tiago? Bom dia. Bom dia. DAX went all the way up, Tiago. Kept on moving, but I moved stop loss break even. Okay, 1%. Okay, that's what you did. Okay, you manage your trade. Not today. Okay, Pedro farm. Not yet, Henry. I sold from 166.83. Okay, I think euro is done. Okay, I think this is euro index, euro dollar. Let's jump into another chart. Actually, I'm just going to show quick euro pound and the trade that I didn't take. Why did the euro drop on GBP interest rate decision? That's a good question. I'm not sure if that was a euro move or if it was a dollar move. And the reality is that the euro pound actually moved quite a lot. I'm not really sure if that was maybe the move on the euro is maybe more because of the dollar itself, and not exactly on the pound. The pound, I think it was just an initial reaction, and as you can see, pound is already starting to move a little bit further down after this initial push up, which is actually kind of a nice reaction from here, to be honest. So I'm not really sure if the correlation is euro drop because of the interest rate decision on the pound. I'm not really sure if that was the case. After it tested yesterday high, now I got it. Upgrade trader. So you entered in somewhere in here. Okay, after it tested it yesterday high. So yep, this is not what I want. Let's just see if I got it. So this is yesterday high. You may have that fake out. So maybe was it somewhere in here that you got this move, this beautiful move to downside? If it was, fantastic, because we had also the breakoff structure, and this is actually a great level. This is actually a great level. If you enter in here or somewhere around here, great entry. Okay, oh, this is not what I want. That's a great entry. Whoever entered in here, he got my respect. Because this is a great value trade out of the way. I don't know where. You can go back to that to somewhere in here. Okay. So let's see if you get there. You're probably right. Thank you. You're welcome. News could be bullish for the XY. Possibly we'll see after the market movement. Good morning, Pedro. Where is? I have no clue, to be honest. I don't know where Victor is. Maybe Victor is going to come up afterwards. I'm not really sure. But let's take a look at the euro. I think we may have agreed that maybe price can get closer to this level. Okay, somehow. I think we can agree that maybe we need to see some kind of confirmation to see what am I doing? Why is this disappearing? I think we can agree that maybe we need to see some breakoff structure to confirm if price actually wants to go higher. I think you can agree that price reacted from an interesting level that could have seen some selling pressure, which is around here. And I think personally, we can agree that maybe price has still the potential of going a little bit higher to maybe retest this extreme. Or if prices want to crash from here, it can also, because it's kind of a higher time frame level, and the price just wants to go all the way. I think it can. We will see. Okay, I think we will see what will happen. So that's euro. That's my bias. I think when looking at euro index, that was exactly the same thing, kind of price getting closer to something in here, and maybe just coming back into this next this weekly structure, I think can eventually be an interesting one. And nevertheless, I think we may have some more bearishness that eventually price can go towards to. Okay, I'm not really sure if this is the bottom. I think eventually the dollar index could go a little bit maybe closer to these extremes as well. Maybe now goes up first, then maybe retraces. Now who knows what the direction is going to look like. I have no clue. But I will set up some alerts in here so I know when price is coming back close to these levels, I will be ready to actually be able to look at them. All right, what do you think about gold? Yeah, let's jump into gold just afterwards. Let's just take a look at pound dollar just because it's quite similar to euro dollar, and then we jump into gold. Okay, before pound dollar, let's look at euro pound, and this is the trade. Why did these meetings? Oh my god. You see, guys, when you are actually not just fully day trading, that's what happened. When you have calls in between the morning and whatnot. This was a great move. Okay, great move on euro pound. That was a supply I was looking for. It has a beautiful left shoulder as well. Price is reacting from a good level on the higher time frame. Good reaction from this extreme. And this level in here looked amazing. It was a beautiful supply when you're looking in here into the lower time frame. Whoops, let's just bring it in here. Yeah, beautiful, beautiful supply into this structure. Oh, let's just fix that one. And yeah, perfect. So that was the plan. Something else that you have, beautiful manipulation or fake structure in here that you can literally just fake out this top and then push it to the downside. We also have kind of some breakout structure. Price never really got to here, so it was a bit of space. That's perfect. And then you have this beautiful trend line compression on the way up, and then price pauses, and then the spike, and then the rest is history. That's exactly the type of setup I love to look for. I like to trade. And however, I was in calls, I was in meetings, and I didn't manage to pay attention to when price actually started moving to the downside. My idea of entry, it would have been after this, okay? So somewhere around here, that would be my idea of entry to look for the short. And then, of course, price never will retrace back in here anymore, so trade is gone. Trade is gone. Nice move. It just basically fills out this compression. And easy. Like when you have compression, it's a great example of a compression move. What means compression is that basically price is taking every single demand on the way up, okay? Which means that there's no more demands in here. So price is just literally free to smash it, okay? Until he finds the next demand zone. Basically, that's what it does. Yes, euro pound. Beautiful. One more for to add to the journal of the missing trades. In there, yeah, that was quite of a good one. Gold, yeah, we're going to look at gold in a bit. That's Commercial Mascarado. Great analysis. Hello, Steven. Okay, guys, let's take a look at gold. Okay, start sharing your ideas about gold, but let's first look at the pound, because pound is then moving to the upside. That was a trade yesterday I took. It's definitely not one of the trades that I tend to trade. I'm not a continuation trader. Trend continuation trader. That's kind of the way you should say it. But this is one of the rare occasions where I may try to find it, okay? The way I looked at it, it is price had all this space to eventually fill in here, and we had literally broken this level, and I could see literally the dollar moving down, and I could see the euro dollar moving up. Actually, euro had already broken this structure beforehand, okay? So euro actually managed to break some of these before. So euro broke, it was, what time was it? 11, 12, something like that. And the pound, actually, when we broke it at 3 p.m. Okay. And there you go. I was super lucky. I have to admit, I was super lucky. I was not expecting to get filled on this trade anymore because I placed my entry when price was somewhere in here. I placed my entry when price was somewhere in here and price was moving. And I was wishing for price to do this and then get me filled. But when I start seeing price just going, I thought, okay, maybe price is gone. I actually left my PC at this time. It was just before I started the Portuguese live stream, just kind of, around 4 p.m., something like that. I usually go for a little bit of a rest before I jump into the live stream. So I left, and all of a sudden I came here and I saw that price just did this. It just literally came out the way, tucked me in here, and then it went to my target. That was one of the luckiest trades. Sometimes it happens. Sometimes it goes in our favor, this luck. Literally price just spiked. I have no idea why it spiked. I like the level where it spiked, but was literally retesting the support resistance plus this demand zone. That's why I placed my order in there. And then when I came here, our price was already hitting my target. So yeah, why not? Perfect. That's exactly, actually the entry is here. To be correct, it was there. So that was a nice one on the pound dollar. And something on the pound dollar. So we never managed to break this double bottom. So I'm looking a little bit into the higher time frame. We never managed to break this double bottom. So that's something I'm going to be aware of. Maybe price still wants to go and take this big double bottom that's in there. Now the question mark is, where can price find some selling pressure? Okay, so now with the news, yes, we spiked above it, we went all the way, and this is not about the level where price is reacting right now, because this was a decision point in here. It was a decision point to actually break this low, so that's not about level. But who knows if price wants to go a little bit deeper into here. So yes, we see euro dollar moving to the downside. We see dollar moving to the upside. So that's going to be interesting to see what pound dollar is going to do around this level. I'm not still 100% sure about this any short in here. I think price hasn't really managed to break any key level of structure at this point. So we'll see. Maybe price can just retest this level, continue until I have a clear break of structure. I'm not going to be looking for any kind of reversals just yet until maybe price gets super expensive. I'm not really sure. If you guys have any buys on the pound, if you want to share, I'm up for it, because I'm not really sure what to look for. Okay, let's take a look at gold, because you guys are mentioning gold, so we're going to take a look at gold. Why can I save comments in here? I'm very advanced. Hope you are doing well. All right. Okay, let's take a look at gold, because gold actually is in an interesting approach. Okay. I tried to solve gold twice. Actually, I had a break even on gold. That was on Monday. I had a break even on gold around here. Okay, I did try to sell it in there. I got filled in here. Price, I was already kind of 2-to-1 or 3-to-1. I usually actually end up taking some profit. I didn't, but I was looking to see price would go down. When price went up, then I ended up getting out at break even without losing it. That was good. Price then actually went against me. That was something that I was kind of expecting still, eventually for gold to go a little bit higher. Now gold finally took this top. Okay, so gold finally took this structure. It did. Let me just prove it. Yeah, it took it slightly, and maybe still wants to go a little bit to this level, right? So this is one of those fair value gaps that you have in here. That again, many are going to be looking to short maybe within this after price reacts from that level. I presume that's something that many are going to be looking at. Now gold, I think someone mentioned consolidation in there. So guys, start sharing your analysis on gold. Yes, start sharing. We have James would look for 333 as a target. Is that a sell? 3. Oh, all the way down here. Okay, so we're looking for something all the way down here. Are you looking for shorts already? Let me just look at previous ones on gold. Okay, Sharm asked, what are my thoughts on gold? I think it's moved towards the all-time high again. We'll see. Okay, we will see. I'm not really sure if price is ready to go all the way. The way I look at it more into this structure is that we are consolidating definitely, okay? So we did create this upper bottom, then price reacted from that extreme, came all the way back to this extreme, and now it's moving up again. I think we may be finding again some selling pressure as price is getting maybe closer to this level in here again. So that's going to be something that I'll be interested in paying attention somewhere around there. Price is definitely starting to lose momentum. Okay, anytime we go up, price kind of gets rejected. However, are still creating highs, right? We are still breaking highs in here, but you are getting to, as you can see, the big move in here, and now price is starting to go up, down, like deep retracements. Derry, let me know if I can add you to the. Yeah. All right. Let me just add you, and then if you want to keep your monitor ready. What's up, Derry?
What's going on? What is going on?
Oh, good. You are just analyzing. We already analyzed euro and dollar. Euro and pound. But of course, I want to know your thoughts on those pairs in there. But now we are into gold. Okay, so now we are going to be analyzing gold. Okay. Let's analyze together, and then you go back. Into the euro dollar.
Yeah. Okay. Do you want me to go?
You can. While I'm maybe reading here a little bit of a few comments. Let me just bring your. Okay, I'm going to bring yours.
Yeah.
Perfect.
Yeah. So with euro dollar, you can see my screen, yeah, Pedro.
Yes, we can. Just try to change this. Yeah, okay, it's better like this maybe.
Okay, perfect.
And just 1 second, guys. Let's keep sharing your ideas on gold because I'm going to be reading your comments and we're going to bring your comments in here, okay? And again, press that like button. Say hi to Derry, of course, because his analysis is spot on all the time as well. So that's perfect. Yeah, go ahead, Derry, if you want to look at it.
Yeah. So with euro dollar, obviously we had news just not so long ago. I'm not currently looking at anything, but for me at the minute, from a 4-hour perspective, there's sort of this obviously liquidity pool at the top. This high here that could potentially get target. For me, I am currently bullish. As you can see from a 4-hour perspective, we are expecting obviously bullish order flow to push to the upside. Whether this will just be a retracement back to what I call equilibrium and then potentially push to the highs, or whether we're going to get obviously a sell model put in then to come down lower and take out liquidity pools further down. But I'll see what happens with that. Obviously, just monitoring that at the minute. We've had that big spike, especially on the hour. You can see it on GU. You can see how that spike to the upside from that news. From the 1-hour perspective, for me, it has currently put in a sell model, or what I would call a sell model for me. We've had the change in the state of delivery, so which indicates to me that we're shifting order flow to the downside. But this is where I have to be careful from what I trade as well, is something that everyone laughs at, is what I call a turtle soup. Obviously, we sweep the high, then sweep the low, so manipulation of both sides. So I'd like to see a confirmation to the downside, so a close below on this hour candle to say that we are displacing lower and we're going to continue lower before obviously we can look for entries to come to the short side then. But at the minute, it's in between a sell model and something that we call a turtle soup, so manipulation of both sides. We could potentially get a reversal here. If this then comes back, this candle straight back into the range, I'd then be looking for potential longs just to take out the buy side liquidity here. So that's from the hour perspective. Again, 15-minute. I won't go into the 15-minute at the minute because I still need to wait for my confirmations on the higher time frame first. So 4-hour, I am bullish. 1 hour, I'm in between because we've got the sell model put in, but also are aware that if we get a pushback straight back into this range here, that this could be a turtle soup on the 1 hour and we could push to the upside. So at the minute is put in the sell model, so could potentially be reversing, maybe just to go back to equilibrium or 50% of the price range on the 4-hour to then obviously push to the upside. So at the minute, bullish 4-hour, 1 hour stuck between a sell model and a potential turtle soup. So I'm just going to monitor that and leave it do what it wants at the minute. But I am aware, obviously, the liquidity pools on the 4-hour are showing for me that we want to push the upside. We're expecting bullish order flow. So potentially we could be continuing to the upside unless the 1 hour puts in that sell model and continues to push to the downside. And again, just quickly, if there's any questions for me while I'm going through this, just fire them away, Pedro. If you could just read them out on this. And then GU then for me, dollar pound, pretty bullish here. You can see from obviously that news candle's made a pretty decent impact to the upside here. Again, respecting bullish order flow. We have just swept what I would call an internal liquidity or low resistance liquidity. So you could potentially, again, get a reversal from that area. But again, for me, I don't predict or react with the markets. So I just like to wait to see what higher time frame gives me, and then obviously zoning then down into lower time frames. But 4 hour wise, we've got this external liquidity draw at the high. Are we potentially heading to take this 4 hour draw out potentially? But again, I'd like to see from a 1 hour perspective, maybe a rebalance to confirm that, and then obviously a reaction from this area where I can then zone into 15 minute, 5 minute, and 1 minute to look for entries, and obviously to go in line with the 4 hour, which at the minute is telling me it's bullish. We are quite extended though at the minute, but we are putting in obviously what we'd call high highs, high lows. So for me, GEO at the minute bullish, but again, I wouldn't trade from like an overextension. I'd always wait for obviously a pullback or back to equilibrium of the price range that it's in. So 50% of the price range, and then look, see if we get anything from there. So EU and GEO, that's what it is currently, what I'm looking at. EU, I do actually like if we get this hour candle closes below here, which we'd call a displacement and a trade below, then I'd be looking for shorts, obviously, to this liquidity pool down here. So EU is looking pretty nice at the minute. If we get that closure of the candle below, I could potentially be looking for shorts from this area. And on top of that, it's also put in a nice SMT. So SMT for me is a divergence between the euro and the pound. So at the minute, potentially we could be looking short here if it doesn't give the turtle soup and continues displacing. So I'll keep monitoring that. But that's what I am currently looking at on euro, dollar, and GBP dollar. Any questions there, Pedro?
Yeah. Are you on replay mode? They are asking or not. It looks like your replay mode is activated or not.
What's that? Say that again.
On TradingView, do you have your replay mode activated at this point, or
no? It's just clicked. It's not.
Okay.
Don't tell me that, Pedro. I'll have to go back and do it all. No, it's not. It was just clicked. Just done a full analysis on replay.
Yeah. Yesterday, you have no idea. Yesterday, I was in a call with a few guys on Discord. I spoke like for 20 minutes. I went as much in detail as possible to then realize that I was frozen for the last 20 minutes and I didn't even know. I was wasting so much silence. And I even ask me questions, guys. No one was saying anything. I was just focused on my chart until I look up and I see me frozen, like I don't move, and I see everyone just like disappearing. Oh my God, for 20 minutes I've been speaking for no one.
I have done it in the past where I've done it in the Discord and I've done it and it has been on replay and someone's called me and I'm like, oh, I've just done 20 minutes of a breakdown. It's on replay mode.
So how are you seeing now these divergence between, since the pound moved to the upside because of the news and the euro actually moved to the downside? How are you going to kind of look at these differences now?
Yeah, that might be confusing there. So obviously with a divergence, which is more for the turtle soup, what I'm looking at. So I've usually got the split screen on, but it's too small for people to see. So for me, I'm looking for it for the divergence here from this low to this low here. So EU's taken that low, and you can see if you look, this low was at 2 a.m. and then this low here. If you get the 2 a.m. low on here, 2 a.m. here, that hasn't been taken this low. So there's a divergence now to the upside, which obviously goes in line with why GU is pushing to the upside, and obviously that news. So for me, the divergence between the two is more for if this turtle soup is going to play, which will give me an indicator that, okay, the liquidity has been swept on EU, hasn't on GU, and now we could potentially get the reversal for the turtle soup if we get a displacement straight back into this range on this candle. This would then confirm for me that obviously the liquidity has been swept on EU, but it hasn't on GU, and then obviously gives me a confirmation that if it comes back in and displaces back in, we'd be looking then for longs to go in line with obviously GU. So bullish to take that 4 hour high.
If the euro dollar goes a little bit lower, let's pretend that euro dollar, I don't know, goes like, because some people on the chat, they mentioned that they're looking maybe for 116, kind of under test of this previous level of support resistance. I think it's where you have no, that's my mouse, no, it's not yours. Are you still then going to continue to look for longs if the euro dollar goes a little bit deeper down, kind of further down before reversing, or it will be now in this moment you want to reverse already and then
Yeah, so if this hour candle closes bearish, then I'll be looking for shorts, because it then confirms that we're not going to come straight back up and it's just a grab of what I call liquidity. If it obviously displaces through, then it's not a liquidity grab. If it comes back up and displaces back into the range, then for me it's the liquidity grab to obviously activate or play the turtle soup, as I call it.
To which we have now this 1 hour to kind of wait to see if price comes back into Okay.
Yeah,
Yeah, we have here Sandubi. Yes, he did mention turtle soup. We kind of talked already about that last time. Yes,
Stupid
it's like
things, I know.
ICT.
Yeah.
It's the it's a dairy soup. Okay, it's basically what you're talking about in here. Okay, so we are a little bit. So let's imagine then the euro-dollar actually closes below.
Yeah.
Then maybe you are positioning yourself or thinking that maybe euro-dollar wants to go a little bit lower.
Yeah.
So how then you're going to play with the pound-dollar? Do you still think that maybe pound-dollar may go lower as well, just because euro goes potentially turns that down, or is there any level on the left side that you think that maybe pound-dollar could react to that?
Yes,
Kickstart?
exactly. So
where are those levels?
Of course, this high here that I'd call internal liquidity has been swept, so we could see now potentially a reversal from here. And if you look, we've got that one just above as well. So these two areas is where I'd be looking for, obviously, pound dollar to obviously reverse from as well, which would obviously give my euro analysis substance then as well, to say that we're going to go to the short side. So yeah, these two areas I'd be looking for. Anyway, where there's a high or a low, I tend to not predict, but expect a reversal and then start looking from those areas.
Okay. Yeah. Because it's actually what we're expecting. We talked about that dollar CAD last week.
Yeah.
And it actually took that high, and after that it crashed.
Yeah.
Before the NFP.
Yeah.
Okay. Yeah, let's jump into gold. People are talking about gold. Let's Adrian is also talking about gold. Like, what do you think of gold? Now they are ranging. We are going slightly still a little bit more to the upside. Are we going to go for the highs from 1 week ago or 2 weeks ago, or what is your take in between this structure?
So, just for everyone watching, I don't trade gold, but I will do it for you with my analysis, because it does work on here as well. For me at the minute, so we were pushing to the downside from a 4-hour perspective. And again, let me just delete this. This was from last week. Obviously, we were pushing to the downside. We swept, obviously, this liquidity here, and then got something that I would call a change in the state of delivery. So a break in the last bullish candle in that downward move after we swept the liquidity. So now this, for me, confirms, obviously, the 4-hour model's in play. From a 4-hour perspective, we are in this external range that I would call from this low to this high. So I would like to see, just from a 4-hour perspective, what I'm seeing, I'd like to see this high get ran. Obviously not anytime soon, because we are on a 4-hour time frame. That's a big movement. But I'd like to see it come to, maybe we'll get retracements back and turtle soups and things. But 4-hour bullish, from what I can see here, we've got a 4-hour buy model put in. Then from the 1-hour perspective, like Pedro was saying, we are sort of ranging at the minute. I would like to see, and again, this is a prediction, I usually react, but what I would like to see for me to confirm that it would go higher is I would like to see, again, a turtle soup in for the guys that are laughing about it. But I'd like to see a sweep of this low from a 1 minute perspective, a sweep of this low, potentially then to get a reaction from there and then continue to the upside to go in conjunction, because then that would give you the manipulation of the upside. So we manipulate the high, manipulate the low, and then we can look then to see if we get a buy model put in place. But the same as when I'm looking at models here, if I was looking at anything the 4 hours confirmed to me that's bullish, we then get a turtle soup here. It's quite a hard one to see, but you get a sweep of the high here. So we sweep the high, and then we can back them, sweep the low. Sweep the low. It's not the cleanest. Sweep this low. After we do that, then we then put in, again, changing the state, the last bullish candle in that move before the downward move, changing the state of delivery. We then come back to the fair value gap here, which is just below 50%, and then we get a reaction from there and then be targeting, obviously, this high. So for me at the minute, I am bullish. Obviously on the 4 hour, 1 hour. Again, for me to go into the 15-minute now would be pointless, because I haven't got confirmations from a higher time frame perspective. But 4 hour draw or liquidity draw is what I'd be looking at the minute from a higher time frame perspective. I'd like to see, obviously, following on potentially a draw on this liquidity here. But again, I'd be waiting for the 1 hour to confirm that, maybe a turtle soup, and then a new model put in, a change in the state of delivery, inverse fair value gap, the upside to then zone into 15-minute, 5-minute, and 1 minute to look for entries to then go long. But yeah, I don't know what your take is on gold, Pedro. Whether something similar.
Yeah, on your target, so when you're looking left a little bit, on the structure, where did because I think price now just reacted from kind of a fair value gap a little bit. I think maybe on the 15 minutes or 1 hour time frame.
Yeah,
that top just kind of reacted a little bit from a fair value gap on the left side, I think.
Yeah, this one.
I think somewhere in there, I think, or something like that.
Yeah.
So are you still expecting maybe, or looking at on the website on that top, what levels do you think that's going to be relevant for maybe price bounce and potentially? Or you are looking actually for price to take the top?
Yeah.
Is there anything in there?
To take a higher or low. So for me, for these fair value gaps to be relevant, I always look for what I call the most current structure or price leg. So if you look at sort of the fair value gaps that it's ran through already from when we turned bullish here, we've ran through the fair value gap, this fair value gap here. So for me, it's already disrespecting bullish order flow. So for me to just see this here as a reaction, which it could do. Again, some people do trade like that. I don't tend to do it like that. I tend to wait for like structure points. So for me, like we've got this internal high here. Again, it's come, actually coincidentally, it's come above that and then reacted from this FEG and pushed downside. So I tend to ignore these fair value gaps because for me, if it's disrespecting bearish fair value gaps here, to disrespect to the bullish side, if I end up looking at fair value gaps here, I'd be every hour or so, or when we get a bullish movement, I'd be looking for every fair value gap to give me a reaction. So I just go off internal highs and lows and external highs and lows. And if there's a fair value like this one here, if there's a fair value gap above that, it's got some relevance. But again, I tend to just go internal and external highs and lows for my reversals.
Yeah, maybe a bit like you. I don't really trade fair value gaps to be honest. I just mentioned because I know that many people are looking at it. I look at them in the same way that for me is the high before that actually I want to see maybe if there's some reaction after the high is taken. And to be honest, for me, if the high is taken but I don't really see any reaction, any valid reaction from something on the left, maybe a support resistance or a supply level, I do think that that's a break and price still wants to continue higher, even though maybe initially reacts down, but eventually going to continue to move to the upside until eventually it gets there. But on the other side, when you're looking at the chart and that you're mentioning in there, I think if there is a level where those fair value gaps may be respected or not, I think it's going to be more close to the top or literally at the bottom, and then anyone else in the middle, maybe you should be expecting them to break and maybe use them as a reverse fair value gap or whatever name they use it for that, more as a continuation, just kind of a same approach towards a supply, like any supply in the middle when price is reaching in a bull trend, most likely it's going to be broken and maybe used as a demand zone on the flip zone of the move.
Because supply and demand is very similar to what I trade, to be fair. There's a lot of similarities between it.
On my take, let me just first of all look at some analysis here. So Steven Sandy had great analysis on gold. 1 second, what is this comment, Adrian? Do you think it will be moved by these days talks with Ukraine and Russia war? I think that's a little bit now on the topic. Okay, I think kind of the tariff situation, at least that deal until the 1st of August, I think that's over. So of course there's going to be always a new hot topic. The world and the news are always bringing something to make everyone entertained in the media. And I think now the topic is back into Russia, Ukraine, and something like that. So maybe until eventually comes up something else and we move on from it. So we are seeing some volatility, especially on oil as well. Oil finally broke those lows in the higher time frame. So yes, that's been a little bit of the volatility at this point. The conversations with Russia, Ukraine, and whatnot. I don't know, there if you take any approach or on the news, or if that matters to you or not.
I try to stay away from politics, Pedro. It's not my strong point. No, I try to stay away from that. To be fair, I know a lot of people trade economics and things, but I just go with price action and stay away from it. I don't get involved with that. So that's for the big bosses.
Sometimes I do pay attention. Abdullah mentioned, fantastic. You go follow there on Instagram or YouTube as well. So apparently there's literally loads of content in there. He shares a lot. So if you want to learn even more about their style and the way he kind of breaks down the market and the pairs, just go follow him. For sure, you're going to get a lot of knowledge. Just Abdullah is mentioning. By the way, Abdullah, I'm curious about your takes on the yen. I always like to know your takes on the yen. So feel free to share what you are looking at, the pound yen, euro yen, dollar yen, okay, because I want to know it. Tiago is asking about the Dow. We can take a look at that in a second. Let's just, any last comments about gold before I move to something else? So gold is collecting volume since last 1-3 hours, I think, with news, I will go up. Sean, I think he mentioned a comment before. Let me just bring that comment before. So to this one, because I think he said today the difference between spot and futures prices of gold was more than $85. Something never happened ever in history. I think it will make a move towards all-time high quite soon. To be honest, I have no idea if this happened or not. It's actually, I don't really follow much of the futures price on gold, and much less if it is actually something that never happened before. But Sean, if you do mention it, yeah, that's quite odd. That's quite strange. And maybe the market is ready for something. Who knows what will happen with this? But yeah, but that's kind of odd if that situation actually happened. Derry, do you have you put a good system for us? Derry, you have put a good system for yourself. Yes, he did. That's years of experience. That's years of experience.
Yeah, don't stop. Just keep plowing away at the charts. It'll come.
Yeah, that's a good question. Instagram for Derry. Yeah, maybe you can mention it in here.
My Instagram is Derry_Morgan, MORGAN 10X. So the number 10 and then X. You'll see it's verified. You'll see the one.
Perfect. All right, guys, press the like button. Okay, so don't forget to do that. Continue to subscribe to the channel. We are here sharing the analysis that you are asking. We are sharing our view. Again, it's not a signal service. Okay, so take in consideration our thought process and then use the information as you like. Where is my thing? I'm looking for my. Where is mine? 1 second. I need to increase this. Pedro, okay, I'm here. 1 second. Let me just look at my own gold. Yes. So as I mentioned a little bit on gold, is that we are definitely in a range. Okay. So basically, looking even from this perspective, price has been respecting this level and it respected in here. So I shorted that one, and to be honest, I was trying to see if actually gold would continue to push lower and eventually get to 3,200, somewhere closer maybe to this level, but it didn't. It kind of respected this extreme. They start pushing higher. So to be honest, between this level, which direction price will go first, if it's going to break that top or if it's going to break this low, I have no clue. Okay, at this point, I actually have no clue. So it's maybe more trading in between the levels. Now this level where gold reacted today, I kind of liked it. Okay, because again, similar to there, basically prices took that small top, and I was expecting some kind of reaction, yes, within this level, and we did have that one, but I haven't really seen any proper break-off structure at this point on gold. I think price is still kind of respecting quite nicely the lows, and we are breaking highs. But I think we can agree that price is starting to find some weakness. Anytime it goes up, kind of it finds a way to come back down again. It's not just a move that maybe price breaks, returns its previous levels of support resistance, and it goes. No, it actually has deeper retracements. So it shows that people are interested in trying to sell around this level. Now, is this a top? I'm not really sure. Maybe price and gold may still want actually to continue to push a little bit higher, maybe closer to this extreme before finding more sales. If price by any chance does want to go all the way and take this top, okay, so in that conversation, we may get actually really close to, again, all-time highs, but I'm not sure if price is ready to do that. I don't think there is enough uncertainty at this point in the world for price to just continue to go higher. We have, I think US indices again moved quite strongly to the upside today. Actually, I haven't checked the indices for a while. Yeah, the US indices are again approaching the top. Maybe there's a sell opportunity in there again, which we're going to take a look into it. So yeah, it's a very bit of a decision. I think similar to there, I think maybe we need some break off lows, maybe to look for some more information. But it looks like that's still a bit bullish in here. To be honest. All right, Abdullah, I'm going to look at yours on your trades on yen. Okay, we have like here peak performance saying that it trades with you at the Evox Academy. Okay, so maybe that's perfect. Okay, let's take a look at the US indices. Maybe I think Thiago mentioned the Dow, so we can maybe look at the Dow. Yes, so what do I have on the Dow? Okay, this is the higher time frame on the Dow. I think, yeah, Dow took slightly the top in here. Okay, went into all-time highs just for a little bit, and boom, it found straight away it's having pressure, and it pushed lower. And with this push to the downside, we actually managed to break. We actually managed to break some structure. We had already broken these lows before this final take, and now we actually managed to break again these lows. And from the way I look at it, we may have not reached yet the next structure. Okay, so what I mean is basically where this low is, there's maybe still a little bit of a space in there, which maybe can still push price lower. But now we are moving up. Okay, so we are retracing, and to be honest, I think I'll be looking for price to maybe get closer to this mark in here. I think I would love to see price getting and taking these stops and finding some bearishness after that. For many people that also look at Quasimodos, this maybe look like a Quasimodo pattern in here. Okay, with this left shoulder, basically the head. We did manage to break below this low, and maybe this could be eventually the right shoulder. Now, something that I would like to see is potentially price starting to react from this supply. Maybe this level in here can still hold price, and I would like to see that. Okay, I would like to see maybe price actually starting to pretend that it's working. So it's going to attract as many traders as possible to sell within this level. Okay, so I'd like to see these guys being trapped into selling in here. So then price could go just make that move into the level that actually I'm interested in, and then goodbye, and then it can drop. So I need to see sellers being trapped into the wrong place before actually I manage to get the sell where I like. So I need to see that. For now, I haven't seen that. I think price is still a bit bullish on this retracement. We haven't really managed to break also any important low. So yeah, that will be my next step. It's try to see if there's a little bit of weakness in here, or at least some kind of resistance before potential price does that quicker move and then drops. So that will be a bit more take on the Dow. I think at the top in here there's maybe still some bearishness that you maybe can look at. Did you look at the Dow by any chance?
I haven't looked at the Dow in years. I don't know. See.
Yeah, Stephen, we have news. I think what are the news? Is it just unemployment, right? I don't really think that unemployment is going to move that much the market. I don't even know why it's red, to be honest. I don't know why they. This news in the past, it was not red. It was orange, the color. I think they actually transitioned into red around COVID, because that was the moment where the unemployment claims it was like 2 million people. Right? It was when everyone was getting fired or laid off or whatever around COVID. It was 2 million negative, and it was 2 million positive. Where everyone thought that the world was about to finish, so it was matters. Like, and since then, I think they turned this news from orange to red. But yeah. Let's take. Do you have your chart? Let me just transition into your scene. There we go. Okay.
FX, yeah. We'd love at the Dow US 30, yeah. Wow. I haven't even looked at this in years. But for me, yeah, again, it's sort of like in no man's land for me. Again, similar to Pedro, I'd like to see. At the minute, we are respecting bullish order flow. Let me go to the 4 hour. Actually, we are respecting bullish order flow. We did obviously rebalance to what I would call 50%, or not far off that 50% of that price leg, and then continue to push higher after we came into this small fair value gap here. So from a 4 hour perspective, I am bullish, but I would like to see it, obviously, to confirm that we are pushing to the upside. We're still currently in what I would call the internal range. So this high here and this low, for me to trade anything, I'd like to see a higher low get ran. Obviously, this internal, of course, we have ran, but from this move here, I'd like to see this high get ran before I'd be looking at anything. So what we're seeing here is potentially we are going to run to this, maybe not now, but we are going to run to this, obviously, internal liquidity point, and then get a reversal from there. So at the minute, respecting bullish order flow, pushing to the upside, we have got this external high here that I'd like to see get taken. And from a 1 hour perspective, again, pretty much the same way. So again, changing the state of deliveries to the upside. We have also put in a turtle, what we'd call a turtle soup here. Sweep the high, sweep the low. The low's been swept. No, it hasn't. Sorry, that's the internal low. So it's literally just reacted, swept the low, and then reacted from there to push to the upside. So at the minute, for me, what I'd like to see, again, I react, I don't predict, is potentially a retracement of this 50%, and then to continue up to the upside to take that, obviously, the 4-hour external high that we are heading towards at the minute. But for me, there's a reason I don't trade US 30 or look at the Dow or anything, is because I find the price action on it's not the best. It seems to obviously have massive expansions, massive decompressions. So for me at the minute, bullish. Would like to see this high get ran, obviously going in accordance with what I trade, but obviously I haven't got the back tested data on this to know if it works as well on the Dow. So I would be bullish if I was trading my strategy on this, and I would be looking for a retracement back to the 50% of this current price leg here, which would obviously line up with obviously this fair value gap here or roundabouts, and then obviously reaction from that area then to push to the upside to take that 4-hour high up, which is the draw at the minute, or price is showing us that this is the draw that it wants to take. And I always think of it as every high and low for me, especially like major highs and lows, the actual range that it's in, as magnets that it magnetizes towards. It's that close to that magnet now, as I call it, or that draw. I'd like to see that get ran before we look for anything else. Obviously, you can look for if we came back into this area now, for example, from a 1 hour perspective, I'd then monitor it because we would be in 50%, and the FEG I'd then monitor it for changing the state of delivery on the 15-minute, 5-minute, and 1 minute then to take that to the high. But obviously, wouldn't trade that till we get those confirmations in there. Just react with it if we push through it, and then we get an inverse fair value gap. Then I'd obviously switch bias because we would have ran essentially through this, which would then tell me we're disrespecting bullish order flow to then obviously reverse to the bearish side. And again, I've got to be aware of this internal liquidity high that it's swept, so you could potentially get a reversal from there. Although it's not external, still obviously confidence is that it may reverse from that area if we get inverse fair value gaps and things like that, which would indicate then that we've obviously switched order flow and we are now disrespecting bullish order flow to turn bearish.
A comment from background cinema saying that you don't like danger, right? You just go for the safe prices, no gold, no doubt, no that.
I got burnt too much in the past when I was learning to trade, so I stay away from it now. And again, with like my data and back tested things, Euro and GBP is where my favorite. I know the market behaviors of them as well, which is why I like it so much. I find what I used to find when I was trading was I used to trade like everyone does. They put all pairs on their gold. You want to make the big bucks. You think trading 100 lots on gold or whatever it is and full port on accounts and all sorts when I first started. So I've got burned so many times and then obviously learned to deal with it and just zoned it on 2 pairs. I sometimes trade the pound yen. That's my third favorite pair. But what I also found was just organization wise, say, for example, you leave the charts on a Friday when market closure and then you come in on a Monday. If you've only got the 2 pairs, I find it very easy to follow because I know where I was when I left on the Friday. Whereas if I've got all the pairs and then obviously going back to the start again to analyze every chart from that I was on Friday because I've had the weekend off and things. So just find it organizational wise as well for me. I prefer to trade with just the 2 pairs. People are different though. Some people love having 100 pairs. But for that, my cogs start going no more if I do that.
Yeah. No, it makes sense. It depends also on the planning, on the organization, and everything. But I am curious about your NASDAQ analysis because last week we both kind of were looking for shorts on NASDAQ.
It played as well.
The trade happened before the opening, so we just stood there and watched it fall.
Yeah.
And today's Thursday again, so maybe it's going to start becoming a pattern of Thursdays selling NASDAQ. So let's try to see if you're going to find something today that now NASDAQ made this big retracement, if this is a level or not to look for something.
This was it, wasn't it? So for me, again, on the NASDAQ, everything's super extended at the minute. Again, like I'd like to see a higher low get ran. Of course, we've taken this internal, but we've continued to displace. So for me, this becomes irrelevant. If we took this internal high, what I'd like to see, I know there's probably a lot of people saying, what would you like to see from there? I would like to see, as soon as we take this internal high, I'd like to see the very next candle come back in and obviously displace to the downside to show us that we want to push lower after we swept that internal high. But obviously we continue to displace high. You can see obviously bullish candle after bullish candle pushing to the upside. So for me, again, targets wise, although there's no entries, where I'd like to see it is take this high and then push to the downside, or we could potentially see a reaction from this fair value gap after we've swept that high. I know I said I don't look too far back in price at fair value gaps, but this is an immediate one that is stuck in at the minute and we have swept that high. But for me, this I think will get disrespected because we've continued to displace higher and higher, and it hasn't sort of what I call trickled. It's with intent, to the upside. So I think this fair value gap's probably going to get disrespected, and I'd like to see this high get ran at some point. Maybe not today, but at some point this high get ran and go back to all-time highs from the 4-hour perspective, and then from the 1 hour, what can you really do with this? There's nothing really there. We have swept this small internal wick here, so we could potentially, not the strongest of areas, but we could potentially get a reversal from here if I put in a sell model from this area. So either a change in the state of delivery, or I'd like to see a run through of a fair value gap here, and obviously close below that and displace below to show us that, okay, order flow is turning bearish, because we've disrespected bullish order flow. But again, for me, this is what I call low resistance liquidity, because it's just there's no sort of substance to. It's an internal wick. It is a high, of course. It's a 1 hour is a high, but I like to see obviously a bit of structure there as well for it to be a what I'd call a significant liquidity pool or an external high. And what I mean by external is when you obviously zoom out, which makes it easier, you can clearly see where the external liquidity draws are. It's this low here, which is the range low, and then the range high, and then everything between here is obviously low resistance liquidity, and especially when you've only got that 1 wick high there. So are we going to get a reversal from there? Possibly, because we've just swept the high. But I'd like to see an inversion of this fair value gap here. I'd like to see this candle then close below it as well to give me that confirmation that we're going to push to the downside. So for NAS at the minute, I know a lot of the students did actually catch this move. I missed it. We missed it on last Thursday, but they caught it. They got in right on the button of open. But at the minute, for me, it's just super overextended, and there's no real, substance for me to say, okay, we're going to go short or we're going to go long at the minute. That may change at open. But at the minute, for me, that's what I'd be looking at. Just monitoring if we're going to get the shift in order flow from that high being swept,
Yeah, in terms of, because even if you draw Fibonacci there, whatever are we considering from the low, we are at we're already at 78.6, like close to 80% of retracement.
Yeah.
So maybe some people are going to start looking at that as a potential zone. Do you pay attention to that low? So when you have that low, do you consider that low broke anything on the left side, or kind of respected the previous structure?
This year, yeah. So what I'd call here is we've taken obviously we've taken most structure points out here. So we've taken this low, this low, and this low. So yeah, of course.
You're looking at futures, right? Oh, okay, because CFDs it didn't.
Yeah. Okay. You're on a CFD chart. Yeah.
Okay.
You can see it.
On mine it didn't went that deep. At least it didn't definitely took that low that you marked there.
Yeah.
So that's a completely change of information for the future.
Yeah.
That's why it's so tricky. Okay.
Yeah.
Okay. Yeah. Yes, but you do pay attention. Like when you see that big move, you do pay attention to see if actually the low is broken or not, and you use that information to then make up a decision on retracement.
Yeah, of course. Every high and low that gets swept, whether that be internal or external, I'll always anticipate that we can have a reversal from that area, and that's where I like to capitalize on my trades. Is as soon as we've swept a high or low, I'll then be looking. That's where I get interested. Like as soon as we take this high, I'd then be interested then to look for trades. To the downside if we get those confirmations that we're gonna obviously turn bearish,
But do you also use that information towards the future? For example, if we broke the low, waiting for price to retrace, do you use that information as a potential, like then a bigger short from when price goes a little bit higher, expecting that maybe price will have that sequence, or maybe like if price is going up and now breaks a low, maybe now it's changed the perspective of the trend, and maybe now it's going to start being bearish.
As in for targets wise, is that what you mean?
Yeah, target wise, or start making a decision towards the future direction of price by itself.
Yes, yeah, of course. So as soon as we get, I'll show you. I'll leave it on here actually. As soon as we get a sweep of a low like that low there, I'd then like to see an inverse or a change in the state of delivery. So obviously there's a fair value gap here that gets ran through. So that gets inversed. You can see instantly it comes back to that inverse and then rallies to the upside. So now we've swept a large amount of liquidity to the left. Now I'd say, yes, okay, now we're going to be bullish, and my next target will be that high then. But obviously we've had that inverse fair value gap, back to that inverse fair value gap. You can see it's reacted from it perfectly, and then obviously targets-wise would be that high there. Maybe looking, first targets would be this high, and then obviously the most relevant high after that, which is the external high here. So yeah, as soon as we sweep a low or a high, I'm potentially expecting then to turn bearish or bullish. If it's swept the high, obviously I'd be looking, maybe it'd be turn bearish from there. If it's swept the low, then could potentially be going bullish from there. As soon as I get those confirmations and an inverse fair value gap, then yeah, I'd be looking for a trend change from there.
Yeah. Okay. Yeah, that's an interesting comment from Oliveira. Still in the comment of that you don't really trade gold or kind of those super volatile, crazy pairs. So basically saying that he's smart, like if it, and that's actually kind of reality. If the majority of people are profitable and the majority of people actually love to trade those volatile, meaning gold pairs, then there's maybe a correlation in there. Right, and that's maybe information that many prop firms or even many brokers may have. If you see it, maybe the most tradable asset, most likely gold is on top 3 for sure, and maybe from the not profitable traders, maybe that's going to be one of the main pairs that they actually trade, and that may mean something. Like that may mean something in reality. That doesn't mean that trading gold actually means being unprofitable. That's exactly not what it means, but it may mean that most people may not really, or the reason they are trading gold is maybe the wrong reasons, because they're just looking for volatility. They don't really know exactly how to find a strategy around it to actually be profitable using it. That's an interesting comment. Do you agree with that? Kind of that people kind of tend to follow those pairs just mostly because of, I don't know, they see so many people trading it that they just follow that.
I think so. Do you know, it's one thing I'm massive on. I obviously I am involved in the social media side now, but what I find is I think a lot of the gurus, as they call, I'm not calling anyone, but a lot of the gurus obviously vouch for gold, and they have all these unrealistic expectations. And I think because they've got such big influence, that obviously influence people in the market. And I just think it's misinformation. I know loads of people that trade gold profitably, but I think it's come from that sort of, especially in the prop firm scene, and if you're on the social media side of the scene, I think it comes from where people think that gold is the one that's going to make you a millionaire overnight. And I think that's the stigma that's attached with that and why so many people trade it. Does that make sense?
Yeah. No, that definitely makes sense. Then I'm not really sure that gold is on the third place, but I mean it's definitely on the top 3. It may be the first one, second one, third one. I think usually between gold, euro, and NASDAQ, I think they are kind of the most common ones. Pairs. Then of course you may have pound dollar as well in the mix, or maybe dollar yen. But I think between gold, euro, and NASDAQ, I think they are definitely the top 3 that people try to trade. Now, who's first or second or third, I have no idea. No, and that may changes on a monthly basis. Who knows? Maybe an interesting stat, it would be kind of which of those pairs actually are more profitable across our traders. We can look at trade volume, which like the most tradable, and then maybe which actually are more profitable for the traders, which most likely may be different in there. So we can take a quick look at gold, because with the news, yes, we did have a little bit of a reaction. We saw gold spiking up a little bit. We're looking at also euro, right? Which primary one?
Yeah, I was just on euro. Yeah, gold, the same for me. I'm still, it's still just stuck in the range for me. I did say where we wanted to see a sweep of a low and then push the upside. It looks like it's not quite got to that low, and it is pushing out, but it's also sat for me inside this fair value gap that I'd be very cautious of, and it's reacting from that area, so could potentially see a push to the downside. But again, from like, I don't swing trade, so for me I'm in and out of the markets in 30 minutes if I see an opportunity, 30 minutes to an hour. But at the minute I'm stuck. Obviously, it's like in this range. Yes, we swept the high. We've also inversed the fair value gap here, so this fair value gap's been run through to the downside. And we've also had that change in the state of delivery here. So for me at the minute, I'd like to see a reaction from here to then push maybe to the downside to get a retracement, and then look to obviously take that 4-hour high that's sat there, because we are bullish. But for the interim, what I'm seeing here is, if I break it down properly from a 1-hour perspective, is we've swept the high. Then we've put in, let me just get rid of this. Then we've put in an inverse fair value gap. So we had a bullish fair value gap, ran through by a bearish fair value gap. We've also had a change in the state of delivery to the downside, and now we've come back into that inverse fair value gap, and we are reacting from it. Whether it'll hold or not, I don't know. Again, I react to what it's given in a lower time frame wise. If I look from a 15-minute perspective, I'd like to see a reaction, and obviously for me then I'd like to see the change in the state on the 15-minute then to confirm that we want to go short. But at the minute, we're just stuck between for me. The price action on it's not the best for the minute, but there is a 1 hour model there in the inverse, and see if it reacts from that area to push lower.
Yeah, that's basically what I'm looking at as well. Basically to see more information in there, right? To get away from this range, and that's sometimes actually a good example. Like again, then we get too stuck into those 5 minutes, 1 minute time frame, and just changing every move that happens. And that's one of the reasons why gold may be so tricky, is because gold can easily just, even today was an example, just can easily go high quite aggressively, and then the same way that can go down quite aggressively. And if someone is just changing price without really kind of predicting, anticipating, and having a plan of action to know what to do in certain moments, it may be quite difficult. What's up, Dinox? Welcome. Yeah, like Mr. L Sessions mentioned, and I agree. Of course, everything is profitable, depends on the trader. That's 100% sure. I think everyone agrees with that one, because it's true. And then kind of, again, background cinema. By the way, I like your name. That's a really interesting name. Yeah, gold needs experience, otherwise what a wise choice by Derry to opt out, not to entertain the pairs, looking at the fact that a lot of manipulation takes place in there. Yeah, especially when you're in the middle. When you're in the middle of structures, that's manipulation all the time, constantly. Okay, any more charts, guys? What other pairs? We saw, 1 second, because Abdul, if not mistaken, he mentioned pound yen. So we're going to look at... let's take a look at pound yen. Do you look at the yen pairs? You don't really look much at
pound yen. Every so often I do trade pound yen.
Okay. Abdullah mentioned that he wants to sell pound yen 4 hour favorable gap. Pedro, that's me. We see reaction on the level 198247. So let's take a look also. Do your analysis. I'm going to pay attention to my chart as well. Where is it? Level 198247. It's a little bit higher.
198247.
Okay, so it's a little bit closer to this level. That's also previous level support resistance. Basically, you had all these lows kind of close to that level. Abdullah, where is your target on this one? And where are you looking to protect your trade? Like, most likely you're going to be looking for some kind of confirmation.
Let's see. Same with yen at the minute. There's not really that much data there to go off. You are just sat in a fair value gap from a 4 hour perspective, and then the 1 hour perspective for me, although that fair value gap is there and it's in 50% of that price range, we have got that internal high just sat above us, with something I would be cautious of. But of course, you can get a reaction from, if you look from the 4 hour perspective, you've got the fib tool. We are at what I'd call equilibrium of that price flag. So you could potentially get a reaction from that area, and it's something that I would actually monitor, because we've obviously swept the low, come straight back into that range 50%, and it could just be a continuation model then to come to the downside. But that's all I'm really seeing from a 4 hour. And then the 1 hour perspective, the only reason I'd stay away, for me personally, again, if that's your trading style, trade it, stick to your plan. But for me personally, the only reason I'd stay away is because we haven't swept. I look to the left, any high. The only high we swept is sort of this internal high, and even we've got this high sat here then, which I'd be wary of. Again, for me, I always like to see a high or low swept. So obviously when we sweep this high, we'll still be sat in that 4 hour fair value gap. I'd like to see a change in the state of delivery, retracement, and then scale in to then take this low here.
Yeah. Higher time frame. How do you look at it? Like, let's go to daily. Which? Because it has been going up, and I think we swept for a little bit that top on the left side. If you go a little bit left, that one, I think we kind of swept it just a little bit, which is the highest in the middle.
From a daily perspective, if you're looking at the daily time frame, it's again something for me that I never go up as high as the daily, but sometimes we'll look at it just for reference. For me, again, we've swept the high. No, it's not there. We haven't. Bearish for me again. I am bearish because obviously we swept what I'd call
that one.
A major high, and then we've obviously put in, if you actually zone in on it, for me, we've then put in it's not that clean from a daily, but we've put in the change in the state of delivery. We didn't quite displace below it. We just came back into the range, been bouncing around, respecting, and then we get that displacement through this change in the state here. and we're now rebalancing back from a daily perspective into that change in the state. So in fact, for the 4 hour now, the daily has come back to this change in the state. You can see it clearly, and it's reacting from that area, which then comes into obviously the retracement of 50% of that zone. And on top of that, it's also in that fair value gap. So potentially you could be looking for short from there. When you align the daily with it, 100%, we swept the high, change in the state of delivery, displacement through, back to that change in the state on the daily perspective, and then 4 hour perspective, then back to 50% of the range, which is also the daily change in the state of delivery and the fair value gap, which we're now getting a reaction from. So looks pretty decent to me, to be fair, after looking at it from the daily.
Yeah. So he's mentioning, Abdullah mentioning, yes, I like that, Larry. I wait, MSS.
Yeah, okay.
Is what does it stand for, MSS?
Market structure shift.
Okay, market structure.
It's same as breakout structure.
Yeah, and he's looking for a target at 196. So basically, he's trying to sell something from there to 196, 113. And he enters if I have MSS, okay, breakout structure or market shift structure, but we still in bullish. Okay. Yeah. So even his target is still within the same, is within the structure, right? He's not really looking to target all the lows all the way down. 196, 113. Yeah, somewhere around here.
Yeah. Okay.
Yeah, that's interesting. Yeah, again, pound yen, it was quite similar to the pound dollar, to any pound related dollar, because of the news. Definitely had a spike. If you look at euro yen, it actually moved to downside instead. So again, all these parameter dollars, parameter to the pound, they had this impulsive move because of the news. Because when you compare them with the other ones, they're not doing that. So it's either a fake move and price will just move down, or it's actually going to be a confirmation that your price wants to go higher. So I can maybe give a bit my bias on the where is it? Not this one. Yeah, on the pound yen. To be honest, bigger picture, I may still like bigger picture. If I'm looking at this bigger structure, I may still bullish in here to be honest. But we are talking about this structure. Okay, I think eventually the top is going to get closer to something in here instead of just reversing from this level. The way price came out the way, retested the bottom, then even created this low, went up, broke that structure, came back, retested the extreme again, and maybe the final destination may be closer to this, maybe looking at, I don't know, 200s. Okay, let's call it 200s and something, 202. But meanwhile, of course, intraday or more war time frame, as soon as you took that top that we talked about, like this massive, this daily, weekly, monthly top, whatever, we found some bearishness straight away. And then we start breaking structure, which was quite nice. And then we actually hold this level for a bit, and then we broke structure again, and then finally we went all the way back to the extreme to correct these orders. This was actually really nice. A really nice move, actually something that usually I try to look for. I didn't really pay attention to this pound yen, to be honest, but overall the setup itself, it was quite nice. And we did manage to break at least this low in here. We did manage at least to also break this structure. I'm not sure if price reacted from something relevant in here on the left side. Not really sure. Maybe price still has more space to eventually continue to move to the downside. So now where I'll be looking to potentially look for a setup, that's a different story. So price started to move. I actually like the fact that we actually managed to break below the low just before we move up. That I like actually this fact. But price is respecting. So at this point, price is still respecting every single zone. We'll see how price may react from here. My idea it will be maybe getting price a little bit closer, maybe similar to you. Maybe price could go a little bit above this high, and then maybe find something in there. Or we do have all these previous levels support resistance as well, which can be eventually can be used. Price can bounce from here. It bounced so many times in the past to the upside. It may as well bounce to the downside. As well. Now, when I'm looking at the yen index, because something that I like to do, and that was actually a question from Azad, if I have done the currency index comparison to find pairs today, maybe not. Maybe I'm going to do that now. So, because something that I like to do is to look at the currency indices, yen, euro, or dollar, and try to see which one is stronger or weaker, and try to see which direction maybe we can try to find an opportunity in here. And then you are looking at the yen index. So price respected quite nicely this move at these lows. Okay, it's a really nice level of support or something like that that could find some bullishness, and that's why kind of we had that move to the downside on the yen pairs. Okay, so basically when finally price moved to the upside in here, that's when we had that big move to the downside on the pound yen, and maybe that may still continue. Which what I want to say is because with this move we actually managed to break some structures in here. We finally managed to break these tops, this level. So maybe this starts opening the door that maybe price is ready to make a bigger reversal from this bottom in here. Okay, it's a level that has been respected for a while. Price hasn't really managed to break below these 700s and 20s or something like that, or 25s, and maybe who knows if it wants to start making this kind of recovery again on the yen. If that happens, most likely we're going to have selling pressure on the yen pairs, pound yen, euro yen, dollar yen, and all those yen pairs. But even though we did add this move to the upside, we also are reacting from this previous level, important level support resistance in here. So we are literally kind of in between two levels that, in my opinion, they are both valid. Either these lows in here, the same way that even this level in here is also valid to see some selling pressure. So maybe to turn completely more bullish in here, maybe I would like to see maybe this structure being broken to the upside, and then for it to be price by any chance now recovers this and starts moving. I think then I'll be much more confirmation of a bullish scenario for the yen pairs to move, the yen index to go higher, and the other yen pairs to go lower. When you're looking intraday, I can still a few levels that maybe price can bounce from. This one can still work as a level to look for a short in here. And again, if I'm looking for shorts in here, pound yen is maybe long. The same way that eventually price comes back into this maybe demand zone, maybe can find new opportunities. So at this point, I'll be waiting for price to go here or to go somewhere closer to this level for an opportunity. What does this mean for the pound yen? If this one actually wants to go higher in here, we're going to have selling pressure on the pound yen. If this one wants to continue now to just naturally do this, we are going to have some buying pressure on the pound yen, and maybe pound yen can be getting closer to this level. Okay, or otherwise maybe just retrace from here, maybe to do this. Okay, this move can be, let me just actually maybe open side by side. Yeah, basically if you actually look at this, basically the levels that we had, they were kind of something in here and then something in there, and then maybe can look at this bottom. So basically if by any sense the yen index wants to do this and this, that will mean maybe pound yen do this and that. And if this one just wants to continue to fall, maybe this one's going to just continue to go higher eventually to maybe make this and then maybe make this. That's kind of the way I'll be looking a little bit on that. And then you can basically do the same thing for the euro yen, but the euro yen you can even also use the yen index, the euro index. And that's why actually euro yen has been one of the best pairs to trade this week in terms of the yen pairs. Because euro yen basically had a great reaction from these lows, which is basically the same reaction from this top in here, and the same thing that we had this push to the upside on the euro. Okay, so basically this move in here on the euro index, it was related to the move to the upside on the euro yen from this bottom, and also with this move to the downside on this yen in here. So if you start correlating this kind of pairs, okay, you can actually try to see which one of these are super viable or kind of increase the likelihood of a trade playing out just by looking at these correlations. And since we have like 2 or 3 that you can look at, that's best. For example, what I mean is this week it would have been much better to look for a trade on the euro yen, opposite to look for a trade on the dollar yen, for example. Can you see how dollar yen is just literally stuck within this range, and euro yen make a move like this? Why? Because the yen is also moving down and the dollar was moving down. So if you have yen moving down and the dollar moving down, that means that the dollar yen is going to be ranging. Okay, it's not going to be moving anywhere. So using this kind of information can help to filter trades, to position yourself more correctly, and to actually capitalize on the ones that are actually going to move versus staying stuck in a pair that's going to maybe just range without really moving anywhere. But yeah, that's a little bit of what I'm looking at, what the type of trades that I also try to find. You can of course do the same thing with dollar index, euro dollar, maybe pound dollar, whatever. Rice is mentioning, can you interview the winners of the week with challenges? Rice, that's a good question. We can maybe recommend Jonathan and everyone from the team to potentially do that. Tom Dang. Okay. I'll mention that to Jonathan, okay? And we'll see what we can do. Just so you know, Rice, sometimes, okay, we ask someone to be interviewed, but the person wants to stay anonymous, okay? He doesn't want to show, he doesn't want to show his face and whatsoever. I've had even that situation happening several times within the Portuguese channel, okay, that we are doing as well. I ask them and they say, thank you very much, but I prefer to stay anonymous. I don't want to show my face and so on and so forth. So sometimes that's the case. Just remove the link to your own. Huh? I don't understand this comment.
No, I don't either. I was reading it about 5 minutes ago thinking, I don't get that one.
You just remove the link to your own website, but I don't even know what does that mean. Okay. Yeah. Any more pairs, guys? Any more assets? I think you mentioned actually, right? Let's start from the first comment. S&P 500. S&P 500. Let me just go back to just one in here. S&P 500. Yeah, S&P 500 is quite similar to NASDAQ, where we are getting again close to the top after the big sell-off that we had starting last Thursday. 1 week afterwards, we are back at the top. I think even if you again bring a Fibonacci in here, we are most likely close to 80%, and they're starting to find some selling pressure. Okay, so as price now is getting closer to the top, I think we're finding some selling pressure, and I think you can have initial reaction today, maybe to the downside, maybe just to react some close to here before price moving upwards. So I want to start seeing some. I want to start seeing some rejection, but still not this one being the top. I would like to see price start to compress. What I mean is kind of go something like this, or start to show a little bit more of weakness, maybe breaking some lows before potentially turn or a bigger turn to happen from this top. I'm not really sure about futures, but on the CFD data, we didn't manage to break any lows. Okay, so maybe price just literally filled this target in here, and from here is maybe ready to maybe create new all-time highs. Who knows? I would have become much more bearish if we actually manage at least to break some structure in the higher time frame that starts opening the door for price to go further down. It did, at least on the CFD, it didn't happen. Price actually hold quite nicely at the bottom, and since then has been just moving to the upside. We haven't had any proper break of a low. There's nothing. Price is just respecting previous structure. So I still need to see a little bit more of that bearish moves. How to win on the weekly chart? Is that a topic? Kind of, is that a question? How to interview him? Yeah. What is your take, there on the S&P? If you want to share, let me just bring your charts again.
Let me open it. 2 seconds. I haven't got it up. SPX. Add. It's going to be pretty similar to NASDAQ, isn't it? Yeah. Okay. Ooh.
Yeah, just to read the comment in here, exactly an example of what you mentioned from Edward. So he said that he actually won last week. He was one of the last week winners. He won a high stakes 5K account. Not sure I want to do an interview. I just want to concentrate on passing my account to the funding stage, thanks to the fibers. Exactly. So yeah, there are many people like this. Some people they may feel like they just want to share a little bit their story. They don't even have any socials whatsoever. They just want to share because sometimes as well as traders, we know how lonely this journey can be, and sometimes just to find someone to talk with, that can also be useful. And sometimes with these interviews, that's exactly what happens. Some other people which really just prefer to be on their own. Like don't come, don't make any noise next to me. I just want to be on my own.
Yeah, so for me with SPX, you can see it's gapped yourselves on a futures platform. But you again, that though hasn't been ran. But for me to even analyze this is again crazy. Potentially again, it's similar to Pedro. I'd like to see. We've now swept this high. Maybe we get a reversal from that area. If we turn bearish, from a bearish order flow perspective. But for me, obviously on a futures platform, it's obviously so gappy from market closes and things like that. But again, from this area, we've swept this high. We didn't quite sweep this low. So are we just rebalancing to sort of like I think Pedro said the same thing was, are we rebalancing to the 50% of this price range to then push lower to target lows further down? So this movement to the upside could just be a rebalance. We have swept this internal high for me. And then again, if we see a reversal from that area to shift order flow to turn bearish, inverse that fair value gap, then potentially we could see a sell-off to this low here. Obviously, we've got this internal low here as well from the 1 hour perspective. But for me, until we get the run through of that fair value gap or something like this to happen, where we sort of pull back to this fair value gap and then a confirmation to push higher to see that we're then going to take the high. So for me at the minute, it's either a run through this fair value gap to the downside, so we'll get a push through this, trade below that, then a retracement to then tell us we want to push lower, or we'll come back into this fair value gap, get lower time frame confirmations, changing the state of delivery, inverse fair value gap to the upside to then tell me then that we want to go and take the immediate high out that's just sat there. So two options for me at the minute. It's just stuck in between. Is it a rebalance to then push lower to take the low, as this low here hasn't been swept either? Still got this low sat here. Or are we going to obviously come back into that FEG and then push to the high, take the high first? So for me, I don't trade. I don't think I've ever pulled this chart up.
Yeah.
Ever.
I'm just scared about the difference of data that you can see in there. I don't know if that's because it's updated for today. Yeah. Because on the CFD, my price is already way above that.
Yeah.
Way higher. It's already, let's consider, because if you bring the Fibonacci, that's maybe what, 60%?
Yeah,
CFD is already at 80%.
You said, anyway. I was thinking when I marked.
Yeah, it's much higher. It's like 6,400, something like that. It's already retesting that green candle on the
this one here.
Down. Yeah, it's already retesting that. So there's a big difference in there.
So if you trade it from here because you've got an advantage.
Paul, I think that's the second person that told me that. Okay. I think it's saying that they kind of look like rude when you saw Roy, I believe. I think that's the striker now, the coach, ex-striker from United, the attacker. I think maybe you are the second person. I'm not sure if that's a compliment. If it's not a compliment, I'm not really sure, but I'll take it in a good way. Oliver is asking about euro-dollar. What are you seeing on euro-dollar right now?
Yeah, so euro-dollar has actually done what I wanted it to do. Obviously, we had that the SMT put in. We obviously didn't. We swept the low on EU, but didn't on GU. Here's the SMT. So we got the divergence obviously between the two pairs. EU swept the low, GU hasn't. Turtle soup as well from an hour perspective. We've had a sweep of the high here, sweep of the low here, which obviously puts in that turtle soup for me. So manipulation. I said if that hour candle comes back in, I'd like to go long and see if we can take this high out. From a 5-minute perspective, we have had a model put in. I am monitoring it. We've had a inverse fair value gap put in. So we've ran through this fair value gap here, which obviously creates that inverse. And we've also put that change in the state down here, the close above the last bullish candle in that run to the downside. So I am currently bullish at the minute. The 1 hour turtle soup's playing 5-minute buy model inverse fair value gap, changing the state of delivery. Now all I'll be waiting for, if we get it, is I would like to see a 1 minute turtle soup. So obviously we've manipulated to the upside. I'd like to see this low get ran. If this low gets ran, then I will potentially be looking for longs. But what I'd like to see from this area is I'd like to see this low get ran, and then exactly the same process I used on the 1 hour. I'd like to see an inverse fair value gap or a change in the state of delivery. So changing the state of delivery, and then obviously I'd get in aggressively as soon as we close above that change in the state of delivery. Or if you miss that entry because the candle closure is way above and it damages my risk to reward, I'll wait for a retracement if you get it back to that fair value gap. And then obviously first targets from a 1 minute perspective be here. And then obviously overall targets, you'll be looking to take that 1 hour turtle soup high out here. So I am monitoring it. Let's see what it does. Opens very soon as well. So I'm hoping potentially we can get a hold of it, and then we get a run of this low here, and then look for longs to the upside. But let's see what it does. But I've got everything from a 1 hour perspective. GU is still pushing to the upside as well. Again, I did say about that 1 hour high sat there, but also the 4 hour. You can see that the 4 hour high sat here. So the draw for me is this on GU is this high, and then obviously EU to go in conjunction with that with 1 hour turtle soup, SMT divergence, 5 minute change in the state, 5 minute inverse fair value gap, and now we're coming back potentially to take that low, which would put in the 1 minute turtle soup. So I'll see what happens from here, but I am monitoring it.
Yeah, that's basically, I think, what Oliver mentioned as well. I think he's waiting for a little bit more of a clear alignment. Yeah, that's nice. Maybe Daddy, this is for you. Maybe a question. Guide me how to scalp gold. Do you have a comment for this?
Yeah, I don't trade gold, so I can't help there. I'm not a massive. Obviously, people see my strategy as scalping from an EU and GU perspective, but everything's aligned, so all of my entries are fast and I'm out quickly. I don't like to purely scalp. My concept of scalping is just from like a 1 minute. I would never ever do that. So Raj, I'm sorry, mate. I can't help you with that one. Pedro might be able to.
Yeah, so I don't scalp, so that's I cannot really do anything. But I think the question goes a little deeper into it, right? So
yeah,
again, if you want to learn how to scalp gold, it looks like that. It sounds like that question is more, how can I make money really quickly on gold? I think that's more of the question that he's asking in here, and that's maybe the wrong approach, and that goes into alignment of what we talked about a few minutes ago about why everyone likes to trade gold and maybe they are not successful trading gold, because literally the name is on the word itself, gold, right? Gold, money, gold, like the value is there. It even sounds better. Sorry?
No, I was just going to say one thing on it is, I always say to my students and the guys I trade with is, if you're concentrating on the money, you're doing the wrong thing. You need to concentrate on the skill, and the money will come after that. So don't try to be a millionaire overnight. It won't happen, and you'll get disheartened. And just concentrate on the skill, and the money will come. Nail the skill first.
Yeah, exactly. So find a strategy that actually works. Like if you want to be a scalper, okay, work and find a strategy and find something that you want to. First of all, maybe are not even suitable to scalp. I don't even know. Like actually, we don't know. Scalping we really need fast thinking, fast action, and being super disciplined. Because if it goes wrong, you can destroy your account quite quickly as well. Because if the upside may look nice, the downside can look even more dangerous. So that can be an interesting one. Kang is mentioned that gold may not even look like good for scalping. It can be, like, if someone actually is really good at that and is fast thinking and actually manage to focus and be really disciplined with their actions. Yeah, they can maybe work with the volatility on gold. But it's not for everyone. TechTide, is the 5 hours competition for scalpers? To be honest, I'm not really sure. I think you can scalp in there. I think you can only trade one trade at a time. I'm not entirely sure, TechTide. But I presume that whoever makes that amount of performance, for sure they're not just trading one trade a day. I think they may be opening quite a few per day to be able to get to the performance that they are getting. What's the best pairs you think to trade scalping? Again, I'm not a scalping, maybe then I'm going to ask Derry, but something that I'll be paying definitely attention is spreads. Okay, you definitely want low spreads on whatever you are doing. And secondly, maybe nowadays there are a few assets that you don't pay commissions, because commissions as a scalper can destroy your profitability. Okay, because if you do open quite a few trades or quite a lot of trades on a daily basis, you need to take into consideration the commissions that you are paying every single time that you open and closing a trade. So low spreads, so you can have the best execution possible to be able to scalp, and if possible, find something that doesn't really pay commissions. And of course, you need some volatility in there, right? You cannot really spike something or scalp something that doesn't move. But at least take into consideration those 3 aspects. But Terry, which pairs do you think are good for scalp?
For scalping, do you know? I don't really know. You know, with volatility wise, EUGU and potentially gold as well. I do know a lot of people that trade gold scalping in and out sharpishly because of the volume there. But again, you've got to be quick with it, and the stress levels for that. Whew, not for me. I'd say EUGU and gold.
Yeah.
100%.
Steven said that he should try gold one day. It's quite tough for him.
I'll end up having a heart attack.
Yeah, just as Kang mentioned as well, he tried scalp gold for a while and make impulsive behavior very, very quick. Yeah, it can be you get found out really quickly how disciplined you are when you are doing that. Like it's not everyone can stomach that situation. Getting in and out of the trades constantly, like not really even paying attention to the P&L, whatever. Like you really need to be almost made in a certain way to be able to scalp that way. Most human beings they're not done for that.
Different breed if you do that.
Yes, you say that, but in competitions you are sort of forcing us to gamble in a way in 6 days. Rise. The competitions are the competitions. Of course, you need to understand that competitions doesn't relate to trading. What actually being a successful trader means. Okay, being a successful trader, it doesn't mean that you make a certain amount in a week. Okay, not even in a month, not even in a year. Okay, it's actually what you do over the year. So I think everyone understands that when you are giving these opportunities of competitions for everyone to try to participate and eventually get to rewards of the competition, that's a specific moment. Take it as it is. It's not, you're not going to be implementing exactly maybe the same approach or strategy on your own personal account or even maybe in your prop firms. It's a complete different behavior. There's no for example, I'm not suitable for competitions. Like if because I start rushing into trades, my personal style at this point is the market needs to convince me for me to take a trade. If I go into a competition, I cannot wait for price to kind of show me the hand and be patient. I start rushing into it, and then my trading goes nuts, goes all over the place. Yeah. And even my behavior, I feel anxious straight away. The way I approach the market, it's terrible. I hate it. But they are there. Many people like competitions. It's an opportunity to also to maybe to prove yourself, maybe to get accounts, whatever it may be, and people go for it. Yeah. Do you feel Do you feel the asset and their futures have some correlation in their respective volume? In any way, you feel futures volume can be used to trade the actual asset? You definitely can use the volume of futures. Yeah, that you can because that's real information.
Yeah.
That's why many traders use the VWAP indicator, right? Which is also based a little bit on the volume. Instead of just using a normal moving average, actually you like to use the VWAP, which includes the volume in there. Yeah, you can start paying attention to it. Use it maybe as an extra indicator or something that you want to look at. Yeah, you're welcome, Sky. Background cinema. Yeah, we're going to. By the way, background. I noticed your pair about oil. I think maybe we can look at it. But yes, do what you do best. To get volatile pairs. It can be harsh environment if you are trying to make a mid-cent. Yep, indeed. Yeah, you see, you have Don Online mentioning, or Do Online mentioning, I use the competition accounts to practice my strategy, not to win the competition. Yeah, Kim. That's Kim, always the right comments. Yeah, it's true.
It's good. Very good. If you win the competition, there's no stress either, or the pressure to obviously use the competition. There's no real stress to actually win that competition. You're on about the trading competitions here, right? Not the actual entries to win the account. Because if so, it's a good way to do it. Instead of using a demo account, do it on there.
Yeah, exactly. Yeah, you can definitely do that. Let me just jump into oil because Crown Cinema. What is mine again? Okay, it's here. Mention oil. Yes, oil finally broke some structure in here. which is good to see. So we managed to break this 65 mark. By the way, Background Cinema, I would like to know your bias, what you are looking for on oil. So this is the comment. There's been times since I've checked on oil. Any take on current price? Chronicles. Yes, I think you can continue to move a little bit more to the downside. Of course, now the volatility between Russia, Ukraine, and whoever is buying oil from Russia, for example, India, that Trump threatened India again with more tariffs if they continue to buy or to purchase oil from Russia, that can create some volatility, and you had that volatility. I think also there's going to be some. I don't really remember now what was the agreement within the OPEC members in the last couple of meetings that they had. I think they were about to increase production again. I don't know if that was about to start now in August or if that's more just for September, October. So that, of course, that can have a play here. But to be honest, I think oil can continue now to push to the downside. Okay, I think oil could either could hold this level and continue to push. I'm looking eventually for price to get maybe closer to this marking here, maybe close to 62. Again, maybe there's a little bit of a reaction to be expected in here, since we had this previous level support resistance as well, and we do have a little bit of this demand zone. So maybe in here we can have a little bit of a reaction. But personally, I would like to see oil getting a little bit closer to this level, and somewhere in there, that's where I'm going to be looking for longs. Even better in here. In here, I'm definitely going to be looking for longs around this 59 mark, below this low. But before that, of course, price can fluctuate. Maybe can even go somewhere in here. Even if you go all the way to this level as well, I think that can be an interesting zone to look for a short as well. Whenever price comes back into this, it's kind of more of a potential quasi-mode in the future that can play out. But it will depend where price will react from. So I'm still waiting a little bit on oil. I noticed that we did manage to break below this structure, and I'm going to be paying attention to see what next. But I'll still like to see more extremes in here. Again, oil is not a pair that I trade every day. Which is just something that I wait until price gets either really expensive or really cheap, and then I try to trade that. It's kind of a different approach. In there, you're 10 minutes away from the opening. So are you on that trade, Derry, on the euro?
Yes, I'm currently in it. Yeah. Yes, mate. Just messing around. I don't usually enter that often before open, but I had everything with this trade, so yeah, I am currently in this.
Okay. So whichever either you reach your first target, how do you manage your trade actively on this situation if price now starts going in your favor?
Yeah, so for me, I obviously take the immediate draw. Again, you mentioned scalping. Some people would say it is scalping because it's from a 1 minute perspective, but obviously I'm targeting higher time frame draws. But I would usually pull 50% or 80% at this high. My trading rules are if I'm 2% in profit, I'll pull 80%. If I'm below 2%, then I'll pull 50% at the immediate draw. And then obviously I'll let the rest run then to there is a 1 hour internal high there, which is obviously the overall draw from a 1 minute perspective. But the overall draw from an hour perspective is this high. But when you look at obviously the 1 minute, you can see the immediate draw is this high here. So I'll be taking take profit at that high if we get there.
Okay.
But yeah.
All right. Do you look at Bitcoin now? Do you have any analysis, any bias?
No.
Because we have Rammer in here asking for Bitcoin.
Let me have a look.
Rammer, do you want to share if you are looking for longs, shorts? What time frame are you looking at? And don't forget to press the like button, guys. Just continue to press that like button. It doesn't really cost anything, but it does a lot for us. Okay, it keeps telling the algorithm that you like what you're seeing, that you like our analysis, that you like the content that you are creating. So, that's a nice push up. That's a nice push up.
Yeah, Bitcoin. I've never tried in the beginning trading it, but for me at the minute, again, just looking at draws and liquidity, where we're at is we are bullish. We've had that change in the state of delivery here, so we've swept this low here from a 4 hour perspective, swept the low, and then from there, then instantly we had that change in the state of delivery, which gives me my buy model. We've come back then to that fair value gap and then push to the upside, and the same again. Then it's just continuing to follow bullish order flow for a minute from the 4-hour perspective. So it's telling me at the minute from a 4-hour perspective, this is the higher time frame draw, the 4-hour draw. I would like to see a rebalance though of this price leg to then continue higher, so back into the 50%, and then potentially continue higher if it does come back. Look for reactions from there again to push to the upside. But again, I don't trade Bitcoin, so this is just going off what I'm seeing. This is quite messy here, price action. But again, it is bullish. We did sort of try sell off here, but that was obviously to rebalance back into that fair value gap from a 4-hour perspective. And then we put in that buy model then to the upside, back into that fair value gap. And we just, at the minute, you can see it, we're just respecting bullish order flow back into this fair value gap, came back into this fair value gap here. We're just respecting at the minute. So would like to see a retracement potentially back into 50% of this area, which would also be that fair value gap, and then a push potentially to the upside. Or we could get a run through of that fair value gap, which would inverse it, and then we could be looking short from there. Again, at the minute, it's just, again, overextended slightly. But the draw for 4-hour for me is this high here. But bullish for me at the minute on Bitcoin. Again, I wouldn't be looking at anything on that. Never have. And I don't think I'll start doing it now either.
Yeah, 1 second, because Ramar is mentioning that he's actually interested on the 15 minutes time frame. If is there any reversal or continuation? It would be better, Ramar, if you had at least one of them, not both.
So from a 15-minute perspective, if you are looking for it, we have had what I would class as a change in the state of delivery, which puts in your sell model. Is there a fair value gap inversed? There's a small one here that's been inversed as well. Tiny fair value gap there that's been inversed. So all confirmation from a 15-minute perspective are saying we're bearish, but when I look to the left, there's no immediate highs there that it's swept. Yes, we swept this high, but that's now irrelevant because we displaced so far through that. But we have put in a 50-minute sell model, or what I would look for, inverse fair value gap, changing the state of delivery. But this could be a sell model put in just to rebalance to potentially the 50% of that 4-hour price leg, or that 1-hour price leg back into this fair value gap to push higher. So 15-minute perspective from what it's showing is we've got that one change in the state to the downside with obviously that inverse. So it could potentially sell off from there. But again, for me, I would never go into the 15-minute looking for shorts if the 4-hour and 1-hour is bullish. But again, different strategies. If that's your strategy and you've got your plan and your trading plan, rules, stick to it.
Yeah, definitely. Just follow Fabian's advice. It says just buy Bitcoin and hold. Like that's it. That's the strategy. Just buy and hold and keep it. Background cinema. Are you talking? Is this comment towards Bitcoin? I read some few economic news. I believe the price is rushing up. High highs, high lows, forming minor levels. Have not been tested. I'm not. If maybe this is towards Bitcoin. I'm not. Yeah, maybe. Yeah, there was a big expansion. Even on the Ethereum, I think price is coming back up again, close to the top. So that's going to be an interesting one to follow. Gold still is on the same place. Dollar-yen, what is dollar-yen doing? Yeah, dollar-yen is still within the same range as well. There's nothing in there.
Yeah, nothing. Price action
I like
is a bit in the middle of everything at the minute, isn't it?
Yeah, I like the fact that VIX is getting closer to a demand zone, which means that we may getting closer as well to a move on the indices. Because I like to look at the VIX. Just bring my thing in here. The VIX actually is quite reliable as well. When to expect those big sells on US indices. At least it has been quite reliable in this past few months. So anytime we kind of approaching a really important kind of structure like this, we had these pushes up. Then even with some gaps in here, then price kind of goes there again. And anytime basically you see VIX doing this, basically you had those big selling pressures on the NASDAQ and on the S&P. That's basically exactly the same. This was on Thursday or something like that when they had this big push that we were here last week. So we kind of went all the way up, That's what when you had this big move to downside on the indices, and now we are kind of retracing back into this level, which may be getting closer into a potential push up again, maybe just even getting close to the stop or something like that, which may be to another selling pressure on the indices. So that's something I'll be tracking, which may happen today, may happen tomorrow. We will see. They're getting close to that zone in there. Yeah, the variant for me is just in the stuck within this range. It hasn't really managed to break anything to the upside. The same way that it's still holding this low, but the overall structure that matters to me is this one. So for me to start looking for longs, I would like at least maybe this top being taken, or now maybe this one, which never happened. Price continues to hold it. That's where I mean again, this week, maybe dollar yen was not the best pair to trade in terms of the yen pairs. Maybe there was better opportunities with the euro yen, for example, that we actually had a proper move to the upside, and now even retesting this level again. So that's going to be an interesting one. I've been curious or interested in potentially selling euro yen from this from the retest of this top. However, we didn't manage to respect this double bottom, and I don't really like to see that. I don't like to see a double bottom when price is approaching like to sell from a double top kind of. I would prefer to have seen this low being below that, and then yes, look for that opportunity. Yeah, so euro yen also is something that I'll be paying attention. I'll be waiting until eventually price gets closer to this level. Not going to be involved before that. Dollar CAD is one that has been interesting as well. This dollar CAD did manage now to break a little bit below the structure. I'm not sure if it's going to just fall off like this, or if it's going to manipulate a little bit more in here up and down before maybe moving. Yeah, I'm not really sure about that one. It looks just too obvious that maybe price can just drop, but it may not do it, depending on what the dollar is going to do, to be honest. As well. So yeah, that was the one that we talked about last week. I think we wanted to see this top being taken, this daily level. I think price was somewhere around here. We mentioned that maybe that was too early to look for the short. We were looking for price to take that daily high. He took that daily high, and then just with the NFP, he's just crushed all the way through. Yeah. What else? What else do we have? Any other pairs, guys? Yep, this was, I think, Thiago's trade. Yep, price just went up. And now DAX is back at the highs. Okay, so I'm going to pay attention to that one.
Let's see.
What is pound doing? Is pound continuing to go higher a little bit?
It's stalled. It's hasn't done much for open.
Oh yeah, it's opening right now, right? Yeah, it's just the opening. Yeah, I want to pay attention to that. What I think I would like to see is a little bit more of a move to the upside. So maybe what I would like to see, for example, on US on NASDAQ, I wouldn't mind to see maybe initial move down and then kind of rejection, and then maybe after taking this top, maybe to find some bearishness. So I think I would like to see that. Initial attempt to go lower. Respect something, go higher, take the top, go a little bit higher to show a bit more momentum, and then start seeing some selling pressure, and maybe go a little bit above this top into that level. That would be my ideal level on the NAS. And price could actually drop from here first and then go higher afterwards. S&P is actually a little bit closer to the top, to be honest. Yeah, Dow, I don't really have anything on the Dow, to be honest, in here. Chairman, Jacobo, what are you looking at on the DAX? On the DAX, yeah, I was bullish. My problem with the DAX is that price respected the bottom. Okay, so my problem with the DAX is that this low respected quite nicely this structure in here. If this low by any chance had broken this level, I think I'll be more confident in looking for short somewhere in here. But price respected quite nice. We may go all the way and challenge the tops again, or even take new all-time highs. But what I'm going to be paying attention is to see if eventually we do fake out this level and maybe get into something in here. Yes, that will be maybe what I'll be looking. I think we maybe could find a little bit of a selling pressure here, and then potentially just fake out, have a little bit of a reaction, and maybe just react from here and just continue to go higher, or actually have a bigger one, maybe get closer to this level again.
I've never used a Bollinger Band before. If you can show us how to properly apply this. I've never used an indicator, to be fair. The only indicator I use is Fibonacci, just for my retracements. Other than that, I don't use indicators. I don't know about you, Pedro.
Yeah, Bollinger Band is not exactly. I've worked with several traders that they use it, and there's so many ways to trade it. Either kind of look at the extreme and kind of try to reverse it, or kind of wait for the mid range, or wait for the extreme and then wait for price to kind of start coming back into the mid level, and then trade it. I think LJ, he has Bollinger Bands on his chart, if not mistaken. So maybe Rammer, anytime LJ is around, which is basically around every day of the live streams at around 11, maybe 11, 12, maybe something like that, or 12 to 1. Ask LJ, because I think he uses it. Yeah, I don't really use Bollinger Bands.
Do you use any indicators at all, Pedro, or are you just purely price action, same as me?
Yeah, just price action at this point. I do like RSI. If there was an indicator that I was about to use, maybe it would be RSI on the 4-hour time frame, or even 15 minutes. But it will be more of looking for divergences.
RSI divergence.
Yeah. It wouldn't be to look for overbought or oversold. I don't really care about that. It will be that's why I mentioned the 4-hour time frame. The 4-hour time frame, you can see quite clearly the divergence, kind of at least. The price still going like another leg up, and the RSI already making kind of two lower lows, and you can literally see that there starts to be something in there.
Yeah, I know a lot of people have success with that, don't they? The RSI divergence. It's a similar thing to what I do with euro and pound off each other with the highs and the lows. But I know a lot of people have a lot of success with it. That's interesting.
Yeah. Now I do pay attention to. I don't really use also moving averages. It's not something that I use. And then there are a few. I even had a conversation yesterday about kind of understand your opponent.
Yeah,
I think that was the topic of the live stream yesterday on the Portuguese channel, which is basically, for example, as a counter trend trader like I am. It will be basically meaning that for me to try to understand how a trend continuation trader thinks, or what kind of tools do they use to validate the trend continuation. For example, price respecting lows. It could be price continue to create higher highs and higher lows. That could be something. Respecting a trend line. That's something that people look at. Maybe keep respecting a moving average that they may have. That maybe still, as long as the moving average is holding, people are interested in buying. Like, so basically try to understand the reason why people are still interested in buying a specific, in buying that pair. So I'm not really forcing into selling it.
Yeah.
Only in the moment where maybe they start kind of feeling a little bit of pain, those trend continuation traders, they start feeling a little bit of pain. That's maybe the moment where I want to maybe start looking into the selling. And sometimes it can work for both ways. Like if you are a trend continuation trader, then try to understand what's the reason maybe why a counter trend trader is trying to go against you. And if it makes sense or not for them to already starting doing that. And if it makes sense, then maybe it's not the right time for you to continue to look for trend continuation setups. Like maybe be neutral until extra information or price tells you otherwise. But I think there's a lot of edge, evolving your improving your edge with that thought process as well. Like don't just focus on yourself, on maybe what you are doing, but try to also put yourself on the shoes of the person that you're trading against it.
We do a very similar thing is where, again, if there's something that someone sees in the market and they go, that's so obvious. And say, stay away from that, because if you can see it, what do you think everyone else can see is the same thing? So stay away from that. You're just going to get stopped from it. And it is trying to put yourself in the shoes of your opposition, essentially. So you're trying to beat the opposition. And that's what, like you said, the edge in the market is. If someone's doing this and you know they're doing it, try and do the opposite. And that's hard to comprehend when you're thinking of it. But putting yourself in the shoes of your opposite trader is exactly the way to do it. And it's a good point. And it's something I mention all the time. And when you think like that as well, I find it makes everything more clear on why you're doing it.
It does. It definitely does. Because for me, actually, that was a big... so that was a separation between just trying to trade structures, kind of supply demand, or support resist, whatever. It moved from just trying to trade that towards actually understanding what is the mindset of the traders that are trying to trade at. Because when you're mentioning that as well, what we want to understand is the pain levels, because any trader, anyone like us that are doing this, there are always two emotions that play one against the other, right? It's either greed or fear. Those are the two emotions that you're always playing. You are greed, or kind of you're happy in the moment that maybe price goes in your favor and you are in a trade. As soon as there's maybe some movement against you or you're in the drawdown, you get into fear mode. Okay, or the FOMO situation, trying to rush into the trade because you are afraid of missing the move. So if you start understanding in which levels specific traders feel those pain levels, like they get happy, then they get upset pretty quickly. For example, again, breakout setups, as soon as they see, or breakout traders, when they see a top being broken, they are happy because they think, oh, okay, either this is an opportunity to trade, or there you go, and now I'm in favor of the trend. But as soon as price kind of takes the top but now reverses immediately, they go from happy to fear, right? It's not getting comfortable, and maybe they start getting into drawdown. So it's kind of try to understand like the pain, the emotions, the pain level or the greedy level that each trader is involved in any specific moment. And when you do that, you let everyone suffer, go through all those roller coaster of emotions, and then you enter. Like it's a turtle soap. It's breaking the top, waiting for the breakout low. That creates a lot of confusion for many traders. It does, I know that nowadays with ICT, it looks like everyone trades this way. So it wouldn't make sense for anyone to still be manipulated in that sense. Believe me, guys, there are millions of traders, especially in terms of volume, that they just still trade the same basic ways of breakout setups, trying to sell double tops, buying double bottoms. There are many hundreds of thousands of traders that they still trade just the most traditional way, and even institutionals.
And you're right there. Like a lot of people, I always say institutions trade my strategy, and everyone says the same thing. But I think they obviously trade a mixture of things. And there's guys that obviously work with institutions and hedge funds and things that trade their own strategy. And it's something I always say. Like for me, I've always got to know the why of trading. Like, why are we doing this? Why are you doing this? When I first started, and although I couldn't get trend lines and things to work when I first started because I wanted to know the why. For me, it was draw a line on the screen. When you break it down simply, draw a line on the screen. When it touches that, it touches the support. Buy from there. And it was why. Why are you doing that? Oh, because it's a trend line. So I couldn't compute that. I was like, it doesn't work for me. But I know loads of people that trade support and resistance and trend lines, and they trade it great. And it's all because set to that, and they've made it work. So I think anyone watching or constantly, like they said, scalping earlier, again, you can get scalping to work, but it's for certain personalities and certain behaviors and characteristics in different people, and different strategies don't suit some people.
There's a great question here with
I just saw
background cinema. Do you want to go first, Larry? So basically the question is, real question here, how is the trading journey as a job occupation compared to doing a 9 to 5? What benefits and struggles does it come with?
Do you know what? It's Pedro mentioned it earlier. It's being able to understand that even though you're a profitable trader, some months you're not going to have profits come out of the markets. You got to look at it either quarterly or yearly, is the way I always say. And it's understanding then that where you'd have a consistent income through a job that you're salaried on every month. Some months you may have a break-even month. Some months you may end up 1%, 2%, 3% down. And then the next month you do 10%, 15%. So it's understanding and trying to be able to compute those emotions and actually overcome that to understand that not every month you're going to get profits. I think usually 3-4 months of the year, sometimes it'll be break even or not come out of the markets with profits. And sometimes it can be more, but over the year you've got to be profitable. But that is one of the struggles, is where you'd usually be salaried, you've got to be expecting to not take pay some months, but then other months have a larger pay, which obviously evens itself out. And I think another thing is probably the emotions. When you are in a job, someone rings you in the morning, if you're an engineer like I was, for example, you go into this place, and someone's giving you that structure for the day. And you have to go, otherwise you don't get paid. Whereas when you're a trader, you have to put that structure into place for yourself, and you're accountable for your own actions, essentially. So I think that's something. I've always been a structured guy through my whole life, obviously when I was in a job and then when I continued that outside. But I think bringing a lot of people on, a lot of my students struggle with actually having that structure and being accountable for themselves, whereas usually you'd have an employer telling you to do that, and if you didn't do that, you wouldn't get paid. So yeah, it's just having that structure and sticking to it, because ultimately, I personally think structure in trading is the most important thing. Like, what I mean by that is your trading plan, the time you get up in the morning, the time you trade, because ultimately, if you've got back tested data for the sessions that you trade, say London and New York session, then you're coming in, you're trading pre-London, pre-New York on certain days. Obviously, market conditions and behavior is going to be different then. So I think having the structure and probably understanding that you're going to have bad months as well, it is the biggest, and the stress that comes with it as well. When you first start, you sort of have the high emotions, then the low, like Pedro was just saying. So it's one of those things that you have to learn to plateau those emotions in the middle, and just win is a win and a loss is a loss, and we just move on to the next one. But yeah, there are struggles with it, but good struggles.
Yeah, that's true. It's far from being easy. I think what you mentioned is the main point, especially for someone that goes into live trading or full-time trading, is the lack of structure. I think it's a big shock. Yeah. I think everyone got a little bit of that experience with COVID. Okay, when everyone had to work from home, all of a sudden they would wake up. I don't know. They usually maybe they woke up at 7 a.m. Now, because you are home, you don't have your boss next to you. Maybe you don't need to click in or clock in. And now you're waking up at 10 a.m. or whatever. Like your structure goes nuts. Yeah. And it actually becomes worse, because instead of maybe you working from 9 to 5, now you're maybe working from 10 to 8. Like you just like your day just becomes just work. So until you kind of come up with some structure for yourself. The money wise, as you mentioned, like the lack of predictability of when are going to get paid, that can be a big problem as well. So I think having structure and actually having a plan before actually going to full time, it's really important to not to be able to sustain those moments, because at least you are have some security that at least on one side you don't really need to just make a profit this month to pay your bills. That's something that many traders may jump too early into trying to become full time, and then they struggle, or they even a 3 months buffer of
the wages.
The wages. Yeah. But even that is a trouble, because before that, you were used to see at least money coming in and you were comfortable. All of a sudden, the money goes really fast.
Yeah,
like the money just goes really fast. Like if you don't have anything coming in, the money goes really fast for your rent, for your bills, for whatever you are doing. Yeah. The money can and all of a sudden you just seeing like the money go down, go like evaporating, and that can feel scary, and then can bring extra pressure into your own trading. And then maybe in another topic, if you don't have a good kind of good system in terms of people close to you, okay, if you don't have maybe a group like close friends, or maybe a partner or something like that, if you are actually alone on this journey, okay, if you don't really have anyone to speak with, that can be a big problem. Okay, the isolation can really be a big problem, because at least at work, you minimum communicate with someone. Okay, at least you'll be saying hi, maybe you'll interact with some people. Maybe they were not your best friends, but at least there was some kind of interaction. When you are alone as a trader, that can take a big hit on your social kind of lifestyle, and for a few reasons. Okay, one of them is maybe you are still not getting the results that you want, which means that you are actually avoiding to go out with people. Okay, just because you may imagine that you had a terrible week. Most likely the last thing you want is actually to go out and celebrate or enjoy outside. So you may actually kind of isolate, you even isolate more yourself. So it's really important to be able to still separate whatever you are doing in your performance in your trading with yourself. Okay, you as an identity, as a person, you are not your performance. Okay, that's really important. I struggle with this for a long time. Many traders most likely are still struggling with this, and don't do it. Okay, you are much more than whatever your trading is, and your performance shows. So regardless if you had a good week or a negative week, if you have the opportunity, go spend some time with your friends, with your partner, with whatever it may be, because that can take a big hit. And I'm not saying this is going to just happen 1 week. This can start in a cycle when can pass a month, maybe 2 months, and all of a sudden you feel like you haven't seen anyone for quite a while, and maybe you haven't spoken with anyone for quite a while, and that can be a big problem as well. Because again, maybe of pride or of ego, you just want to maybe to show that you are doing well, because then people are going to ask you, hey, how is trading? Are you making it already? Like, how much money did you make this month or whatever? And you get shy, right? Nothing. I actually lost money. I didn't do anything. Yeah, that's a big problem there. Of course, benefits the freedom. Like, you can go anywhere, you can travel, you can work from everywhere. So that's definitely a big reason as well. That we aim for as a trader. But yeah, those are just a few points in there. Maybe, do you want to just cover this one? I'll bring your chart in here. 1 second. Let me just bring your...
I'll go to the 1 hour. Just get rid of some of these. The question was, how to map out relevant liquidity sweeps and pools. So for me, when I first come onto the chart, the first thing I'll do is the hour. I'll look at my hourly draws. You can see here from an overall sort of perspective, my external draws will be this high here. This is the external high, and then obviously the low sat down here. Horizontal ray sat down here. So that's my immediate, obviously not my immediate, my external draws. And then for me, then it's internal draws within that as well. So any high or low is what is I class as liquidity. So if you think of it, again, Pedro was on about there, the why of what we do and understanding what people are doing. So if I just draw out on here quickly, if you've got, if we're doing this, for example, we're bullish, we're creating higher highs and higher lows to the upside. Then if you think of support and resistance traders or breakout traders, or again, Pedro won't like this one, but supply and demand traders, thinking of the opposition here. So what they'll do is, as soon as we come to this area, they'll be looking to short from this area, right? So if they're looking to short from this area here, they'll obviously be shorting, say it's a supply or demand area, looking to short back down then to that low. Sorry, wait. We're in bullish here. We're looking to buy, from this area, from a supply or demand area, and then obviously to the upside then to take that high out to the most recent high to follow, obviously, order flow. So for me here, what I'm looking at is with the markets to sweep any high or low. So if we are here, and this is what happens, what I like to see is obviously below every high and low is what I call liquidity. So this low here, there's liquidity below, because people have got their stop loss below where they're buying from, obviously, discount areas to take that high out. So if we then stop below here, we come below, we stop that out, then you'd say to me, well, why are we going to push to the upside? Well, I'd like to see a push to the upside, because not only have we now stopped at the buyers in the market, we're now going to stop at the sellers. That would be break and retest traders, right? So break and retest traders, what they would do is, okay, now we've broke that low. This is now become a support, become resistance area. So here's the retest of that, and they'd be looking to short from that area. So my positioning then, when I'm looking at liquidity pools, is okay, so we've just stopped at the buyers from sort of a supply and demand strategy or a continuation strategy. Now we've got the break and retest traders that are using this support and resistance to obviously sell from. And then what does it do? It pushes to the upside. So every high and low, I say, has got context behind it, because there's liquidity above or below. And obviously, Pedro mentioned then is a great point, is trying to think of the opposite, the opposition. So for me, you've got the external draws marked, and then I'll just mark all my internal draws. For example, you've got this high here. You can see it ran straight through. And you've got this high. Every high on the way there is what I'd call low resistance, internal liquidity, all the way up. But of course, being aware that we can reverse from those areas. And I'll zoom in on it now. And then the same here. So all those areas are pools of liquidity. This high here. And again, you can see as we've swept that high, we have then pushed to the downside. Again, it is trying to put a turtle soup in to push the upside, but we've pushed to the downside for the time being. So that's what I look at as every high and low. Obviously, I have my external high and low, so you could see instantly. Like in this example, this is the major draws on liquidity, and then everything else between it is our low resistance liquidity. And if I just delete this, then to the downside, you've got your high resistance or overall draw here at this low, and then in between that then as well is obviously a low resistance liquidity. So this low here, the low sat just below that, and then again this low down here, and then this low down here is what I'd call my sell side liquidity. And all I see this as the whole time is, if you think of it, it's just essentially pots of money, in simple terms, sat there, or liquidity as we like to call it, to the downside that needs to be collected. So that's essentially what I see there, is just pound signs go off in my head, and then I'm looking for reversals from those areas after we've stopped out all traders in the market, or my concept is my thinking behind it. Stop them out, come to sort of, if we're looking in simple terms again, this area here, we come to the low, we take out the people that be buying from sort of like a discounted area, we take them out, so that's their stop loss gone. Then the break and retest traders be looking for that support turned into resistance to take a short from here, but I'd like to see it push higher then. So that's the thought process behind what I do and why the liquidity pools are there, and why I think and why I trade that liquidity is below every and above every high, below every low, above every high. So I'm aware of and conscious of every high and low in the market. Hope that answers your question.
Yeah, I think it's maybe quite a bit similar. I like also to look for those highs, especially if they are kind of 4 hours daily, which is always what people pay attention to.
Yeah.
It's kind of what you mentioned. When something is so obvious, be careful, and it's exactly that. Like when people look at that daily high or daily low, usually they maybe look at those levels as, if it is a high, maybe a level of resistance, maybe try to look for shorts in there, and it's kind of waiting for that, for that to be taken. And then it depends on where it happens, in there. I think Sam Fitness was asking about the euro trade.
Yeah, I got stopped on that one, mate, just before pre-market. But the actual, again, it is trying to play from that area. Now we have just it's sometimes obviously traded from the 1 minute you have timing issues. That is, you can get the buyer stripe, you'll have a timing issue. But we have inversed this fair value gap now, but it's struggling to get out of it. It has come back into it, potentially can react from here, but again, it's just chopping in here at the minute. But bias-wise, at the minute, it's still showing. We come back, we had that change in the state of delivery, inversed this fair value gap here. We've come back and tested it, and it is trying to, but at the minute, it's obviously we've had that sweep of the low, and then the continuation to the upside. We've come back into that FEG, but it's just struggling to get out of it at the minute. So whether they'll hold or not, I'm not sure. But I got stopped in that first trade, yeah. But at the minute, I'm just waiting for confirmation to see if we can get something out of it. But volume's dead at the minute. Like this whole area here, I'd like to see a breakout of it, to be honest with you. Oh, here we go, as we say it. So yeah, but higher time frame wise, bias is there. Everything was there. And again, that's another thing. You can have all the bias in the world, all your confirmations met, but you're still going to take losses. And that's, again, like we were saying earlier, part of it. It's just about moving on from that. Any other questions there?
Yeah, market is quite a little bit. I'm looking at the pound as well, and the pound is also stuck in that level. It doesn't go absolutely anywhere. It just doesn't go anywhere whatsoever at this point.
It's just stopped dead.
Yeah, the market's a bit quiet. I'm looking also the US indices. So there's a little bit of a divergence in here. Actually, NASDAQ went up, indices moving a little bit more to the upside. S&P is already moving a little bit lower, actually. So there's a little bit of a S&P top perhaps between those two. So Fabian asks here a really good question as well. Like, so how long did it take before you became profitable enough to quit your corporate job?
3 years, 2.5, 3 years for me. Before, and they were painful 2.5, 3 years as well. What about you, Pedro?
Mine was a bit different actually, because initially I was just kind of living in my parents' house when I started a little bit into this. So I was doing an internship. Like I studied, I graduated, I was doing an internship, and then kind of turn into trading. So that almost learning phase, testing stuff and so on, because I didn't have any big expenses in there. So one of the tricks was always kind of to definitely live below my means, and that's maybe a lesson as well in there. If anyone is looking for any big transitions, maybe one of the best ways is kind of live below your means initially until you actually then can make that change, because otherwise it's going to just make it really hard. And it was actually when I moved into the UK that I kind of increased that drastically my expenses. So I was actually doing some small part-times at the time, focus on trading, but maybe some part-times in the evening until eventually it stopped. So it took maybe 2 or 3 years in that maybe 2 years in that moment of since I moved into, actually maybe 2-3 years since I came to the UK to then kind of separate. But then what happens as well is that I then start to find something more into trading, like some other small, like similar to what we're doing right now in here. Some jobs related to, or that were allocated into trading, that were in the industry, and that also helps, because yes, you may consider this is kind of and you are getting paid to be here, but it's trading related. Like it's a completely different thing if you're doing something completely outside of trading, or if you're doing trading at the same time. So yeah, but again, it depends also on how do you want to live your life. What kind of expenses do you have? What kind of responsibilities you have or not, to be able to do that transition. Yeah, we are getting close, guys. So basically, we are at 1 minute away. So, guys, another fantastic week. Thank you very much for everyone that is always here. And thank guys, I'll park.
I like that one. That's a good one.
I'll park my Lambo dreams for now. Yeah, just wait a couple of years, okay, and then we'll be able to do it. Yeah, background saying every trader has a beautiful story to tell. Always, it's not how we start; it's how we finish. Like yeah, that. And it's still on the process. We are still on the process. It's far from being finished.
Yeah.
Yeah. So again, thank you very much, guys. We are always here. We are doing this for you as well. So we need you. We need your comments. We need your presence. We need your love in here for us as well. So that matters. I like to hear your thoughts. I like to hear what types of trades you are looking at, what setups you are looking at, and I like to then share my opinion in whatever ways it's possible. There is the same thing. We are going to continue to do this. Press like button. Continue to subscribe to our channel. Next week is going to be another great week for us to be here all together and hopefully make some profits in the market. Derry, any words that you want to say just before we move on?
Nothing at all. I appreciate the questions and things. It's good jumping on and just speaking to different people around the world and things as well. It's just insightful. And also, I've been stuck in my ways with trading for obviously however long, which works for me, but it's good to see other people's opinions and stuff as well. I really enjoy doing it. It's really good to jump on with everyone, yourself, Pedro, and everyone just asking the questions as well. So we appreciate it. Massively appreciate it.
Yeah, that's true. That's one of the main things that I like to do. This is actually to have conversations with other traders and to hear that thought process, because that's the most fascinating to me, is actually hear how they process information, the decisions that they make, and everything. For anyone that is Portuguese or speaks Portuguese, we are still going to do the live stream later on at 5 p.m, basically in 2 hours. Today, we are going to do giveaways. So if you want to pop up, feel free to join. So yeah, aside from that, thank you very much, guys. We will see you next Monday. Have a great weekend, guys. Bye-bye.
Thanks. Bye.